more on the existing on the overall ecosystem. You are aware that 30,800 million bills are generated of almost 6,200 odd billion rupees in just top 20 cities alone. So the coverage area that we have today, specifically in the municipalities, be it on the recurring land, the aqua tax, the property taxes, and we need to cover the municipalities more. We need to go more. So the coverage area needs to be improved, right? Second thing is definitely we need to improve further on the Bharat Bill Pays on the uniform customer experience, right? Today, BBPS should work on uniformity of the customer experience. Today, like for example, today customers are not able to make bill payments to BBPS, but at the same time they go through the non-BBPS channel because sometimes because either the billers and it is not updated or billers website does not get that updated billers bill, but if done through the biller's website, somehow it's get updated in real time. So providing that uniform experience to customers will make it stick to the BBPS platform for doing their future payments. And last and not that is a small thing like a faster refunds. Like in BBPS, refunds are still happening manually through the Canvas platform, where the BOU initiates and the refund on biller's request. So the refund request is then assigned it to a COU and then to the respective agent institution. This process is consuming, and it should be replaced by the API model, which can reduce the overall TAT. Right, the API should also be accessible to the biller for fetching all this refund, reference ID, and other things. But these are some of the small things to this thing again, instead of carpet bombing and getting and acquiring more and more categories, we need to be more and more specific categories with a larger population to end. RBI has opened it up for every kind of recurring billing, but we need to keep the focus on the Bharat bill pay and the bill payments, specifically in municipalities and many others. So, Nupur, that's my little bit thoughts.
No, thanks, Vishwas. And you made two very, very important points. One around the customer experience, be it on the payment side or the refund side, and also around being very sharply focused on certain categories and certain set of billers. Thanks for that input, Vishwas. Pranay, what are your thoughts around the top three priorities that should be taken forward?
So I will add to what Vishwas said, and maybe there could be some overlap. But yeah, three, four priorities that we would want to work upon as a BBPS cohort. So one is we have onboarded billers and we've onboarded biller segments, right? So we need to realize the complete potential in those segments. Like, for example, we have 70, 80 billers in the electricity category, for example. We need to realize the complete potential over there. Now, a lot of bilaterals are still continuing, which is, I mean, the regulator has mandated bilaterals should stop. Likewise, NPCI has mandated. So, and starting tomorrow, all the auto pay and standing instructions are, done away with. So it's a great opportunity right now that we have to stop the bilaterals immediately, which would bring in more value and volume of transactions to the BBPS ecosystem. So that's point number one. Point number two, according to me, I think viable economics, if we have to grow 2x, 3x, 5x from here, and all the constituents in the BBPS, whether we have the BOUs, COUs, the agent institutions, everybody needs to make some amount of money, right? Because we are enterprises for profit. So in the past, initially during the mad rush to onboard billers, we've had billers being onboarded with subvention schemes and negative margins. So I think we've reached a level of maturity. So we need to ensure that the economics are viable for everybody. Third point, according to me, would be looking at newer categories which can bring in more volume and value into the system, and maybe look at the credit card bill payment category or the insurance category, mutual funds. There are many taxes, tax payments. So there are tons of categories and opportunities in front of us. So I guess as a cohort, again, we need to identify those categories and go after billers in those categories. Technology is very important. If you have to do all of this, we really require a very, very stable, robust, and a highly scalable architecture, maybe a sort of a private cloud or a hybrid cloud architecture, so that the customer experience is consistent and is not impacted. And maybe I'll have my friend Gaurav talk about customer experience more. And lastly, in terms of creating awareness, see, a lot of our agent institutions and COUs have millions and millions of customers on their platforms. Now, how many of those are actually transacting on BBPS? So, whether we send out notifications, put banners on their platforms, maybe we work with billers and offer certain incentive programs, to get the customer onboarded the first time, onto BBPS. So a whole host of digital marketing initiatives and initiatives around creating awareness. We have done some ATL activities, over the years, but we also need to look at all the BTL activities and digital marketing. So these are some of my thoughts, to grow the system and take the leap into BBPS 2.0.
Thanks, Pranay. In fact, thanks for such a comprehensive set of priorities. Couldn't agree with it more. Now, the ecosystem actors who play a very important role on the demand side continue to be the COUs like Amazon Pay, who we have on panel as representation, the agent institutes and agents who which VAS continues to bring more of. However, end of the day, the customer is the king. Uh, I wanted to, discuss with the panel what should be the brand-led strategy to get mind share of the customers. And linked to this question is also that the customers still preferred to go to the biller's own cash point to pay the bills. What should be the best way of acquiring and converting those customers for less cash economy? And this question I would want Gaurav to take first, because Amazon has done such a wonderful job in converting cash to digital transactions. So Gaurav, I would like to begin with you to ask what should be our strategy to get more customer visibility, mind share, and how to convert the cash transactions of today.
Sure, Nupur. So, like I think, discussed that, BBPS has become really big. We have thousands and thousands of billers, and we all know how difficult that task was. But the customer, unfortunately, doesn't care about that number. What they care about is the two or three billers that they interact with and what their experience with those billers was. And even just one bad experience in one of those bill payment transactions pushes them back to the status quo or the cash. So, like you rightly said, what we are doing as a group is competing against cash and the local offline, and we're trying to convince the customers and bring them online. And I think that, in my view, at least the top two or three things that are holding the customer back. I think the first one is just complete selection. If even for the large categories, and I'm not saying we should have all the categories, but for the categories that we have, and an example I'll give is a customer doesn't expect to come on Amazon to buy a car. But if he comes on Amazon to buy a phone and he doesn't find that phone, then he gets upset. So I think with that, I would say, hey, for the 5-10 categories that we are looking, or the 20 categories that we know we are the leaders in, we should have full selection. Right? We shouldn't have anything missing in that. That's one. I think the second one is reliability. Even now, a lot of the billers are not, especially the smaller billers, are not fully reliable. They have 5 to 6% downtime in the month, and that again puts the customer off, because you're competing with the offline system where he knows what time the store is open. I can go here and I can pay here. But with digital, the expectations just shoot up. So we need a near 100% reliability, 100% success rates. And I think the last one is the most important one, which is trust. With what we realize is the most important barrier is trust. If the customer doesn't trust that I made this payment and it will go through 100%, they will always hesitate. And even one instance of failure will make them to put 10 customers away from the digital system. So there should be no instance where a customer has made his payment and it is rejected and his power was cut for whatever reason. So I think as an ecosystem, that 100% success rate, that 100% availability is what we need to aspire for the universe we are playing with. And once we bring that in, I think the brand automatically follows, because that will be what the brand stands for. The brand stands for the best way to pay your bills, right? And it is best as compared to everything, even an offline one. So I personally think the brand strategy will follow the value strategy if we solve for these few things. Because honestly, the customer doesn't care about the brand; they just care about the 100% success.
Thanks, Gaurav, and I couldn't agree with you more that the brand will fall into place if the value is put into place first. And you made some very pertinent points there. Can I also request Ganesh, given the fact that he has indeed converted so many of his customers into digital mode of payment, to share his insights on what can we do more to bring customers on board with us.
Yeah, thanks, Nupur. So, as I said in the earlier notes, like how to increase the digital penetration, like how to convert more offline customers to online, right? That would be our first key priority. How to increase the stickiness, how to send them more nudges, right? So, how to increase the awareness, that would be the first priority. That we'll have to work with OUs, that we do. But how can BBPS also help us doing that? That would be the first drive. Second is we still have customers who still want to pay cash only, right? So there are those set of customers who are not so easy to be converted. For them, we still have a huge network of BBPS which is available at banks, non-banks, but somehow it's not a tap, right? So that we discussed offline as well. So how can BBPS and NPCI work with us to develop this scope for us? That would be the next key priority for us, because a customer may not be aware that in just next to his door he can pay his bill instead of coming to his biller desk, which is far and away. In a city like Bombay, you could save 1 hour just to pay a payment, right? So that would be a big help from NPCI. And last but not the least, the next product that you're coming up with is the recurring option in BBPS 2.0. That is looking to be a wonderful proposition for us. I think it's as good as an e-mandate proposition. But only thing I would like to leave on the table is that the customer is having the option to cancel the mandate at any point of time. So if NPCI can bring in some structure to it, like take a consent from the financier before he cancels or he swaps the repayment mode, then it's as good as any other e-mandate option. I mean, that's the only.
Sure.
Thank you.
Thanks, Ganesh. Moving on from customers to, I think, the heart and soul of the platform, which is the operating units. And no platform can really grow without the ecosystem equally growing along with the platform. And to that point, I wanted to again go to Pranay and ask that how do we align the business models around BBPS so that it is more market led, and everyone in the ecosystem finds commercial benefit in participating. So Pranay, any thoughts that you would have on that?
In fact, Nupur, I already shared that as a priority.
Yes.
As I said, the economics have to be viable, right? Then only you will see participation, right? People coming forward and participating, whether it's onboarding billers or getting more and more customers onto the platform, they'll do their bit. If
Yes.
there is.
But Pranay, the I think the dilemma comes in a differentiated pricing that the billers want to keep as their prerogative versus the standardized pricing that the platform it has been aspiring for. And to be able to balance both of them becomes a bit of a challenge at times. So, how do we continue being cost efficient for the end users, which is customer and billers, while ensuring economics for the OUs is really the challenge at
Sure.
hand?
No, I was coming to that point. So, see, as far as billers are concerned, right, we need to, or billers as well as consumers, we as a cohort, we need to sell the value proposition of BBPS, and BBPS definitely brings in a lot of value proposition, whether it's the access to the distribution from a biller perspective, or guaranteed settlements, multiple settlements in a day, complaint management, a dispute management system, so on and so forth. The value adds are many. And then obviously, again, as a cohort, part of BBPS, we also need to look at more and more value adds. We need to keep on building on the value adds. So today, can we, and I'm just thinking aloud, can we provide an app to a biller whereby he can log in and see how much of money has been collected? what sort of transactions are happening, which regions, if it's a pan India biller. So all sorts of insights, if we can give, I mean, that's a value add. So we'll have to think about value adds to the biller and the consumer. I mean, today, let's say even without BBPS, when we had a fragmented bill payment system, through all the biller points and agent points, there was a certain cost the billers were incurring. So, you know, uh, why we can try to offer a cost benefit, at least, the biller, if the value add is right, the biller would not mind paying similar cost to what he was incurring with all these value adds, right? So I think we consistently need to keep on building on the value adds and sell the proposition, as a cohort, very aggressively to billers as well as consumers. See, it's not only NPCI's responsibility, but all the participants in the ecosystem need to sell the value proposition of BBPS to help BBPS grow from here. So that would be my view, going forward.
Thanks, Pranay, and I completely agree that unless this value getting cost for the value chain becomes a difficulty. Vishwas, any thoughts you would want to add on to this point?
Sure, Nupur. I have worked in the travel space also, right? So we do power a lot of airlines, hospitality. I think they
Yes.
have cracked the code. I think rate parity is something that we need to understand. Now, if a particular electricity company, India is a big country, huge country, right? And if there's an electricity company in a town or a city, and all these years they are used to paying for their collection charges, say 5 rupees or 10 rupees or 12 rupees, and in some cases 15 rupees a bill also, right? While at Bharat Bill Pay, this is one of my biggest, what to say, pointers, which I've been saying it time and again, is that we are sitting in our glass tower here in Mumbai and just giving that for electricity, it will be, say, 2 rupees, just an example, 2 rupees 25 paisa per bill across the country. It can't be that way. We need to have that concept called rate parity by the billers, where the agreements by a OU to a biller should specifically say that whatever commission that they are giving out best in the market, that rate parity that should be there on BBPS. And BBPS should have a system where, say, if a particular telco, like say Torrent Power in Gujarat, is giving out 10 rupees per biller as commission and they are used to that, that commission they should pass on to the BBPS system. So the AIs and the agent institutions also get the same rate. Here we are putting one single rate while the market. Hence, if you see the growth in this particular category where we give out the agent network outside the system are pulling it directly from them rather than pulling it through the BBPS. And commercial consideration is the most important thing. And even from
Yes.
the AI's perspective, they also need margins and functionality. And if a particular power company is used all these years to give out such a collection charges, then why are we enforcing a less, even if we do more value adds, but if we are putting up with this thing. So that's one part of it. Second part, which I'm increasingly seeing, is when we are trying to onboard the billers, a lot of RFPs are coming out, Nupur, and the new so-called funded guys, VC guys, are going below the interchange rate that NPCI BBPS systems have set out, say for a particular category, just to get that particular merchant and many other things. So, what happens that is that it is not feasible in the long run. They will continue doing it, and then later, somewhere down the time, they understand that it's a loss-making thing, and maybe the support and service issues, and the other side will be affected on the AI and the IA side, agent side, where we don't get that kind of, as Gaurav said, we need that 100% success rate. We need that 100%. So if we put a bench line and the steering committee within the BBPS that rule base that nobody can go below or something, that will be helpful for all participants and for the long run.
Sure, thanks. Um, just taking a cue from some of the things that Pranay and Vishwas mentioned. My next question to Ganesh is: do you think that the BBPS players aligning with industry-led bodies, let's say with the NBFC body or with other regulators or monitoring bodies or associations like MFIN, can that help leading to a faster adoption of the BBPS platform?
Yeah, definitely. So as I said,
I think we lost you, Ganesh.
Ganesh? Yeah. As Ganesh comes back, Gaurav, what are your thoughts around working with the industry-led bodies?
Sure. No, I think it's actually very important. There are multiple bodies who can help us solve some of the problems. So let's take financial bodies like banks and these, for example, right? Just on the point of revenue or making it sustainable. One very important thing that we could partner with is to say, hey, align the cost structure of payments because that's one of the biggest cost to the revenue structure of bills. So that's something we can work with the regulators, with the banking bodies, with the networks, payment networks to say, hey, every BBPS transaction, the cost should be, very similar to, it's not to say that we increase the revenue. That also we should do based on the sustainability, but maybe we can bring the cost of payments down for utility categories to match that. So that's one way you could partner. You could partner with a lot of these, some of these bodies are also channels for you, like the telcos, the media networks. They're also great channels for awareness, for driving this digitization. So I think just picking up some of these bodies where they're suppliers, where they are channels for awareness, where they even can generate demand, and just making these structural changes, which is what BBPS is uniquely placed to do, because you can bring that whole platform to play. Each biller cannot do this, but you can actually make some of these large changes, which will benefit everybody.
Thanks. Thanks for sharing that, Gaurav. Going back to Pranay. Pranay, since BBPS was conceptualized as a recurring payment platform, do you think a unified presentation management system that is led by CU will help the ecosystem?
No, definitely it would help. It was conceptualized as a recurring payment system, and we have newer categories like prepaid, which the regulator has allowed recently. But yes, a unified presentation system would definitely help the entire ecosystem and would deliver a lot of benefits. So, I mean, CU definitely needs to work on this and have a unified system.
Sure.
so
Pranay, if
am I
there's
audible?
one, yes, you are.
Yeah. Okay. Okay.
You're back, Ganesh.
Yeah. So
Yes,
taking your
please.
question, Nupur, so like as we said, there are some challenges like for us to independently work with the partners. So if BBPS can, like for the example that I gave, the offline mode. So if BBPS can make it mandatory for the banks or the non-banks to accept the payments and propagate the channel, then it definitely will help us, right? So if that's the question that you're asking.
Yes. Thanks. Thanks for covering that question. I think we are headed towards the closure of our time. And one last question to
Okay.
all of you. Before we take on the delegate questions, I would not want to disappoint them by not taking on those. Um, so, really, two questions, and I would want all of you to cover that. One is if there's one category you feel the maximum growth can come from, which category would you bet on? And the second is between penetrating in the existing categories versus expansion of categories, which of these two strategies would you pick? Again, Ganesh, maybe you can start and we will go around the room.
Yeah, so I think key priority would be to enhance the current proposition that we have. Like there's still a lot of scope in the options that are already available with in this product. So my proposition would be to increase that penetration.
Okay, thank you. Thanks. Vishwas, would you want to take that question?
Yeah, Nupur, I think BBPS should focus on existing categories which has a larger penetration. Currently, lots of municipal corporations and councils are still working on the traditional way for tax collections.
Yes.
We should focus on digitizing those bill payments in such rural areas rather than broadly opening up new billers which are already working on online payment customers. Particularly, we have to understand that BBPS is for the public good. We are not here looking for volumes, but we are trying to digitize and make those payments happen, which traditionally have been going through the cash mode. There's like 29 lakh crores of cash in the market. We need to make this a less cash society, and BBPS is a public good institution. So rather than focusing on getting newer volumes, opening up this municipal where you can pay your Sat Bara land assessment tax or your aqua tax across the country. I have so many agents across the country in remote towns also where their local electricity board is not there, and many others bill options which are there in his local this thing locality is not there. So hence the BBPS usage for him is not less. Going on a just trying to gain 2, 3, 4 million transactions more on a new category which is already happening, done, sorted, will not be that public good what BPS stands for. Also, even if you see the customers making electronic bill payments, walking into their own collection points is like we need to create more marketing and customer awareness. Where once we have onboarded these billers to these agents, how they can quickly just sit at one place and do it with a click is something that customer awareness is something that we need to focus more on once we get all these billers online. Uh, Even if you see the current strata of this 20,323 billers as of today on NPCI, 95% are education institutes which hardly any volume contribution, right? So even those we need to work on a charge to a customer model on their payment gateway channel so that they expect the same in BBPS. So these are some of the changes. BBPS is a customer-centric scheme, which acts as a bridge between the customer and the biller. So BBPS should focus more on customer awareness with the help of billers to pushing to make their bill payments to the BBPS channel. And we need to
Yes.
get those billers which are impossibility to get so that we have good real billers rather than volume generation like a prepaid recharge or anything which is already sorted. So that's my view, but open to how BBPS will steer it accordingly.
Yeah, thank you. Thanks, Vishwas, and really appreciate the view that you've shared, specifically around making it available at the rural areas and really trying to convert cash as a focus. With that, I thank all the panelists for sharing their thoughts, and we got all perspectives from a customer-led perspective shared by Gaurav to a pillar perspective led by Ganesh, and really the ecosystem and OU perspective that came from both Pranay and Vishwas. Very valuable insights. And I now would want to just take on the Q&A, which some of the delegates have posted. The first question is from a question to Vishwas on whether urban local bodies and municipalities are indeed equipped to process their bills and invoices on BBPS platform technically. How adaptable are they to come on to BBPS?
So, Nupur, the challenge is twofold. One is definitely one is on the RFP process that they have. Traditionally, very difficult to crack that. Second thing, getting them on board to work on the way their digitization work. So we need to do a lot of work in helping them digitize their bills so that we can, convert that whole bill structure every time it is generated in a smooth API which we can onboard in a real time onto NPCI systems and other things. That digitization, we need to put some money on how we can digitize, specifically in rural areas. Because I myself have been in a village somewhere outside Guwahati in Assam, where you tell them that where are all your bills generated, and he would go below the table and kick his leg on a CPU and say, look, this is where all our bills are. So
Sure.
to get that bills there in a very smooth and give Gaurav on Amazon Pay the smooth experience of real time payments for a land this thing tax is where we need to improve on that. So definitely that's where our all urban bodies, one is the RFP process is a really hard thing to crack with their what you call local preferences and other things that is there. And second thing, once it happens, how do we make this a
Yeah,
smooth
I think
experience because they
Vishwas
don't
is
have to. Nupur, we lost you. I think we lost Nupur. So anyway, as I was saying that, Nupur, are you back?
Yes.
Okay. Okay. So we'll go on to the second
Yes,
question.
the second question is to Ganesh. Do you think adoption is less in financial services because of the ease of cancellation of the mandate, or because the instrument is not covered under the Negotiable Payments Act? What are your thoughts on this?
Maybe the latter one. So cancellation, see, as of now, the cancellation is only an right. These are instant payments which the customer can accept or not accept, right? So these, the first one may not be the reason for augmentation of penetration. The higher reason is the awareness, right? So like my colleagues also shared here that we have to increase more awareness while BPPS is doing the work. We also in the ecosystem, we have to work together to increase the penetration by creating more awareness, right?
Sure.
I think that's the only
Yes.
drawback.
So I don't think we have any other questions. Last 15 seconds for the delegates in case they want to leverage the esteemed panel for any other questions. Otherwise, back to you, Kavya.
Thank you very much, Nupur, for that beautiful moderation of the entire session. And I think we managed to gather some interesting nuggets of insights from all of our speakers. So I'm going to thank all our panelists for joining us this morning and for sharing your thoughts as well. And I do believe the interaction is also like a two-way bit. We could see a lot of interaction coming on the chat and the Q&A. So thank you, delegates. But with that, as we call to the session, thank you once again, Nupur. Thank you very much to all of our panelists. And thank you very much again for joining us at the Fest.
Thank you. Bye-bye. Have a wonderful day.
Thank you. Have a good day.
Thank you, Nupur.
And a
Thank
good
you.
week.
Thank you
All
very
of you.
much.
Thank you. Bye.
Thank you very much. And meanwhile, delegates, we're also all set with our next set of sessions happening throughout the day. That's the whole beauty about the Fest. A lot of knowledge sessions coming your way. So please stay tuned for all that and more. And with that, we'll call it a wrap to this particular session. See you all in the next set of
Fest, Global Fintech Fest, organized by Fintech Convergence Council and Payment Council of India, of Internet Mobile Association of India, and National Payments Corporation of India. The fest is presented by the Ministry of Electronics and Information Technology, Government of India, Reserve Bank of India, and supported by Niti Aayog, Startup India, and Invest India, and is powered by Razorpay, brought to you by Amazon Pay and WhatsApp, in association with partner Google Pay and Open Financial Technologies and digital payments partner Cashfree Payments. Our next session is a panel discussion on how can SMEs use payments as a differentiator to grow their business. This session is powered by Razorpay. Without further ado, let me introduce our moderator, Mr. Ved Narayan Vedantham, SME and Startup Business Head, Razorpay. Our panelists, Mr. Vikas Bansal, co-founder Credo Fund, Mr. Abhishek Agrawal, Head Revenue Growth, Sheros, and Mr. Shrikant and co-founder offineeds.com. I would request all the delegates to put their questions on Q&A window, and we will try to respond them at the end of the session. Over to you, Veda, sir.
All of you are safe and sound, your loved ones, your employees, your colleagues, your co-workers, everybody is safe and sound. I have with me a fantastic panel and a wonderful topic that we're going to be talking about today. The topic today that we're going to be talking about is a mouth-watering one. It's about how can SMEs and startups use payments as a differentiator in their business. I have with me three very good friends and some very interesting and ambitious and high-energy entrepreneurs. I have with me Shrikant, who's a valued Razorpay customer. Hi, Shrikant. And who provides a whole host of bespoke, custom, fantastic, exotic corporate gifting solutions for a lot of corporates. He works with corporates big, medium, and small across the length and breadth of the country. I have with me Mr. Vikas, an old friend who's a product leader from Flipkart, and he's now followed his calling and he set up his own business. He runs his company called Crejo.fun, which is looking at making learning and education a lot more fun and gamified for our young children. Wish you all the very best, both Vikas and Shrikant. And I have with me another very good friend, Abhishek, who wears multiple hats in life. He takes care of all things business at Shiros. Hi Abhishek. He takes care of all things business at Shiros, which is a fantastic place for women to actually move ahead in their respective lives and their respective careers. He's also an angel investor, and he's also built this thriving and very strong D2C insider community, which is an aggregation and a conglomeration of some of the top D2C brands in the country. It's a fantastic community. I'm very excited to have all of you folks here, and I hope all of you are doing great. A very good morning. Thank you so much for taking your time, and a big thank you to all of the people who've turned up here today. Sorry about the technical glitch at the beginning. I think I moved into a different meeting by mistake. But great to be here, and we've gotten started. So one of the things that I want to talk about is the fact that one of the things that I often joke about at Razorpay is that, and I take care of, by the way, the startup and the SME practice here. One of the things that I often joke about is that the last year, it's been like we've been sitting inside of a time machine. The kind of changes that we have seen in the digital and in the payments ecosystem in the country over the last year is what might have happened over a 5-year horizon, if not for the pandemic itself. We've seen a huge acceleration of a lot of small businesses, of a lot of startups gravitating towards digital and digital payments. Most of the businesses signing up on Razorpay today are businesses who are either taking first-time baby steps into the digital payments ecosystem, and they are starting on their entrepreneurial journey, or they are previously been traditional brick and mortar businesses which are now looking to adjust to the post-pandemic new digital world order, so to speak. And it's been a fantastic roller coaster journey, and we've seen some huge growth. Like I said, we're not just seeing a growth in terms of more and more businesses gravitating towards digital payments, more and more SMEs and startups moving towards digital. We're also seeing a lot of these businesses pull through more monies through the Razorpay ecosystem, which attests to the kind of strong product market fitment that a lot of these businesses have. I'm going to start off with you, Shrikant, and if you could talk through from your vantage point. I just spoke about things from Razorpay's vantage point. We often joke that we are an index fund that sits on top of the entire business community in India, and we have a ringside perspective to what's happening. But I would like to double click a little on your own respective vantage points. I want to start with you, Shrikant. What have been some of the changes that you've seen overall at an ecosystem level, and more specific to your own business from a digital payments perspective? If you could talk through that, please.
Yeah, sure. Thank you, Ved, and thanks everyone for joining. This is indeed an exciting session to be a part of. So I run an organization called OffiNeeds.com, which has been in the corporate gifting space. We've been in business for about 16 years. So we've seen every form of payment collection, from cash to checks to DDs to NEFT and IMPS and your credit card, every single thing we've seen the cycle. And I still remember the days when you had to go drop the checks and wait for 3-4 days, and if the check even returns, it only after 3 or 4 days. Coming from there to instant payments, right? Being able to receive payments even on WhatsApp right now. It's a super cool journey. We've been lucky to grab onto the wave as and when it was happening. One of the key things where digital payments becomes very, very critical is typically we are a B2B company, right? We work with mostly large organizations, but what we've done is we run merchandise stores for our clients. We run official brand stores, we call this product, for large organizations like Infosys, for Lenovo, for Flipkart, for Tally, and all of these kind of clients. And this is a B2B2C e-commerce store exclusively for their employees and dealers and customers and so on. So their payment gateway was very important, and we've been in that business for a while now. But only in the last 2 years we've seen it explode like crazy. And believe me, we've used every payment gateway from the CC avenues to, before that we wrote our own code to integrate with banks and all of those kind of things. And what's happening right now is without a doubt the most exciting thing that is there in payments. It's just short of let me think and the money gets transferred. It's just short of that, but everything else is happening right now, which is why I think it's a very exciting phase. And businesses are usually, B2B businesses are usually slow to catch on to this. They still are, but still the transformation is very, very, the large organizations still want to pay using their credit system and through their SAP and Oracle and all of that stuff. But other than that, medium to medium size and small size businesses are happy to use digital payments for all kinds of transactions.
Yeah, that's very interesting. Thank you so much for that, Shrikant. And just one point that you mentioned, it's very interesting that you're B2B2C.
Yeah.
And that's something which is actually, in a certain sense at Razorpay, while we are building products for businesses, we are a B2B payments company.
Yeah.
A lot of the innovation that we drive is actually dictated by end customer needs, because it is the end customer who's actually going to be paying using one of our products.
Yes.
While the businesses essentially, we essentially facilitate payments between the end customer and the business, so to speak. So in that sense, a lot of our products are end customer facing, which is again very interesting. I'm going to come to you next, because and I know that each entrepreneur's journey is unique as they begin to unravel and peel the onion, right, when it comes to the entire payments landscape and the usage and the adoption of digital payments. What has been your experience?
Sure. Yeah. So I think we are anyways a pandemic born company. We kind of started late last year. We are kind of building extracurricular activities for children in an edtech world. So it's purely digital. Everything is digital. Even the delivery of the kind of classes happens digital. But I would say if I go back 10 years, even to my Flipkart days when we were like a SME as a Flipkart, right, and we were kind of building e-commerce. Obviously, payment was one fundamental thing. I don't think we had a Razorpays of the world at that point of time. So we had to kind of write our own payment gateway. If somebody remembers PayZP and all. And I think it was a journey, and it was very hard for any startup to kind of do a pure digital kind of a piece at that point of time, because at Flipkart we still had a muscle to kind of do it, but it was very tough for the others to do it. Right now, at this point of time, when during pandemic I was kind of starting up, right, I would say the Indian payment digital ecosystem has evolved so much. The great piece was like we had so many options, right? We don't have to kind of think about, and it was like in half a day we were like up and running on payments, right? While it took me some time to kind of write the website, the backend, and other pieces, right? It was like less than half a day. The payment was up and running. So I think that is a transformation that we are kind of seeing in the digital payment landscape for even a very early stage startup like us. We can kind of get onto a payment piece very easily, and obviously it's the most critical piece, right? At the end of the day, we are all doing business to kind of get the money in the bank, right? And that last leg is super critical around it. So I think, and if you don't have to worry about that most critical leg, that kind of shows how the things have evolved. And obviously the willingness of the customers to kind of pay online has also kind of gone up multifold. Right? They're very comfortable kind of paying online now around that. So that also kind of helps a lot. So it's, I would say, a two-way adoption kind of happening from that perspective, where the customers are much more willing. They're obviously looking for many more options, but yeah, they're much more willing to kind of do things, and at the same time, a host of solutions available for them. Right. So it has been, I would say, very easy ride from that perspective for us for the last one odd year when we have been kind of doing the digital payments from day one.
Very interesting, very interesting. Dhande ki baat, nuggets of wisdom from you, Vikas. And just on that point, right, and one of the vision statements for Razorpay, and one of the aspirations for us as a brand is to essentially democratize access to digital payments. We want digital payments to be open for all. We don't want it to be elitist. We want the access to the best-in-class digital payment solutions, as easy. We want to make digital payment solutions, the best-in-class digital payment solutions, as accessible for a Crejo as it is for a Flipkart. Right? It should be as accessible for everybody. So any new entrepreneur who's looking to set up shop today, who should have access to the best-in-class in the payments infrastructure stack. And I do believe that in India, we have probably the most sophisticated digital payment stack in the world. And every new up-and-coming startup and SME and entrepreneur should have access to this most sophisticated stack in the world. And that is one of our vision statements in Razorpay. And great to see that you are attesting to that point, Vikas, and wish you all the very best in your own entrepreneurial journey. Coming to you next, Abhishek, and I know that you wear multiple hats in life. If you could educate the audience today on what have been, some of your adventures, some of your experiences in navigating this digital payment space.
Sure. I mean, so I think something that I've seen both at Ninja Card when I was heading strategy up there, and much more so at Sheroes over the last year and a half. And, for context, basically Sheroes is a women-only community. We've got about 24 million women on the network. So it's pretty massive. It's in fact globally the largest women-only network. So through the pandemic, right, what happened was obviously a lot of households lost income. So we saw a lot of women come online. And this was for a variety of use cases where they just needed like counseling help, and, they needed a place to kind of express their emotions, et cetera, a safe place. And so for a lot of those reasons, they were all coming to Sheroes, but also a lot of women were coming to find ways to earn money, right? Because the household incomes were kind of affected through the pandemic. And what I would say the larger sort of internet story in India has done is it has really leveled the playing field, right? For people to kind of get up and be able to fundamentally leverage the internet as a way to earn money, right? I mean, if you really kind of zoom out at a very macro level, all of us, the businesses we do, are fundamentally leveraging the internet to kind of add value and make money, right? And what's great to see is that is actually penetrating to layers of people who, we wouldn't really call them an entrepreneur in a typical sense, or at least most of us may not at the outset, but fundamentally they are, right? I mean, a woman who is making candle and selling, or making soaps and selling them, is 100% an entrepreneur, right? And exactly the kind of democratization that Veda was talking about, there's absolutely no reason that she also should not get 100% of the benefits that the ecosystem can provide her. And what's been great to see is, the women are obviously looking to the internet for that support, and the Indian ecosystem, right from payments to delivery, e-commerce, infrastructure and logistics, etc., we're very well placed to be able to do that, right? So I think fundamentally, because of obviously the pandemic, the adoption of digital payments has shot through the roof even in that segment, right? I think most of us were probably very attuned, and we would prefer digital payments any day. But there's a whole segment where there's been a trust deficit, right? That I don't know. I mean, unless you see a check, like a check is real, right? I can hold it. A Paytm QR code isn't real, right? Matlab, paisa kahan ja raha hai? I don't know. So I think that kind of acceptance and crossing the barrier of trust deficit has moved leaps and bounds. The time machine analogy that Veda used, right? And I think it's been wonderful to see women really start to sort of leverage the power of the internet, and the whole digital payment stack is a huge part of it, to be able to, I think, really level up their own lives and invest in their own growth. So I think that's been something we've been seeing at Shiro's a lot, and even in my own journey across my investing, or prior stints at Ninja Cart and so on and so forth. I think that whole layer of an audience, right? I mean, tier 2, 3, the more Bharat of India, so to speak, is really embracing this change, and I think that it makes it a lot more interesting in a lot of ways.
Yeah. And just to add to that, I think a lot of us kind of keep on debating whether things will kind of go back to the previous way post COVID and all. And I keep on saying, like, there's a famous 21-day habit kind of a rule, right? Now it has been like 21 months, right? So people have been kind of attuned to a lot of these habits. I don't think we're kind of going back to the older ways. And this is not an alternate future that we are seeing. This is, as Veda was saying in the beginning, right? This is an accelerated future that we are seeing, right? So all the digital adoption that we're kind of seeing of all of these things will kind of continue. Now people are used to it, they're tuned to it, right? So this is here to stay, and it'll kind of going to kind of keep on increasing. So we are like maybe a 5-year step jump, and from there onwards we kind of keep on seeing that growth that we've seen after 5 years.
Yeah, valid points, because and I can certainly attest to that fact. At Razorpay, the changes that we have seen and the changes that we are continuing to see, this change is here to stay. It's not a temporary blip. This is a new normal. That is something the ecosystem also realizes, and a great point there, because and Abhishek, thank you so much for those views.
I think I want to add a little bit to what Vikas just said. Habits, I think, are the toughest challenge in any business, and because of the pandemic and because of a lot of things, we've been used to new habits. There used to be a place just near my door where I used to keep my wallet. If I'm stepping out of the door, I had to carry my wallet at all points of time. Now I don't know where my wallet is. Anywhere you go, you can manage without your wallet.
I'm assuming your phone is your wallet now.
Yeah, your phone is your wallet. Just carry your phone. Your phone is with you at all points of time, right? So that's a phenomenal change. From the tender coconut vendor to the parking guy, just about everybody is accepting QR code based payment. So that's a fantastic habit change that has happened. Started probably with the demonetization, where suddenly Paytm was the go-to wallet, and accelerated with the pandemic, I think.
Yep. Interesting. Thanks for that, Shrikant. And you know what? At Razorpay, every week I speak to at least 5 to 6 to 7 to 10 startup founders, SME entrepreneurs, etc. And each of them has their own unique narrative to share when it comes to their aha moment, when they decided to move to a sophisticated payments platform like a Razorpay. And each of them has a narrative. In some cases, it's about the fact that they want to be taken more seriously. I have spoken to business owners who said that, I just want to be taken a lot more seriously. I was talking to this, stay-at-home mom who was doing neighborhood astrology consultation, and she was doing it through Zoom calls, for a lot of the people in the neighborhood, because of the pandemic, of course, because everybody was stuck at home, and she was receiving payments using UPI. She shifted to, a Razorpay because she wanted to be taken a lot more seriously by her end customers, and B, she was achieving a certain level of predictability in her cash flow patterns. She was getting a certain volume of payments every month, so she just didn't want to use UPI. She wanted ease of reconciliation more than anything else, because she was getting so many different payments every month. She wanted to be able to reconcile it, and most importantly, she wanted to give her end customers the freedom of choice. She didn't want to dictate that her end customer only needs to pay via a specific instrument. She wanted to use a payment stack like a Razorpay, which gives the business's end customer the freedom of choice. They can pay through a credit card, a debit card, a net banking, UPI, EMI options, subscriptions that they want to offer as an offering to their end customers. The Razorpay stack affords you all of these different features, and that was something. And in some shape or form, in every single conversation that I have with a lot of SME entrepreneurs, including this one, right, the stay-at-home mom who's the freelance astrology consultant, in some shape or form, one or more of these aha moments come out. Either the need for being taken a lot more seriously, for being perceived as a professional business, or the fact that they want to maximize their revenues, maximize their success rates, so to speak. They want to make sure that if 100 people decide to pay, the maximum percentage of those 100 end up actually paying, and end up paying successfully, and the money hits their bank account. They want ease of reconciliation. They now know that they're into something serious. They know that their business is about to take off. They are getting predictability in cash flow, or they have visibility to gain that predictability. So they want to use a more sophisticated platform. I want to come to each of you now. I want to start with you this time, Abhishek. And I want you to tell me, in your own respective journeys, what have been the aha moments that you observed, which was the inflection point that prompted you to move to a platform like a Razorpay, for example?
Sure. I mean, I think, so obviously a lot of it, like moves like this are always, in my opinion, based on obviously our own prerogatives. And, what it serves the business is it streamlines a lot of the guardrails to be able to do a lot more things intelligently, right? I mean, I think you have all the sort of transactions in one place. And obviously as a platform, you own the payments are sort of flowing to you, right? Fundamentally. I think that's where it's critical from a business perspective. But I think that there's no aha moment there, right? I think it's fairly obvious. But I think the aha moments, to me at least, always come when you sort of go down deeper to the end users, and what are their flows looking like, and how does this change their life. So if you take like a regular Paytm payment for this woman entrepreneur who's selling, right? We obviously do a lot to kind of seller tools and buyer discovery for them, etc., etc. But fundamentally, when let's say in a previous world where they were selling, it would be a WhatsApp conversation with somebody who they know who wants to buy something, and then she's sending her Paytm QR code. Now if you send it on one phone, how you can't really scan it to the same phone, right? And there's obviously all those sorts of challenges. So you send a UPI ID, etc. And then once the customer has paid it, he or she is sending the screenshot to the seller to say that, hey, I've sort of paid it, right? And now even there has been instances of fraud, right, where people literally sort of just Photoshop payment confirmation pages and have been sending them. I mean, OLX is full of those stories, for example. So the idea was that, like, okay, I'll get it. And then if I'm the seller, I have to kind of go back to my account and verify, okay, I've received the money. And then I actually confirm the order, dispatch the product. So there's just a lot of friction, right? And especially when you look at this layer of I would say, new entrepreneurs from sort of middle market India, all that friction adds to anxiety and stress in running a business, right? It's all kind of barriers to their growth, right? I mean, can they realistically manage, move from like 20 orders a month to 100 orders a month if they still have to do all this? Very hard to do, right? So I think what Payment Links really solve is the ability for them to do this, significantly less anxiety and stress manner, right? I mean, they just literally have to send a link of a payment option, and the customer does it. They get a confirmation absolutely immediately. They have a dashboard where they can see, okay, this is, the customer has paid, etc., etc. So I think that happens a lot more seamlessly. And of course, I think again, some of to seller to the moment you can sort of have a dashboard. So I think in that sense, that's really the aha moment I've seen with this set of women entrepreneurs, and how more streamlined payments have helped them, right? Even if I think for that segment, most of the payments still end up being wallet or UPI based, because fundamentally net banking and card, like debit or credit card penetration isn't that high anyway, right? In India, there's a lot of headroom. But I think even then, it removes a lot of the friction that otherwise exists in trying to manage P2P payments.
Understood. Yeah, thanks for those insights, Abhishek. Very interesting. I'm going to come to you next, Srikanth. You spoke about multiple inflection points in your business's journey, multiple pivots, etc. From your vantage point, what was that aha moment, right, which prompted you
Yeah.
to move to a Razorpay?
There are two or three, but I want to speak about one of the first ones, and which
Sure.
was which. So the biggest challenge with our business is collecting payments on time. Whatever the kind of customer in this ecosystem, the reality is whichever your customer is, you're getting, if you're able to collect payments on time, that's a big achievement. That's the only challenge we have in our business, right? And if it's a large organization, you can't really do much about it. There is a purchase order, there is
Yeah.
that navigation system which is there. But there are multiple locations where a lot of small businesses want to buy from us, medium-sized businesses want to buy from us. They're willing to pay advance and so on, but just they create a beneficiary and do that, and it's just too much of a hassle. And invariably, people think about corporate gifts in the absolute last moment. Our brand promise is fast, easy, customized. The fast is the key, right? We are able to deliver things really fast, and they're like, I want it today evening, I want it tomorrow, that kind of stuff, right? And by the time you add a beneficiary, even if they're willing to make the payment, it's just too much of a hassle.
I can see a lot
And
of smiles in the room. I guess all of us have been there, where we need the
yeah,
corporate gift yesterday. It's
yeah,
usually not today, Srikanth. It's yesterday or day
it's
before yesterday.
yesterday, yeah, it's yesterday. Right? And once their event, they took it for a particular event, right? That the event goes on for another 2-3 days or something, then they forget to make the rest of the payment. And it's just too painful to collect payments, even if the customer is willing to make payments upfront. And somewhere I came across one ERP solution which had an integration with Razorpay, and it said if you have, in the invoice there will be a button where they can make the payment, and it automatically gets adjusted to that invoice. I was like, wow, this is good. Now that was another challenge, right? Even if the payment comes through after a week or something, if the accountant forgets to account it for something, after 6 months, my chartered accountant will say, hey, what happened to this? This is my, that's one mess. You have to sit for like 2 weeks and sort out all of those kind of things. So that was an aha moment. I was like, okay, so the client gets a PDF invoice and there will be a link. He makes the payment and automatically it gets adjusted. We don't have to do anything. It's like, wow, this is good. Now we are telling all our clients, I'm going to send you a pro forma invoice through the system, and you make the payment and your order starts, right? And that makes it super easy. We're able to do transactions internationally. If not for that, international transactions were a nightmare. Most of them will make payments through MX cards, and you have to have that MX special status account, something. So just because this was happening, we switched from a very, very popular ERP system, which 99% of the businesses use, to something where we are able to collect payments. So it's that important. If you're able to collect payments, the amount of administrative hassles, the amount of ease that can come into the business is really quite magical. And that was a big aha moment for me. And then once we got used to the Razorpay ecosystem, I mean, I'm a big fan of Razorpay. I've told this to Veda and a lot of people at Razorpay. I love the way the company has grown and evolved, and every week there is something new that's happening. All that you have to do is just follow their newsletter and latch on to the different things are
By the
happening.
way,
And
I did not prompt Srikanth to say this. He's saying this on.
right, so that was my big number one aha moment.
Cool. Thank you so much for those kind words, Srikanth. And love to. And each SME's journey is unique. Like I mentioned, each SME goes through their own, discovery of that aha moment. Love to hear your perspectives, Vikas. What were your aha moments when you decided to move to a Razorpay?
Yeah. So as I said, unlike Srikanth, I don't think we had such a long journey, right? And from day zero, we have been on Razorpay itself, right? But I would say within that itself, on the digital payment piece itself, the journey, right, and the customers that we kind of cater to, right, since we kind of sell extracurricular activities for children online, right? So by default, that TG is more of like you can say like a tier one TG, right? And you kind of assume like even though the credit card penetration is kind of low in India, those 20-30 million cards are still there, and those people whose RTG will be kind of anyways having it, right? But we were surprised even in early small scale itself, right? We're kind of getting a lot of people who were like, we don't have credit cards, we want to use kind of net banking and those kind of things. So from day one, we have been seeing the need of like a variety of payment instruments required, right? That was like a little surprising for me. Otherwise, I thought like within credit card and UPI, like we're almost kind of done over there, right? So that was I would say one kind of a surprise, but thankfully, like nowadays, payment instruments kind of take care of that, right? The payment gateways have all of those things, right? Secondly, I think like Abhishek touched upon the payment link piece, right? I would say it's both a boon and a pain. It kind of works beautifully because if for some reason we have to kind of collect the payment from the customer, you just kind of send them the payment link that kind of works. And while people's willingness is much more open, but at the same time, like Abhishek was talking about, so many frauds happening, right? Even the customers are little still wary about, like, oh, if I just gonna get a payment link from somewhere, where is this money going, right? Is this kind of going to is this a fraud link or is it an actual link? So they are still a little worried about that, right? So they still want to kind of go and come to the website and then kind of make a payment then and there itself, right? While it's much easier to kind of generate payment links and send it and get the payment and even send in confirmation back to them, but I think there's still I would say a hesitancy in people that they would like to kind of go through the normal flow and make a payment over there, right? So that is still one barrier to be kind of crossed for whatever reason if you have to kind of send an offline payment link to them, right? So those are, I would say, not a pure aha moments, but those are the some of the two kind of surprising moments for me, like which we kind of take for granted, like everybody at least in your TG has this or other instrument, or people are just kind of okay with it, they trust it, because we live in that world every day, but sometimes the customers don't, right? So, and which is where I would say the overall the variety and the trust factor in the payment side, obviously, which is, I would say, kind of a foundation of any kind of a payment solution, right? Is super important, and that helps a lot in kind of, taking that money in the bank from the customers.
Yeah, very interesting perspectives. Thank you so much for that, Vikas. I'm actually noticing a very interesting question here in the Q&A, which is on pricing, that Sumit Arora, who's a senior product manager at IndiaMart, has actually asked. His question essentially is on, given that payment gateway platforms, payment aggregator platforms charge a certain commission rate, and while a lot of the other payment options like a NEFT or a UPI, etc., are essentially free, why would a small business choose a payment gateway? And this is like a very interesting question. And at Razorpay, we've done a lot of research, a lot of customer research, where we've tried to essentially understand this question. What we've come to realize is that if you're a small scale business owner or if you're a startup, what matters more than anything else for you is getting paid. What matters more than anything else for you is building that trust and helping your end customers cross that trust barrier. And your payment volume is also relatively on the smaller side compared to, say, a Flipkart, for example, which is a really large and established brand. So price is less of a consideration there. What the SMEs and the startups care a lot more about is providing the best possible end customer experience for their customers, which is providing them the breadth of instrument coverage. If you're just say receiving payments via bank transfers, I need Vikas, who's my customer, for example, to pay via bank. If I'm just receiving payments through UPI, I need Srikanth to only pay using UPI. But now I'm giving the choice to my customer. Srikanth can decide, if say I am the business and I'm using Razorpay, Srikanth, who's my customer, can decide how he wants to pay. Vikas can decide how he wants to pay. Abhishek can decide how he wants to pay. Right? So the choice is with my end customer. It provides a better customer experience. It helps my customers perceive me as being a professional platform. One of the aspirations that a lot of small scale business owners have is they want to be seen as a serious player. They want to be seen as a player who's on a par to some of these large players, right? Their aspiration is to be as large as a Flipkart tomorrow, right? And they want to be seen as a player who's serious enough, who can eventually get there. And having a sophisticated payment gateway is one of the biggest ways that they perceive. Dhande ki baat, they want to get paid, right? They see that as a great step in that direction, which is why pricing is less of a consideration. I'm not saying it's not a consideration at all, but it's right at the bottom in a stack rank of priority of key consideration items that a startup or an SME looks at when they're actually evaluating a payment gateway, or a digital payments partner. I don't know if any of you want to add to that, Srikanth, Abhishek, and Vikas. This is at least something that we've observed. We've spoken to a lot of SMEs and a lot of startups, and this has been the overwhelming feedback that we've received.
No, absolutely.
I
I completely agree with you, Ved, on that, because the getting paid is the number one thing, right? You get 1%, 2% lesser is still better than not getting paid. Or delayed payments is a big thing, right? 1 week, 2 weeks delay in payments is a major challenge. And by not giving that option to your customer, you're letting them go. You're delaying their decision making, right? They want right now. Attention span of people is reducing day by day. So they say, hey, this is interesting, I want to buy, but you don't have the card. They're ready with a credit card and you don't have an option. You say, send me a phone pay is down. This is not right. By the time that high is gone, they say, hey, okay, let me think about it. Let me think about buying. You lost that customer, right? So it's worth accounting that 1%, 2%, whatever that percentage is into the business, and having that convenience and having converting that business.
Yeah. Thanks for those views, Srikanth. And just shifting track slightly, I want to talk a little bit about a very interesting change that is sweeping across the Indian startup and the payments ecosystem and the SME landscape itself, which is this entire revolution of no code. We call it #NoCode. And the new age digital entrepreneur, SME startup founder, is not like, if I may say so, because Sachin and, by the way, you have a very famous last name as well. They're not like Sachin and Binny Bansal of Flipkart. They're not like Shashank Kumar and Harshil Mathur, who founded Razorpay 7-8 years ago. The entrepreneur, the digital entrepreneur of 7-8 years ago understood both the importance of digital and digital payments and understood the nuts and bolts of the technology powering that digital platform. The new age digital SME startup founder entrepreneur understands the importance of digital, understands the importance of payments, digital payments, but does not understand, nor do they care about understanding the nuts and bolts and the technology that powers the entire digital platform. They want that level of complexity abstracted away from them. They want platforms which can do that. They don't want to go through the hassle of integration per se. That is a huge trend that we've observed, right? A lot of businesses don't want to go through the hassle of integration, because they don't have the technology wherewithal. They don't know coding. They don't know tech. They come from a complete non-tech background, but they want to build digital businesses, or they don't have the money or the luxury of having a developer who can integrate things, and they are in a hurry to go live, which is why we've seen a huge adoption in the SME market of a lot of our no-code products at Razorpay, like a payment link, a payment page, a payment button, which SMEs and startups can literally start using in under 5 minutes. It's 4 minutes, 32 seconds. We've actually timed this. And this has been a huge boon. And I spoke earlier about the vision that Razorpay has of democratizing access to digital payments. And this essentially has these products, no-code products, have made digital products a lot more accessible for the larger massy SME community. It's no longer elite list. It's no longer a privileged product. It is open for all. Digital payments is open for all through our suite of no-code products. I want to come to each of you. I'll start with you this time. Because what have been your observations on this no-code product? Are you a user of some of these products in some shape or form? Any viewpoints, any perspectives from
Sure. Yeah, I think I have observed a very big trend in this direction. I think a lot of as a startup enthusiast, I kind of keep on going to multiple startup sites and whenever they kind of come up. I think a good chunk, a majority of them, I have not kind of counted, but maybe I would say anecdotally, like maybe more than 50% of them, I kind of see they'll have like some page, and you can clearly see from the website, yeah, this is like a no-code website itself, right? Where they have kind of used some kind of a website builder, kind of have got it. And in the end, even the page, I can clearly see most of the times like a Razorpay payment page, where you need to kind of put all the information. Even though I'm logged in, I can understand it's a no-code page, because you have to enter name, email ID, phone number, everything, and the amount that you want to kind of pay over there, which kind of clearly shows that it's a no-code thing, and which is great. Like you kind of, because you kind of got that's what is kind of required as a startup. You kind of what is more important is the speed. You kind of get out to the customer out over there. While you might be missing out a few here and there for some of the issues, but what is more important, you kind of get your core product out over there, right? So it acts as a big boon in that perspective, right? And as whether you said, right, a lot of people even they understand technology and all, you would like to maybe use your tech bandwidth in something what is more important, what is something more core for you around it, right? I would say that's also another important decision that people take. Like if something can work out without that, yes, why not around it, right? And we obviously use little less of no code. I think me and my CTO kind of coming from building platforms, so we are somehow kind of more attuned to kind of building a lot of things. But at the same time, wherever we feel like, yeah, whatever things you can reach out, leave out to somebody else kind of doing it, we should, right? We should not be kind of building everything, and no code makes perfect sense, and it's a one thing which is kind of being used across the board. And obviously, as I said earlier, payment is the most critical step. If for that people are using no code, that the no code movement is here, right? Where people just want to kind of do less of coding and do more of business in the core product.
Yeah. Abhishek, your views, and I'd like to hear your perspective on one other point as well, which is on local vernacular. All of the SMEs that we speak to today, and any random set of SME small scale businesses that I pick up the phone and have conversations with, more than half of my conversations are not in English; they are in Hindi. I need to speak in my broken South Indian Hindi in a lot of this, and that's coming through in a lot of our customer conversations. More than half of our sales team's conversations with SMEs and startups today are not in English; they are in local vernacular. At Razorpay, we've also launched a suite of local vernacular checkout options where we allow businesses the ability to speak their customers' language. Right? Speak your customers' language is like a cliche term, but we actually make that happen at Razorpay for small businesses. And what we've observed is that small businesses and any business for that matter, which uses a local vernacular checkout like a Hindi, a Tamil, it's available in all top 7 Indian languages. Hindi, Tamil, Bengali, Telugu, etc. And when we've noticed that, and Kannada, of course, and when we've noticed that these small businesses use local vernacular checkout, they're observing a 15% improvement in their conversion rate, which is a fantastic number. So, I want to pick your brains, Abhishek, on both of these movements, both no code and local vernacular.
Sure. Let me start with the no code piece, right? I think I have three interesting anecdotes which I think cover three different customer segments, which I'm going to share. But I think at a macro level, if you go back, say 10 odd years, if you wanted to build a digital business, I think as Veda said, I think in summary, you needed to know you or as a team, right? You needed to know everything about everything that is there to build a digital business. And that was also the struggle, right? I needed to know how to code it. I needed to understand how to build server-side maintenance. I needed to understand how to do GTM as well as marketing, the whole stack, right? And apart from that, the actual business that you're doing. And what is at an ecosystem level, what's fundamentally happened is now it's matured where there are providers for each of them. There are guardrails built. You can literally integrate APIs without getting into a lot of it, right? And I think that's the macro level, which is also definitely true for payments, right? And I think that's where no code is also coming in. The three anecdotes I have, firstly, from a D2C perspective, right? One of the biggest reasons why you're seeing D2C brands come up left, right, and center is because it is ridiculously easy now to just focus on you building the brand and the product, right? Shopify, to my mind, is one of the absolute benchmarks of a no-code business, right? It literally, you can sort of go and create an e-commerce store in an hour or so, right? And obviously you can through all the stuff that Razorpay and other folks are doing, you can integrate payments, logistics, blah, blah, blah. And I think, that whole movement has been so core to the D2C sort of revolution in India in the last, I would say, a couple of years. And it's absolutely phenomenal to see, right? Without a Shopify, that change could not have happened. Sure, a lot of businesses, as they mature, they choose to invest in their own product and platform and tech. And that makes sense as well. But I think for the first 5 years of your journey, right, until you hit a certain sort of scale in revenue and GMV, Shopify is your default and sort of practically go-to answer for setting up your entire commerce stack. And it is 100% a no-code solution, right? So I think that's one anecdote of I would say one kind of customer segment.
Just to quickly chime in there, Abhishek, if you don't mind me doing so. Yeah. Just on the point of D2C, I just wanted to make one observation. We work with one of India's largest marketplaces, and we are a partner where we provide a suite of bespoke payment solutions for all of their sellers. One of the things that we observed is that a lot of these sellers who are again small businesses, who are selling on their marketplace, and they're making a lot of money, by the way, they're having a good livelihood selling their wares on this marketplace. They still have aspirations to build their own D2C brand. They want to go direct to consumer. They want to control the entire customer life cycle, which I think is a great testament to the kind of entrepreneurial spirit that this country actually has. I think that to me is really, really fantastic. No. And the other very interesting thing, very quickly, if I thought I could make, is that we're noticing a change at Razorpay of the life cycle behavior that a lot of businesses have as when it comes to their digitization patterns. Earlier, businesses would want to set up, a website using a Shopify, register their domain, set up a social media presence, etc. Then think about payments as an afterthought. Baad mein dekha jayega, right? But now what we're noticing is that businesses are skipping steps and they are in a hurry. They want to start receiving payments and they want to receive it like yesterday. They want to have their digital payment stack ready, which is one of the reasons why at Razorpay we've seen a huge boom of our payment page product, which is like a 2-in-1. It provides you a digital brand anchor. It gives you a mini storefront capability. And in addition to that, it's a 2-in-1, as I said. It also provides you a robust payment infrastructure stack. And that again is an extremely, a very interesting and an eye-opening trend that we've been observing at Razorpay in the last year and a half or so. Yeah, but back to you. I just thought I'll mention those two points, which I thought were relevant.
No, absolutely.
Yeah, please carry on.
As a second customer segment, right, and I'm here, it's a very personal example because I'm giving myself. Yeah. So last year, after the pandemic, I was on a 6-month sabbatical, and as part of that, I kind of built a personal finance course. Nice. Right. The idea was to make this personal finance course, which people can buy and level up their personal finance understanding, and also selling it to companies who want to kind of do it as an L&D initiative. Building the course was one thing, but I'm not kidding. It literally took me 1 day to build a website for the course using a full no-code stack, right? And nice. It's a pretty decent website. Using a Notion, using a payment gateway kind of a button there, it took me a day to churn out a simple website, which got me it was good enough for about the first couple of 100 customers, right? It's about 500 customers now with that website, and it took me a day. Now, I think that I'm sure I'm somebody savvy enough to maybe go and build out something with the tech, but the idea was that, that whole no-code stack is is simplifying getting to, being able to get to day one of earning money so
Sure.
fast that's the amazing part, right? You're not sort of wasting or spending too much effort and time on the stuff that, it matters, but you don't want to do it. Right. And the third quick anecdote was like, and this is an insight we're using at Shiro's as well. A lot of these women entrepreneurs fundamentally face the challenge, right? Like, I want to set up a digital storefront because for them, the digital storefront is also their identity online, right? I mean, these are women who are often new to the internet in some form, so they're very proud of it.
Yeah.
And we had to ridiculously simplify this because they know that the level of savviness is materially lower. So today we're seeing women come up on Shiro's and open their digital storefront, and I've as Geda was saying, we've literally timed this in 45 seconds, right? And I mean, I wouldn't call this no code because it is a platform, but I think it lends itself to the whole no code movement, where the idea is make the stuff that people don't care about or don't understand ridiculously simple, right? And I think that is true across things like building digital storefronts, collecting payments, payment reminders, right? I mean, Srikanth, you spoke about sort of getting the money. So payment reminders and all of that, right? I think that's where the whole no-code movement is really kicking in extremely well. Those are the three examples from a no-code perspective that I had. From a vernacular, the other point you mentioned, I think 100% true, right? And I mean, we see this play out a lot at Shiro's. With 24 million women on the platform and the community, we have women from literally every possible vernacular you can think of within India, and we've got a fair bit of sort of people across the world as well. And they obviously want, their comfort with different languages might be varying, but they always want to, as you said, go to their customer base and who they're kind of wanting to communicate with in a language that is much more contextual, right? They want to remove that friction. Like most payment gateway pages, if you think about it, they aren't vernacular, right? And the moment you think about tier 2 and 3 being the growth engines for the future across all sort of commerce businesses in some form, they aren't really suited to the trust deficit that those consumers already have, right? These are consumers who don't like to buy from platforms. They don't always trust. They're happy to buy from an individual. So how do you cross that payment, that trust deficit at the most critical point, which is a payment gateway page, right? I mean, we've seen our sellers want to do this. So it's really amazing to see, like, I actually didn't know about this, Veda, that, you guys have started this. So I think it's absolutely required. And tier 2 and 3 is the growth engine for practically any business, right?
Yeah.
I mean, most, like 80-90% of businesses, I can very confidently say that, you might be premium or aspirational in positioning, but your growth engine is 100% tier. The next sort of 500 million users who are coming online now, right?
Absolutely.
And for
Plus one
them,
to that,
if you
Abhishek.
aren't solving for vernacular, it's going to be a challenge.
Absolutely, a big plus one to that, Abhishek. And for our local vernacular checkout option, what we've noticed is that where I mentioned that where businesses can provide payment and checkout experiences to their end customers in the top 7 Indian languages of their choosing, any of the top 7 Indian languages. And we've observed a 15% improvement in conversion rate for a lot of these businesses. Most of them are from tier 2, tier 3 cities in India and servicing the local economies in these respective cities and towns, which I think has been extremely interesting and encouraging. It shows how payments can truly serve as a differentiator for your business. Especially if you're servicing customers in tier 2, tier 3 who are a lot more comfortable in local vernacular than English as a language. I think that is something which is very clearly coming through. And just another very interesting and a slightly humorous anecdote on local vernacular. We were actually in a webinar. I was actually in a webinar in full flow, just like this one, where I was actually talking about digitization to a lot of the sellers who've been listed in one of India's largest e-com marketplaces about digitization, etc. And I was stopped midway because people said they couldn't understand a word of what I was saying. They wanted me to continue in Hindi, and which was extremely interesting and eye-opening. And and we're almost out of time. I'm going to come to you, Srikanth, just to hear your quick viewpoints on this one point, which is a very interesting question that has come through in the Q&A, which is on what are the criteria that a small business owner should evaluate against while choosing a digital payments partner. Would love to hear some quick thoughts on that, Srikanth.
I think the number one thing to look for is ease of integration, ease of use, the UI, and on an ongoing basis. I prioritize ease over anything, right? Because you tend to not account for your own time, your own manpower costs, and a lot of other things, right? You tend to think this is slightly cheaper and things like that, and you tend to go for something substandard, and in the long run, it's just taking too much of your bandwidth. Unless you are a pure tech guy, like probably Vikas is, or somebody else, I would say stick with low code or no code as much as possible. and go for the best product out there. There's so many SaaS products. I mean, India and Chennai, I think in particular, is becoming the SaaS capital of the country, and maybe hopefully is the SaaS capital of the world very soon. There are so many amazing products that are there. You just, one day you think, hey, it'd be good if this could happen. You look it up on Google, I'm sure there is a low code or no code product which is out there. I'm a big fan of open source, and open source is kind of the predecessor of low code and no code. And I think the number one parameter is ease of use, customer support, and dependency. And then comes all the other factors. Like the reason why I say I'm a big fan of Razorpay is I don't have to do all the research. Every time I say, okay, it would be good if this is happening, they're a company which really listens and something gets implemented within the next few months. And we used to use multiple payment gateways. We're like, screw all of that stuff. We're just sticking with one, and go with something that makes your life easy. That is the number one criteria, is what I would say.
Absolutely. Thank you so much for that, Srikanth. We are out of time, and we'll have to end this. We could discuss on and on and on. It's been a fantastic conversation, very enriching conversation. Personally, I've enjoyed it a lot. All of our panelists, we've enjoyed this conversation a lot. It's been a very enriching conversation. I hope the audience had as much fun in listening to us as we had in actually discussing over the course of this panel, conversation. Thank you so much for your time to all of the panelists, and a big thank you to the audience who turned up here today. I hope this was a productive use of your time. Wish all of you good health. Do take care and stay safe. Back to you, Ritika.
Thank you, Veda sir, Srikanth sir, Mr. Bansal, and Mr. Agrawal for this amazing session. And I would also like to give a special thanks to delegates who attended this session. So thank you everyone for being.
This event is organized by Fintech Convergence Council and the Payment Council of India of the Internet and Mobile Association of India. Joining me here on stage on the panel discussion on the topic Future of Technology in Financial Markets, I'm joined by Ms. Pooja Ganeshan, Product Manager, Refinitiv. I'm joined by Dr. Kailash Nath, Chief Technology Officer, Zerodha. We have Mr. Rohit Ambosta, Head New Solutions Group, ICICI Direct. And we have Mr. Neeraj Singh, Co-founder and CTO of Grow. So without wasting much time, let me introduce and let me call upon Ms. Pooja Ganeshan to take over the stage, as she happens to be the moderator. Over to you, Pooja. Thank you.
Thank you so much. A very good morning to everyone. Hope everyone's staying safe and healthy. As you are all aware, we're going to discuss about the future of financial markets, at least in terms of technology. Over the last few years, the financial markets have witnessed immense growth the world over, as well as in India. To many, this has been a saving grace, especially in the challenging times of the pandemic. To the fintech industry, what this has meant is an unprecedented growth in terms of customer base, in terms of new accounts, in terms of trading activity. But what's been really unique in a sense has been that we've all had to operate in a hybrid, if not in a completely remote model. So we'll be delving a little more deeper into all of these conversations. I'd like to start off with discussing, what some of us have done to essentially keep the lights on, keep the business running, and what are some of the changes that we've had to make in terms of either adopting new technology or new models to scale and to continue to cater to customers or introduce new financial products over the last few quarters. Kailash, I'd like to start with you first.
Yeah, thanks, Pooja. So you're absolutely right. Completely unexpected black swan event kind of growth and changes in the industry last year. Not to mention sweeping regulatory reforms that also changed quite a bit of things. And I think the only constant here in this industry is frequent change. So again, like you said, we had to at Zerodha, we had to go full remote overnight practically last year when the lockdown started. It was a drastic transition, but we managed to pull it off, thankfully, because we had the right pieces in place, processes, structures, systems. And thankfully, despite our entire team going remote, close to 1,200 of us, we still managed to ship features, ship changes, introduce new products, scale our systems for the growth that happened. And now we've, again, coming back to remote work specifically, after a few months, it was uncharted territories. We didn't really know how people would adopt. I mean, we didn't know how we ourselves would do. So, adapt, I meant, not adopt. And we did adapt, and 6 months into the whole transition, we kind of became like a full remote company. So now we have this policy. We have our office open. If you'd like to come work there, you can work out of the office. But otherwise, forever, you are free to work from wherever. And it's been a year and a half, more than that. And things have kind of settled down. We are back in the swing of things, of changing, fixing, integrating regulations. So, yeah, bizarre year, complete completely changed how we work, how we think, how we communicate. But we have coped, as I'm guessing the whole industry has. So that's all I can really think of. Remote work and transition in that sense. Yeah.
Thanks, Kailash. Neeraj, how has your experience and journey been at Grow, as Kailash mentioned, in these uncharted territory?
Neeraj, you're on mute.
You're on mute, I think. You're on mute.
Sorry, folks. Thanks, Pooja, for hosting us. Our story at Grow, I think we went through quite a roller coaster ride, and when we all went down for the lockdown, entire team was working from home, and initial thought was that because it's a lockdown, so it's perhaps all we need to do is just go and sit at your home and work from there. And it was a bit easier for us because we were totally born in cloud. Everybody in Grow gets a laptop, including customer support executives. To be able to work from home is just like next day you don't come and just sit at your home and work from there. But then slowly we started seeing the impact of COVID. People started getting sick. There was a time when we had almost 30 to 40% of our entire tech capacity not available. Either they are themselves having a situation, or they are helping somebody in the family, in the relatives, in the friend circle. So we were almost we kind of decided that slow down, let's not do anything, just focus on people, just make sure that whatever we have built so far, it is up and running. So nothing special. We didn't focus much on building and shipping that time. And but in between the lockdowns, because it's been a span of almost 2 years, so in between the lockdown, wherever we got the opportunity, that is where we worked hard. Another challenge during the lockdown, I'm sure everybody would have faced, is hiring. So for us, we were a growing company and we needed to hire more and more people, more and more engineers. So to be able to onboard them is quite a different experience. Adding somebody new in your team who hasn't met you for months now and is working with you, ramping them up, meeting them, let them know different people, who owns product, who owns business, who they should talk to when it comes to any in case they're blocked. So that was another challenge, hiring, onboarding people, providing them tech support. What if somebody says my laptop is not working? Now he's sitting in, let's say, some village in some other state. So to be able to provide them the tech support, that was a little challenging. But overall, because our entire infra is on cloud and everything that we have built so far, we don't have any physical asset on premises. So going to work from home situation, adapting to it was easier, but living through it, that journey was quite different experience, I would say, and taught us a lot of things. People now have learned how to work from home and be very, very productive. How to you talked about hybrid model also, right? I think a lot of people are exploring that also. And as per the regulation, I think during these times, a lot of new regulations came, and I think that was necessary also, because in finance, I think this is a term, and everybody knows maker and checker. So there should always be a checker, and they always tell you what is the right way to build a certain product or process. So we of course did that, but not much development on the feature sides.
Okay, that's interesting to know. At least I think the people element of the situation has been the most impacted. Rohit, I think your journey in the industry has been pretty much at the start, at least, transitioning from a very traditional model and going into through a whole digital transformation phase across your career. What's your take on this whole situation?
Rohit, you're on mute.
You're not audible.
Neeraj, 40% being down is quite harrowing.
Yeah, I think that was second wave, Kailash, and that was quite horrible.
Rohit, we still can't hear you. Sorry. Yeah, sorry.
Yeah. Okay, I think tech issues, remote working, we've all gone through this. Probably we'll let Rohit join in and discuss this. But so I actually wanted to touch upon, I mean, obviously this was a very unique situation, but we know the landscape of the financial markets is constantly changing, be it in terms of regulations, like you mentioned, be it in terms of the demographic structure of, the participants. We now have, right from millennials or Gen Y, whatever you want to call that demographic term.
Can you hear me now? Sorry.
Hey, hi Rohit. Yes,
Yeah.
you're audible now. So I'll let you.
Logged off and logged in.
Okay, no, it's better now. We can hear. So we'll discuss, and then I can come back to you, and we can you can share your thoughts, your take on both these things. Essentially, the new wave of market participants are a lot more tech savvy, are a lot more financially aware than a few generations ago. There's a lot more focus on things like having, from a technology standpoint, having high availability, BCP, ensuring that the system is up and able to cater to all of the market participants. With this, these dynamics and not just regulations, right? Even in terms of introducing either new markets, venues, or financial products, what can we do as an industry collectively from a technology standpoint to ensure that we are ready and we can future-proof our business and operations? If you can share your thoughts on that. Kailash?
Yeah, so I don't really know if there's an answer to this. When you say BCP, uptime, reliability, these are all really complex and broad terms. And one of the what makes, let's say, capital markets different from other financial industries like banking is the extremely real-time nature of it. Transactions happen by the millisecond, and these transactions can cause financial loss to clients, unlike a delayed banking payment, which could be an notional loss or an opportunity cost thing. So it makes it really tricky. And the other thing is, as you'd know at Refinitiv also, is the number of layers that exist for an order to hit the exchange and come back. So the number of dependencies on critical and ancient underlying industry infrastructure, because this is a segment that has transitioned, a really old industry that has transitioned from offline to online in quick time. So it is really challenging. There's no one size fits all answer. I guess the way forward is for everybody involved, intermediaries, brokers, financial institutions, regulators, to be cognizant of these things and fix and incrementally improve their own systems in their own ways, so that overall, things just get better. That's the only thing I can really think of. Everybody has to do their bit to improve their system, so that the industry collectively, all the layers improve. Yeah.
That's a good point. I think we are in the midst of change, so to speak. A lot of systems still operate on legacy modules. There's still a lot of manual work happening, while there's the other end of it that's a lot more automated and a lot more algorithmically driven, so to speak. So tying the two together and evolving is probably going to be a journey. Neeraj, what's your take on this?
Pooja, I think technology is definitely an enabler here, and because now we can scale, you can reach more and more people. And couple of years, I think it's a mix of all the technology advancement in all other areas. For example, now with the growth of telecom, people have more access to the internet. People have smartphones, right? So I think it's a mix where you have to build infra, where you have to build technology pieces. As Kailash said, there are multiple layers if you talk about investing and order goes through, and all these layers are owned by different private public sectors, right? And adoption in technology perhaps they will do on their own pace, but will that make us grow, or will that make our business perhaps more, you can say, enable us to reach more and more customer? I think that is a different question for me, because up to a certain extent it will become a kind of commodity also, because everyone will have access to technology, be it fintech or agri-tech, right? What matters here is that how much every entity in that layer is focused on solving customers problem, be it regulators or be it any fintech provider. And I think core businesses will be core business. For example, investing as a business, there are multiple parties. Everybody does their own part while handling customer problems. But the challenge for us is still that we are a big nation, and a lot of people have access to now internet. Uh, they can do e-commerce. They can book, Ola, Uber. They can book online flight tickets, but they won't invest. And I think that is a bigger problem for us to solve. And I think technology plays an important role to be able to reach these people, to be able to educate these people. And because this stock market investing is for everyone, but still people don't realize and use it, right? So my take is that technology enables you certainly, and it's vital to the entire business. But to expand it, to take it to the next level, we need more focus on the user experience.
That's a good point. Rohit, there are a couple of things yeah, we can hear you now. That's great.
Yes, yeah.
So I don't know if you caught both the.
No, I didn't catch the second question, but I was trying to reconstruct the question with what Kailash and Neeraj were saying, but I was not able. Both of them gave very unique perspectives, so I could not get the original question.
Okay. So I was basically, we were trying to assess, what more can we do given obviously the situation that we've been in has been unprecedented in the last 2 years. But going forward, how do we, help technology future-proof the business and across various aspects, be it regulations, basically growing, changing customer behaviors and all of that.
Yeah, so I just add for the first question also, I think what Neeraj said, that some brokers were born digitally. And at the start of COVID, I was at Angel Broking, and now lately I moved on to ICS. So I can tell you there, some changes that we brought about since 2015, since I joined, we brought everybody onto the mobile, and that helped us, not needing to buy a huge number of laptops when COVID hit. So people were already, working, from anywhere, and the concept was coming in. What COVID did, some of the beautiful silver linings that COVID did, it showed management that people can be far more productive and they don't need to come into office. There are various ways that we can monitor productivity, and I think that was one of the biggest points. For example, earlier we used to see people working till 10 o'clock in the office, and we say, okay, that guy is working very hard. But today we could see the team's velocity in terms of how fast features go live, and we could see the velocity pump up because we were using tools like Jira, etc., to manage the tech team. You could see the velocity would pump up. People enjoy the fact that they do not have to spend 4 hours in traffic. It brought us so close to our families. My kid is down playing. Though I locked the door, they managed to unlock, and one kid came in. It brought us so close to our families. So COVID, I do understand there was a lot of bad things that came about, but there were a lot of silver linings, and I thank God that we were one of the few that could actually take advantage go ahead and not go backward. So COVID did a lot of things. The fintech industry, you rightly said, it was able to move forward. Those companies that were able to adjust quickly really actually moved forward. And in terms of the second question, there's lots we can do, Pooja. This is just the start. We are very, very exciting times. Zerodha's, Rolls, Paytm, they're showing us, we can actually bring in a full integrated solution to a client, from his wallet to buying insurance to your general insurance, medical insurance. How do we make these products easy? Because the mobile now is reaching everybody, right? From the tier 2, tier 3 cities, you can see where all the clients are coming in from. We need to bring these financial products to them in a very simplified manner, and they are consuming this information. They are looking at information. So the person who is able to give a very good client experience, here Kailash is right about the regulatory. They will have to keep on, allowing us, the broking houses, to get new products in, act as proper aggregators, and I think there's lots more we can do. It's just very exciting.
That's interesting, Rohit. Thanks for that take. In this context, right, I wanted to actually touch upon some of the areas, if you can discuss, which are, which you feel will spiral, say, the next wave of. I know disruption is a slightly overused term, but essentially just that, right? There's a lot of work happening in AI/ML, or even something which may not be as visible or cognizant to customers, but which help in improving internal efficiencies and ultimately improve the customer experience. And so, what are some of the areas that interest you? I would ask. Neeraj, you're on mute.
AI ML, of course, it solves very predefined problems in fintech space. But I still feel that more than AI ML. So I was going through one of the articles which Kailash wrote. I think you need to be practical and you need more common sense than AI ML. So today in our country, the kind of problems that we want to solve, the kind of products that we want to build, they need more of the common sense, more of a practical thinking rather than AI ML. AI ML definitely helps in your decision making, in sort, in figuring out what's going on with your data, but it is also limited by the quality and quantity of your data. If you have both of them less, it won't help you much, right? So definitely a lot of industries use it, and it has a scope in fintech as well, where you apply them. It helps you in making decisions. For example, your KYC document. So you can definitely apply AI/ML model to figure out a fake versus genuine document, right? So it has its own space, and I think a lot of people are using it as well. But more than that, I think personally I focus a lot on very, very small and simple problems. For example, any customer support executive taking a customer query and solving it, and if it is taking up minutes of time, can you build something to enable him to answer customer's query in a less than 1 minute, let's say? So you can, thousands of query comes, let's say, and you can save a lot of minutes by doing so. So small innovation helping operations team, helping your customers, helping your business, I think they matter a lot and saves a lot of time as well as money. Another thing that you talked about, disruption, I think with the lot of fintechs emerging, that is a misused word, because we, fintechs are not going to radically change anything in the core business, be it stock market, be it banking or anything. Fintechs is more of a, there's a core business, and then there is a, technology. If you put them together, and whoever is able to partner that in the right way, perhaps go faster than other. So it is not there to disrupt. I think it is there to expand and to make more and more people use those products, be it banking product or investing products. It's more about including more and more people into that journey. So I think that's my view on that side. And of course, I think without automation, you cannot handle that kind of scale. So a lot of automation, be it related to the movement of money or day-end settlements, reconciliations. So I think if you are dealing with millions of orders in a day, I know. I mean, in the Zerodha would be around 7 million order per day, 7 to 8, right? Uh, at that level, I think automation is a key to handle a lot of these things, and a lot of monitoring surveillance. You need to build those kind of tools. So definitely there is a role, and the combination of core services and finance, and that is why we call it fintech, because it's both hand in hand, and that is how you can build because core businesses will remain as it is. So my perception is there's no radical change we're going to bring on top of that. It mostly, enabling and making it accessible to more and more Indians is the thing that's going to happen.
How do we do that? I mean, how do we democratize technology, make it more accessible to people? Probably, Kailash, I'll get to you and we could discuss a little bit more on that, because that seems to be a big thing, right? To make the markets a lot more accessible to investors who probably haven't, who are probably aware of it but haven't actually gone down to investing in markets. Kailash,
Oh, yeah, sorry.
hmm.
Yeah, I agree with Neeraj. There isn't any specific thing or technology or set of technologies that I can think of will change anything. I mean, there is an abundance of technology, way more software than one would ever need to build anything that you want. So it's just about picking the right tools for the right job, and solving little problems incrementally. Of course, there was this big jump over the last 5 6 years from a highly non-modern technology infrastructure in this retail investment sector to easily accessible smartphone apps. And there are, including ours, there are so many options out there in the market. People can just download, sign up, log in, no physical documents. So that massive leap has already happened. Now everything from here on it'll just be incremental. Now, speaking of inclusion and making things more accessible, I think it's not really, for a country like India, it's not really a technology problem anymore. I mean, all of us offer smartphone apps, but how many people have smartphones, or the savviness to operate certain things, or uh, awareness of complex financial concepts, or forget all of that, enough money to set aside and invest. So the next big wave, I mean, whatever you want to call it, it's a more structural, systemic, societal problem than any app or technology or AI ML problem. I don't really have an answer, but I'm guessing these things will come incrementally with technology, with policy, with everything slowly. So it's really intrinsically tied to the country's prosperity, really, not really an AI ML problem. Those are just tools that help a bit. That's my view. Yeah.
Okay. Rohit?
Yeah. See, if you look at the broking industry, pre 2015 and almost 2015 onwards, the way that we are doing business is different. Okay, there was a lot of physical interaction first. Now it's becoming digital. So a lot of the brokers have realized that the way of doing business is different. The entire acquisition is different. You don't have a guy coming over to your house, talking to your product, and then taking your forms and making you sign in 10 places, right? And then he goes and fills the form up, and then your account opens after 5 days. The entire way of doing business is different. Acquisition is one thing. Now, technology, what brokers or what some of the broking houses have quickly understood is that technology is giving you tools to work in this changing environment, right? For example, the acquisition on the app is happening on the app. The person downloads your app, he browses your app, he looks at your features, he looks at, okay, what are the products you offer, then he takes a decision to buy, then he opens his account. Very different way of doing business rather than someone walking into your house and then someone calling you and saying, would you like to buy insurance? A different type of business, right? So AI ML are just tools. So you need to understand the business case. For example, I can give you some use cases that we did. Is we saw that when we offer few people different, so one person if he's offered a movie ticket, we know that okay, this type of audience, if we give them a movie ticket, they are more inclined to open their account. If this type of audience we give them a first trade free, they are more inclined to open their account. So AI ML was used there in how to onboard the client quickly or how to get him to put his first trade. You got it? So the entire way of doing business has changed now. And AI/ML, chatbots, blah blah blah. All the technology are tools. You, as Kailash has rightly said, you have to understand which tool to pick up, use, and you have to take a quick decision. If you're failing, fail fast. Throw it out, get the next tool. You're not married to any technology out there. That's the beauty. Earlier, you would have a full legacy system. If you wanted to change the system, I mean, you would go nuts, right? You would change the system. Today, you can take a technology, you can put it in, test it, don't like it, throw it out. And trust me, the A/B testing on apps where we used to show one client one screen, another client is seeing another screen, and then see who's navigating better. Full journey is for A/B tested,
Yeah.
right?
It's a
These are
lot more
things that were unheard
plug-and-play.
earlier. But these are the things that your employees or your tech guys have to master and deliver for the business. So get your business problems in and work with technology. So these tech guys now to get together. So a lot of technology guys, you can see Kailash, Neeraj, myself are actually now working very closely with the business team. Right? It's not the old world where the business guy came in and wrote one business document and then gave it to the technology guy. Stories are written in Jira. The tech guys come say, can it be done this way? And then the story is edited and then the product comes out. The testing team is there giving the input. People work flatter hierarchy. There's no huge hierarchy. It's all flatter hierarchy. So very different way. We're working in a different way now. And whoever is able to understand this will understand that in the end we're only solving the client's problem. Don't get so excited about AI/ML and things like that. You are solving a client's problem. If he wants to buy a share, if he doesn't understand English, is your app available in Hindi or not? Very simple things are that, right? That's what we are cracking. We are trying to crack the client experience using technology, etc. So in the end, he's able to invest, he's able to understand these products and take risks that he knows he can afford those risks. Those are the business problems that we have to solve.
Well, just to add to it, I think a lot more effort are being made now to expand the people, make it more accessible. Now finance was always a private thing. People used to invest, they keep to that information was not much shared. You will share your selfie on social media, but you won't share everything other thing about your finances and how you invest, what is your strategy of investing. I think it is becoming more and more social now. More and more people are talking about it. You can, I don't know if you notice how many IPO came in the last couple of quarters, and every IPO is being talked about in the social media. So now people, whether they invest or don't, but they know what is IPO. So I think it is bringing more and more awareness, and people are getting educated. You can see a lot of financial influencer on YouTube and other social media platform, sharing their knowledge, their understanding about how to invest, sort of thing, how to approach these markets, how to learn, and they're helping a lot to the first time or the beginners. You can go to YouTube. There are a lot of people talking about it. So definitely, there has been different approach in reaching out to people. As Kailash said, it's no more a technology problem. There are a lot of platforms available for a person to choose and invest through it. It's more about having a friction of how to and where to invest, sort of thing, because people don't know how to start, where to start. And I personally always say them, if you don't know, then invest anywhere you want and start with a very small amount. It is just like cost of pizza per month. So eat one pizza less and invest better, and let's see how it goes in an year. By the end of the year, probably you will gain some knowledge and assume that cost as an investment to educate yourself. You are investing in yourself, and if you are lucky enough, you will make some money also in that 1 year. So that is my approach. Rather than thinking, just do it. Start with a small amount. I think if people take it in that way, more and more people will be able to access it, and there are a lot of platforms.
I think one aspect of what you mentioned, of at least people starting with a small amount and continuing to invest. Over the last few years, I think most people who have entered the markets have more or less made money simply because the market has been in that sort of a cycle. We've actually not probably seen, bearish cycle, so to speak, since this expansion and of either new investors coming in or being a lot more digital and mobile oriented. So probably we will have to see how that goes, right? Either it could be triggered through increased volatility or whatever, but ensuring that the systems are up and running. Um, and continue to serve customers during those times. I think the last big thing we saw was several people's memory spans are quite short, so maybe lot of people who are currently who have entered the markets haven't really experienced that phase of the markets as well. So, any thoughts on that? Like, how do we, you know, is there something that we can do from a tech standpoint, or maybe even financial awareness standpoint, to keep uh, investors safeguarded, so to speak?
I think that is true to some extent because people who entered the market in the last 1 year or 2 years, I think they have seen the bull run uh, and made a lot of money. But that is not the true picture. I would say in the longer run, I think everybody who's investing must be looking at the graph also that how markets have been doing in the past couple of years, and whichever stocks they, or product they pick to invest in, and they'll definitely go through a basic analysis. But yeah, because we have been, just markets are growing and going crazy. People haven't, a lot of people haven't seen a down cycle, right? There might be one, but when nobody knows. So stock markets are like, so I can see somebody ask also, like, can you solve that using tech, where to invest and when to invest? If I could solve, then
And
Exactly.
you need to run a brokerage at all. Yeah.
right,
Exactly.
then you will be like next to God. Okay, now I
Yeah.
can tell you how to become, a billionaire, how to become rich. So that is something I think nobody can solve. And people, whoever is listening this, if anybody tells you that they are doing it, they can tell you when and where to invest. Just run away from there. Don't look back because there's no such thing. It never happens, right? So yeah, perception of current market growing. I think people understand and they are doing their basic homework. I'm hoping as a responsible platform, it is our duty to make sure that we give enough nudges to the customers whenever they are taking unnecessary risk. And I think those capability people should build and constantly make sure that we are not allowing them to take unwanted risk, or if they are taking it, we are at least telling them that this is really a risk and you really want to go for it. So they are aware. People should be aware. At least before taking calls, they can go back and look why this is a risk, what can go wrong, sort of thing, and help them, to lose their money, not to lose their money basically. So that is one important thing I think. As a tech platform, you can figure out a lot of behavioral patterns which you can apply and see if the person is just rushing and the tendency of losing money is high, so we can nudge them. And those kind of things we can do. And definitely a lot of these platforms, they have their own education section where people, they talk about all these things, how to make a safe investment, how to look it from a long term perspective, not just short cycle of bull, make some money and imagine that you will make same kind of money all the time. It's not possible. So I think that is very, very important for investors to understand. It's a long term game. Traders, that is a different mindset, I think, and that needs again a lot of experience and understanding, a lot of technical analysis. I think Kailash can talk more about it.
Yeah, I was actually going to ask you, Kailash, if you have, I mean, if you can share some stats of how you've helped prevent, say, risky trades or stuff like that through some of the features on the platform. And if there's
Yeah.
anything else you think that we can do.
I think at the end of the day, it comes to not losing money, not even saying making profits, but really
Yeah.
not losing money. So when people start losing money, right, the best looking UI, the nicest onboarding experience, the coolest technology, all of those things immediately become, they all become meaningless. None of these things matter at the end of the day if somebody is losing money. So I think, are there steps that modern stockbrokers with nice technology and platforms can do to prevent people from losing money? I don't really think so. Of course, you can help. There are lots of little incremental things that can just increase the odds of somebody not losing money slightly. But the moment they start losing money, all your technology is waste. They just don't care. They'll close the app and never come back. So it's very important for institutions in this industry, like ourselves, to be very cognizant of this simple ground reality that nothing matters if users lose money. So, what are these incremental things that we could do? Firstly, it's philosophically don't push people to trade. Recommendations inducing people to trade. Uh, so we don't do any of those things. We never send recommendations. We never induce people to trade. We don't do promotions or ads or anything that might attract people to trade. I know it sounds a little ironic because we are a stockbroker at the end of the day, and stockbrokers facilitate access. And we were talking about access earlier, right? But there is no guarantee that the access that you're giving to someone who's taking access to the markets via you is aware of the risks. You can only hope that the stuff that you're doing to make them aware of the risk, education, whatever they've grasped it. But the ground reality is that most people are completely unaware of the risks, and especially when markets go up, like we've all just discussed, markets have been going up. The exuberance with which especially young folks join the markets, and it's so easily accessible, right? You download the app, sign up, you're logged in. There's no time for understanding complex financial concepts. So it is a philosophical question, really, but there are common sense steps that you can take. There are definitive financial instruments that are really risky to trade. So somebody, let's say, with a certain account balance, if they're trying to take a trade which might have a huge impact, simple math, you could warn them and hope that they will care about the warning. I'm pretty sure 94, 95 or 99% of the people, any warning, they just dismiss it, they don't care. But you can try and do that. We also outright block certain certain instruments that we deem to be extremely risky. So there are these pump and dump social scams. You get an SMS saying this is going up in the next 3 days, buy, stuff like that. Those stocks we just blocklist completely, and you can't even trade. We show a reason saying there is an active pump and dump scam. Now users are annoyed, by the way. They don't often appreciate. They're like, it's my decision, let me trade this. But we're like, unfortunately, no, this is a policy. But with these little steps, we've been able to reduce phishing and fraud complaints significantly. Data enough to prove that the number of cybercrime complaints that come, or the number of complaints that come of financial loss investing in a dodgy instrument, these have all come down significantly because of these steps. But this is just a drop in the bucket. At the end of the day, people are still, doing F&O trades, doing investments with zero research and, losing money. But there's only so much you can do. We can only try to educate people and hope that, they have the self-awareness to learn the risks. So, yeah, that's our view, that's our approach.
That's interesting. Rohit, your take.
Yes. So I think what Kailash said is correct. So I think we have to slowly start working. I don't know how we can minimize the risk totally. I don't think we'll be able to minimize the risk because in the end you're investing in a company, right? Whether it's through a mutual fund or directly in the stock, and there can be something that can go wrong in the company, right?
Yeah.
So we may never be able to bring down the risk to zero, but we have to work on bringing down the risk. So yes, one is the regulatory body has brought in a lot of things. So now to see trading on F&O and things, you need a lot more money, So it's not very easy to do a future trade. Yes, it's still easy to do an options trade, right? Like a lottery. You feel the market is going up, or that particular stock is going up, you can buy an option. So it's like a lottery. If you're buying it, then you have a limited loss to the amount of money that you're given. Only very few people will actually write an option. So we work on minimizing the risk, and then we start partnering. So, for example, there are many people who now bring up that very complex financial report in a very simple way, and they'll show you like is this stock highly valued or not so very valued? Where is the valuation? So people can consume that information easily, and then go on making more and more educated decisions. What is going right for the company? For example, the losses have dropped, etc., or the profits have increased. So they tell you in plain English. So it becomes very easy now for the consumer now to read that report, and then someone may have told him to buy a stock, but then he reads a report giving him everything, and then takes an educated decision. Then there are the robo advisory players, who are actually giving you curated portfolios who have backtested their data. So I know many people that even if the market tanks 10%, their portfolio will only tank 5%. they're back testing everything. So in a lot of cases, people are using this tech to minimize the risk. So as we keep going ahead, and if you do a decent sort of investment, your risk will start getting minimized. There's no way we will bring it down to zero because in the end you're investing in a company. Okay, so that risk will always remain. But all these things, all these processes, the entire ecosystem is moving in a way to minimize the risk. So I think there's where we also need to concentrate on partner with many robo advisory and things like that, so that our clients can then look at a proper portfolio. And at the end of the day, Pooja, I'm telling you, I've been an investor since 2013, systematically investing. Even in even in COVID, my portfolio didn't go down so much. So
Yeah,
you will
it did.
always see the market is going after that. Look at the
Yeah,
market; it's going after that. It's not going down like this, but these ups and downs you can't time. So we are only trying to educate the investor, be systematic, be disciplined in your investment, and what Kailash has said. A lot of brokers keep telling you that this is a little dangerous stock. Look at all those tidbits, and then you can put a large part of your money in a disciplined manner, and you can run that risk with a 2%, 3%, or 10% of your capital. So we have to need to work to bring down the risk, and this is what is being done currently. And I'm sure with the regulatory bodies and brokers such as Zerodha, Grow, and ICICI, we can all now bring solutions to the clients so that if they want to minimize the risk, they need to follow the path on the app.
Yeah. It's ultimately the choice of the investor, right? In the sense that what is the information that they're willing to consume and actually use, despite the fact. I mean, that's also I don't know if it's a problem, but there's an information barrage of information available, probably an information overload, so to speak. And a lot of players are, I think, coming up with ways to make it a more visual medium, because we know people, at least the newer generation, doesn't like reading pages and pages and articles, long articles. They prefer, using visual mediums, and or like stuff like podcasts and all of this has become so popular now, just in terms of information exchange and all of that. Probably that might help increase that awareness, but ultimately it's what a person chooses to do. One interesting thing that I wanted to mention, Rohit, was I think that it's been over 10 years now, but what we saw in 2000, probably 8 to 10, that period, that cycle again, it's like a blip in the entire cycle, right? So far, and we probably haven't seen something that massive, but I don't know. That's probably something that at that time also, it was a mixed reaction. It scared away a lot of investors at the time, because people ended up entering when the markets were booming, prior to the crash. But there were very few people who were actually buying or investing or entering the markets at that time. So a lot of it is cyclical. It depends on a lot of external factors, regulations. Tech is one element of it which can enable it, but yeah. Neeraj, anything you wanted to add?
No, I think pretty much we covered, because at the end it is customer's choice how they want to invest. Our job is to help them with the right information, correct information wherever applicable, providing them right perception or image of risk, how much risk it is. Fraud prevention, as other folks talked about, because in fintech industry, any kind of security breach has a huge cost compared to any other industry. If you are into, let's say, food business, uh, perhaps people will forget about it after, because some other big news will come and people after a few days making some noise on social media and they'll forget. But fintech, it's a direct impact on the people's money, on your own brand, and it is very very important, to protect that. So of course, I think everybody invest heavily on ensuring that customers' money is protected, and all the risky decisions that customers can take. We have enough information to help them, make right decisions, and wherever applicable, as I think coaching is something a lot of tech platform they don't do, including Grow. We never say you invest here or there. We do educate people. they are free to use any platform and invest in any product. I think as long as we are making sure that customers are not losing money, this market will keep growing. Lesser people will churn out of the system, more and more people will join. And eventually, if they stay longer invested, I think it is hard to lose money in longer run. I mean, very hard. I know you might see these kind of WhatsApp messages or social media messages that if your grandfather have invested some X amount in this stock, you would be billionaire by now. And my response to those messages generally in my friend circle is, don't make the mistake your grandfather did. At least you do that now. So I think that is the kind. I mean, it's longer and it's very difficult to lose money if you're investing in the right companies. And I think trading is a different experience. It needs a different kind of understanding, analysis. There is of course a skill. There is of course a science behind it. People who are good at it, they are able to make money, but it's not all the time. It's definitely very risky.
Thanks, Neeraj. I think there are a couple of questions if you guys want to pick up. I think there's a question for you, Kailash, on the chat, on the Q&A, which says, what do you think the financial services industry is missing in terms of technology? Do you want to pick that up?
Yeah, okay. Like I said earlier, there is no specific technology that will solve any really deep financial problems. It's just like any other problem. It's a combination of existing tools and technologies. I can't think of a single silver bullet technology that will come tomorrow and solve a big financial problem. And of course, people have talked about AI, ML solving financial problems for a long time, but I think they've also turned out to be just incremental improvements. There's no big bang artificial AI slash ML system today that reduces risk drastically. Although people have been talking about it for a long time, so nothing. There is no big bang technology that I can think of. It'll just be small incremental improvements. And when it comes to access to markets, we're probably even plateauing. Like I said, the last 5-6 years have been immense. We went from clunky old platforms to instant onboarding, instant investments. Beyond this, it's just going to be incremental. I saw a comment that says that quite disappointing that this is mostly market gyan and not technology. But honestly, I mean, I don't really know what specific technology you could even talk about that will change fintech forever. It's just like any other sector, just incremental improvements with commodity technologies out there.
Thanks, Kailash. Neeraj, Rohit, any last thoughts before we...
I think if you really want to go crazy and think about it, and especially for the tech folks who don't want only market gain, I think one of the crazy idea which I thought that can we make our stock markets 24/7. Today we have a time when market opens, then there's a time when market closes. That is a very traditional way where really market opens and closes, and then there is a holiday. But if you see how crypto is traded, it is 24/7 across the globe. All the time you can buy, all the time you can sell. That is one thing. Another thing I think we can do is perhaps real-time settlements. Today in crypto, it is that way, and they use blockchain technology. We can definitely have a use case for a blockchain in finance market where you can do real-time settlements. You don't have to do. Users don't have to go through this. When they are selling from their DP, putting that pins and all, which delays the entire process. That experience can be enhanced. Definitely, EDIS is not required if you have blockchain, because that key to be able to put your equity into your account and take it out will be under your control, right? So that is one thing which I think eventually there might be certain POCs or perhaps some startup somewhere exploring those thoughts, and definitely a lot more fintechs company gonna come in coming times, and all these things will be I think under somewhere they are under evaluation. People are investing their time, they're spending their all their energy trying to apply wherever it fits in. But at the end, as it's been said, there are multiple entities, not just about one person having the entire control and able to move faster and change everything. You have to take a holistic view because you have to think about end to end. Where can we apply what and how can we change? But these are just the thoughts, ideas, which perhaps are possible, but takes a lot of considerable effort. Before that, we have a lot of other problems to solve in our market.
Yeah, I think at the end of the day, solving the business problems. We're using tech. I mean, I really don't know what we can speak on technology, but I've come from the .NET days to Java and Golang and Python. All I would tell technology is don't get married to a tech, right? Be ready to understand what tech you can use where. You know, if it's not working, don't fret, dump it, and go ahead and take up the next challenge. I mean, the excitement is in taking a tech and solving the business problem. I mean, tech alone is not exciting. That, according to me, should be the take. How do we solve the business problems? How do we bring out a good client experience? That is the fun, and then technology becomes so interesting. Technology on its own, I don't think will be that interesting. It's only interesting because it's helping solve business problems. You take a mobile phone, you take a Bluetooth, anything. It solved a problem. That's it.
Yeah.
Great. It was wonderful talking to all of you, Kailash, Rohit, Neeraj. Thank you so much. Let me check if Vivek can. I don't think we've had time to answer all of the questions, but in this time, I think this is one subject that we can keep talking about for hours on end. So.
I think a lot of good questions. Can we get a list? Maybe we can reply offline and publish.
I think there's one good question saying, will the CFO be replaced by the CTO? So my answer to that is all these CXOs will need to understand technology.
I don't think they'll be replaced, but I think maybe technical decision makers will start getting center stage.
Yeah.
Because how can non-technical people make big technical decisions that determine the future of a company, right? That era is over. If you don't let technical decision makers do technical decisions, it's just, there's no future. So yeah.
Okay, now we're getting some market questions. Huh? So, what is the sector of? These are pure market questions.
I have no idea. I've never invested or traded. So.
So, Pooja, are we taking more questions?
I mean, there are quite a few, but as Neeraj suggested, probably if there's a way for us to collate this and respond to some of these offline, we could probably try to do that.
Sure. I'll post my email ID here for the audience who are currently watching us. I'll quickly post my email ID here, and I would be the point of contact between you guys and the panel here. So I will quickly forward you all the questions, Mr. Ambosta, Mr. Nath, and Mr. Singh, so that you can take it forward from there.
Great, thank you so much.
So on that note, thank you, Pooja, thank you, Mr. Ambosta, thank you, Mr. Singh, and thank you, Mr. Nath, for taking out time and sharing your insights on how technology can be instrumental in the financial market. What are the challenges, the entire ecosystem? I'm sure it would have been a good, engaging experience for our audience as well. On that note, I would like to thank our sponsors, Razorpay, Amazon Pay, WhatsApp, in association with Google Pay, Open Financial Technologies, our digital payments partner, Cash Free Payments. Thank you so much, ladies and gentlemen.
Catapulted. I just shared in 2015 we were at 2.5 billion transactions. In 28 with China being at 7.5 billion. In 2018, India actually crossed China for the first time. In 2018, India and China were both processing 12 billion transactions. And now in 2021, as we stand end of August data, India has already processed 25 billion transactions as digital payments, with 3.5 billion digital payment transactions being done in the month of August alone. Again, for perspective, China has done about 15 billion transactions digitally on digital payments this year, 2021. US has just crossed 1 billion digital payment transactions this year. So that, in a nutshell, I guess, encapsulates the story of how payments has evolved in the last over the last decade, and particularly the last 5 years in Asia and very much in India, on the back of enabling regulations, enabling technology, and enabling connectivity, and lastly, and enabling consumer orientation to adopt all these new technologies. That's how I see it.
I guess it's a good contrast to look at, right, the way the growth has happened in China, followed by how India's UPI has transformed it. While in a developed economy like the United States, you're not seeing a similar scale, despite this, the economy being 5 times India's and almost 2 times China's. Zenon, your views on what have been the catalyst for the evolution of payments in the last few years? You're on mute, Zenon.
Sorry, somehow I got muted on my speaker as well as the app. I think my co-panelists laid out a lot of the key trends that we've seen. I mean, clearly, COVID has accelerated what was already a push towards digitization, enabled by things like UPI. I think one thing that really stands out in our mind is the race to zero in payments. When you look at card payments, cross-border payments, domestic payments, the story is no longer about the fees. It's more about what you can do once you have people using the payments. And it's really taking a page out of the Alipay and WeChat Pay playbook. Is, payments are kind of the baseline for these organizations to get embedded with individuals. And then it's what you can do on top of that. Layering other financial services like wealth management, lending, credit scoring on top of that is very important. And so I think that's really the transition that we'll see. I mean, we see when we look at various different geographies around Southeast Asia and Asia as a whole, you have the regulatory initiatives like the Pay Nows and the UPIs coming in that are creating this baseline of kind of domestic payments. And then on top of that, you have the regulators that are pushing, like in Malaysia, to get down to 50 basis points in terms of the MDRs for merchant transactions. Companies within the payment space need to think about what the next step is. And often that is the additional products and services that you can layer on top of that. I think the other interesting thing would be as some of the tech platforms get more involved. I mean, we've seen numerous false starts from players like Facebook, but when you look at it, the stickiest super app that we have globally is WeChat. And, Mashir, I know with your background in China, I'm sure that's one of the apps that you open up every day. And I was there for 14 years. So, even still when I'm in Singapore, I'm opening up that app on a regular basis. And that's probably the most stickiest app that I have in my phone besides WhatsApp. And so what Facebook is able to do with WhatsApp, I think will be really interesting as well. And I think that evolution is, the real winners are the consumers or the customers, whether that be businesses or individuals. The amount that we pay on a regular basis for cross-border transactions as an SME is dropping regularly because of services like Wise that come in with incredibly competitive offerings. And then we have the digital banks that are being launching here in Singapore and have already launched there in Hong Kong that are further driving competition. So I think, that race to zero in fees and the increased competition is really changing the nature of things. The one additional comment I would make, and part of your question, Mashir, was around the technologies that enable this. I think it's very telling that none of us really focused on the technologies because it really truly is about the business case. And I think too often in the financial industry, we get distracted by shiny objects, blockchain, AI, when really fundamentally what we need to solve is the customer pain points. And I think, when we look at the players like the Wises, like the Alipays and the WeChat Pays, I mean, there's no sexy technology on the back of that. It's just, it's a mobile app with data in the background and fundamental basics of financial technology, right? It's not relying on blockchain or cryptocurrencies or anything else. And I think that's very often we lose sight of that in the market. And so I think that the fact that we haven't really focused on that for the answers to this question is kind of telling of the role that technology plays. It's there, but it's not the primary concern.
Yeah, I guess if you take the original use case of fintech and payments,
You can go back to M-Pesa in Kenya, and that's where the kind of the fintech revolution in the last 2 decades has been driven by, right? Where it was about the use case rather than the mobile technology, and it was an innovation that Vodafone could implement. I want to come now to talking about cross-border payments. We've discussed about the growth that's happened, but if we often face three main challenges in cross-border payments, right? One, over time, it's not, it's expensive for both individuals and businesses for cross-border payments through the traditional systems for a variety of reasons, both in terms of fees as well as the spread that we see. Secondly, is we've had instances where it can be quite slow. Few transactions can take a few days. I've had instances where a business payment from mine took 3 weeks to get through. And this is, I'm talking about the last quarter, right? And then thirdly is ensuring that there is adequate AML and CFT oversight, right? So that you can track all of these from a regulatory and tax management perspective. So how do you see fintechs coming in and catering to these key challenges, right? Maybe we'll start with Paroma as a fintech. How's Revolut looking at this now that you are, across two major regions in terms of Europe and Asia? How are you looking at this, given some of the markets are very dependent on remittance as well, in particular in India?
Sure, thanks, Mushir. As I notice, Afaq from our audience has also commented saying cross-border payments is still a huge problem and a better solution is required with less fees. Couldn't be more in agreement with you, Afaq. And I think, Mushir, you've articulated it brilliantly when you said that the three major problems are around cost, speed, and AML, if you think about it. Even in India, our deputy governor spoke about how important it is to democratize cross-border remittances, and that there is a need to focus on clarity around exchange rates, time zone differences, regulatory differences, across the board, and price discovery being a concern. Now, if I were to break it down to how we look at it, okay, if we pick up cost first, what are the drivers of this cost? If you look at it, the cost can go all the way up to 20% of the transaction amount when you're actually doing a cross-border remittance, right? One is to do with the sheer complexity and management of settlement in multiple currencies through the chain. That is one of the biggest contributors to the cost. The second is the processes still tend to be physical, and the cost of that physical store and manpower to collect the documents, do the due diligence, etc., that adds a second leg to the cost, and that adds most to the timeline of processing the transaction as well. The third key element is the difference between conversion rates of interbank currencies and the rate cited by the banks on both sides. So in order to enable this today, the way it stands is multiple intermediaries are involved in the process. Right. So those are the key drivers of this entire complexity that is associated with doing cross-border remittances. And that also affects AML, is because there are multiple intermediaries involved. There are delays in relaying of remitter information and recipient information and doing the AML and fraud checks across the entire layer through which the money is moving. Now, when you look at fintechs like us, our orientation to this, one is because it is completely digital, right? There is no physical document to be submitted or physically verified. You can actually submit the documents through the app, pull it from central repositories, and you can auto-validate those documents. It makes that entire process faster than banks. As an example, we can do it in 24 hours or less, this entire document checking leg. That's one. And that does away with the cost of having a physical infrastructure, the cost behind manpower to do all of these checks, which reduces a large chunk of the cost. The second thing that an operator like us, who has presence across 32 countries already, is that we need not take a transfer fee from the residents for most of these countries we're present in. Since we're present on both legs, we can pass on that benefit of a transfer fee to customers and reduce the cost significantly. So that's the second leg which a fintech like us can actually solve for, to make it a reality, which we are within geographies, to actually do cross-border remittances at literally intra-bank rates. The third aspect is on an app like a Revolut, you can actually hold multi-currency accounts, which means you can hold accounts in multiple currencies, within which you can actually transfer whatever amount you want to keep within those different currency wallets. So then you again don't have to worry about exchange rates as you're making payments from accounts or wallets which you hold in that currency itself where you need to regularly make a payment. That that really contributes to making the process easy and consumer friendly for an individual. And an allied benefit of that is enhanced transparency. When you actually create those multiple accounts with multiple rates which are absolutely visible, and all you charge is intrabank rates, it's absolutely transparent about how the process is moving, where your money is coming from, where it is going, how it is getting converted, what rates are being applied. So these would, to me, be the key ways in which a fintech like us can disrupt this entire cross-border remittance to genuinely make it user-friendly. And the last, from a regulator's lens as well, because we're present on both sides, we're doing automated checks on documents. And we're pretty much eliminating intermediaries in the process. We can have much more robust AML and fraud checks as well, because there is one single entity who's doing the checks at both ends of the spectrum about who is the remitter and the remittee, who's remitting and who's getting the money. So it enhances significantly regulatory concerns around cross-border remittances. It reduces costs significantly for the users. And again, I see Afaq commenting, yes, exchange rates with banks is an issue. Definitely, it can solve for that and bring down costs for the consumers, and it can streamline the entire process. So we were talking about this a little while ago, like Kaustav, I think originally hails from India, now is with MIS in Singapore. If he wants to send money back to his parents who are still in India, for example, you can actually completely streamline that process, make it transparent and easy and instantaneous. Likewise for me, I have a nephew studying in NUS in Singapore, right? Today, if I have to just send him some birthday cash, I would think twice, because it has to be like really big for me to go to a bank, take on the entire headache, take on the entire cost to do a transfer. I'd probably do it when my son goes for admission and pay the fees, is when I would take up that kind of a challenge. But a regular thing like sending my nephew a birthday present of some cash, I wouldn't think about doing today. But when a fintech comes in and solves all this, I have a sitting wallet with Singapore dollars, I can just send him something to celebrate his birthday. That's the kind of revolution that fintechs can bring into the cross-border payment space, and we are genuinely looking to bring in that revolution as well.
So I want to bring in Kaustav
just,
here because
just,
talk about prompts, right? Yeah. So go on, Kaustav.
I just wanted to add on to what Paroma was saying, and then Paroma, you're bang on. And I just wanted to give the same similar kind of experience I had in 2018 when I moved back to Singapore. I had to send $200 to a friend in Philippines, and I paid $40 as a transaction charge. And it took 5 days, multiple phone calls. And then still we had no idea where that money went, and ultimately it got credited. So I think you're bang on in saying that the biggest issue from a consumer point of view is, one is cost. The first thing I would look at how much I paid for that, doing that transaction, and second is the efficiency of doing this. Whether I have to go to the branch to go get a transaction done, fill up multiple forms to do this. And if you have to flip this back to a FI or a bank or a digital bank, they also has to go through exactly what you said, that it's a multiple hops. My $200 were Sing dollars were converted into US dollars, then it was converted back into a Philippine peso, and that's where the rate which I got when I did that transaction. So these are the issues which I think fintech has done very well in the last few years. And the only thing which I felt, Parma, like we need to have, if I have to send that money, I still need to have a wallet in Singapore. I need to have a wallet in India. But if I don't have to, my mom has a State Bank of India account in Asansol, right? And she need to get that cash. How do I do that? And that's where I think, and sorry, Said, we are front running this conversation, is that's why I think you need to have those domestic rails get connected. And players like Paroma can work on those. And I'm quite sure still, if I don't know what is the transaction charge you're charging for this kind of transaction, but it can lower down because some of these checks the AML checks, which we've been talking about, the sanction checks, and it doesn't go away whether you do a cross-border or you do a domestic transaction. If that can be done and automated at a rail level, at a retail payment rail level, then the work for fintechs like Parama or Wise or any other banks makes it even more easier, and that benefit gets passed on to the consumer, so they get the best of rates while when we do something like this. So I think that was the genesis when we actually looked at doing the Thailand connectivity, and now we are moving into the India connectivity as well. So I can't hear you, Syed. Your
Mushir, you're on mute.
Sorry, I think my audio got a little bit of an issue.
Yeah, now it's okay.
Yeah, sorry. You make a good point, and I'm going to actually help you build on top of it, and I'll come back to Zenon on the next question there. But we are seeing the boom. MAS is at the heart of this connectivity for national payment rails. You started with India, now you're talking with Thailand and a few other Southeast Asian countries, and we hope this can be something that goes, in multiple jurisdictions. Costa, would you want to talk a little bit more about the vision behind why MAS has been doing this? And what are the complexities involved? Because many people don't understand that complexity, especially when it comes to the conversion or between the two currencies. If one is not free floating like India's isn't, then it becomes even more complex. So, we'd love to hear more from you on that.
Sure. I think the vision for MS it's quite simple. Obviously, it has to be a consumer-centric vision where we wanted to kind of, if you kind of step back, 2016 when we went into this evolution of this the domestic payment retail payment network, which is the FAST, and followed by a Pay Now, which is the proxy-based system to transfer retail money within the country. It's something similar to what UPI has done as well. The convenience which was brought in, like in 3 clicks, I can transfer money to my colleagues or anyone within Singapore, and it is fast. It's instant actually. It's secure. It is cheap. There is no transaction fees being paid. So what more a consumer would want to do a transaction something like this? And it's so efficient. It's so simple and intuitive. Now, eventually, I think the pain and what we talked about for a cross-border transaction is that how slow it is, how costly it is, how complicated it is. The thought process was, why don't we connect something like, say, PromptPay was offering something similar in their domestic market as well. So the thought process was, why don't we connect both the system and give a same kind of experience to each other's domestic user when they transfer money overseas. It was a very high level thought. When we started peeling the onion, we understood that it's much more complicated than what it sounds. The first thing was that there was a lot of technology related issues which we need to, because though every country has their own set of retail payments network, but everyone has their own specifications. So one was that Thailand was on a 20 seconds turnaround. Singapore was on a 15 seconds turnaround. The VPA, which is a virtual address, which you need to kind of look up for a mobile number, that was centrally stored in Singapore, and whereas it is decentralized so those are the challenges. Also the message formats. I mean, somewhere in ISO 20 or 22, others are not on ISO 20 or 22. So there is a lot of asynchronization which is there when we start getting into more details of each of these countries' connectivity. We were able to solve most of it. And I think most importantly, what we were able to solve was also the fact that there was the legal and the governance framework around the dispute handling framework. I think those are very important and can be carried over irrespective of whichever market which you go to. Then when we decided to kind of move on to India, I think one of the things which before we move to India, I want to share with you, Mushir, and the rest of the viewers here, is that we went with, we kept a transaction limit of $1,000 per transaction. And surprisingly, we found that that when we went live in April, the indicators were like the numbers were moving very, very fast. It was what we expected. It was at least 20 to 30% growth month on month we were seeing on these numbers. But what we saw was that transaction value was kind of going down from, it started with $500 and now it is around $250, which actually shows it's a behavior shift which has happened. And these are all migrant people who have moved from Thailand to Singapore. So they started trusting on this system. They don't have to worry about paying that extra cost. So what earlier they used to do is to accumulate that money and try to transfer once in a month, right? And here it is like what Parama said, that I need to send something to my dad tomorrow because it's his birthday. I just need to send that amount immediately with a very less amount, and it goes instantly. So these are some of the big plus which we are seeing. Plus also what is there is that the money is moving from the alternate channels, right? There are a lot of alternate channels of money movement which still exist in today across borders. So once this is becoming easy to use and it's so cheap to use, those flows are now moving into the banking flows as well, which is better for an AML terrorism financing point of view. It's much better to control those and seeing those flow coming through a legitimate source. So these are some of the learnings which I felt was I wanted to share with all of you.
This is very, very insightful, and I think this is the message that a lot of people don't get when you're looking at your phone. It's like, why isn't it happening right now? Because in all, majority of the countries, the national payment systems are there, right, or jurisdictions, and real-time payments is now a reality for domestic payments. So cross-border is no longer only technology; it's just a matter of time, I would imagine, right? And Zenon, I'm going to bring you in here. You have a deep expertise and understanding of how these super apps work, right? And we spoke about without naming WeChat, we spoke about WeChat. I like to call WeChat Hotel WeChat. You can check in, but you can never check out, right? Especially in mainland China, in terms of how embedded they are. We've now seen that model being replicated by not only Grab and Gojek, but also the likes of Paytm and others are looking at moving towards it. And on the other side, technology players from Reliance Jio, Facebook, Amazon maybe are all moving towards that model. I want to get your sense in terms of how do you feel, the banking as a service, payment as a service concepts that are coming through. How can big tech firms leverage off that for cross-border payments? Google has been trying to do something like that, and I also get Parama's view on Revolut post this, but we'd love to get your sense from a regional perspective. How do you see these big techs leveraging of technology provide cross-border payments?
Yeah, it's a really good point, and I think one of the biggest challenges for these companies is where this sits on their strategic roadmap. For a large tech firm, and we've seen this with some of the players that are moving into the space now. I mean, if payments isn't part of their DNA and part of their strategy from the very beginning, moving into that space is challenging. It's difficult to get the bandwidth at an organizational level to really focus on it and do the steps that are needed. I mean, we've seen a lot of false starts. We've seen companies kind of neglect to look at the local context they're moving into, neglect to think about the AML concerns and the KYC concerns from a lot of these terms. And so I think, the successful ones are the ones that see it as a strategic imperative that's embedded throughout the organization. Now, that being said, when Alibaba launched Alipay way back in 2004, it was designed to solve the very small pain point of trust in e-commerce. I say small, I mean, it's 1.3 billion people, but at the time it was only 1.2. That trust in e-commerce was really the initial pain point that Alipay was seeking to address. And I think at the time, Alibaba had no idea that they were going to create, as smart as Jack Ma was in creating this, had no idea where Ant Group was going to go in the future, nor did he probably know about the IPO being canceled, et cetera. But at the beginning, at least, they didn't have a view of where that was going. And then very quickly, they kind of built the strategy around that, with payments being in the baseline. So I think, beyond having a sticky platform, really having that be part of the long-term strategy and where that's going is very important. I mean, just enabling payments on a platform is fairly trivial now, even if it's not enabled. I mean, you have the example in India there with using links within WhatsApp. You know, a lot of the e-commerce and social commerce there happens through chat as opposed to through a dedicated e-commerce website. And so there's been a lot of businesses that have done really well on the payment linking within the apps to be able to click through to a payment. Which is, you know, in places like India and Indonesia, that's very important. So it can be part of the offering to enable other products and services, but I think really the successful companies are the ones that have figured out where that fits into their strategic roadmap, because, you know, everybody wants to be a fintech, but not everybody's going to be a fintech, at least a successful one.
A bit of butterfingers with my laptop today. Parama, how are you seeing Revolut now leveraging off it right now? You're looking after the Revolut India operations, but you do have the operations in Singapore as well, and of course the home country in terms of UK, where there's a significant amount of remittance that comes inward into India from there. How would you look at that space? Is it something that you're exploring actively?
So, Mushir, since you started and Zanon, you were talking about it from a banking as a service or payments as a service lens, we at Revolut actually look at it a little differently. I think large tech companies, like you shared the names of Google, etc., might look at it as a service because that's not a core product offering of theirs. And that is a double-edged sword, as Zanon also pointed out, about obviously the ability to access their already built customer base from some other business model. But the other thing about focus on this kind of a business to really make it work. And I will pick off on the latter to go and say that we're actually not looking at it as a service. We're looking at it as a product that we ourselves get licenses for and bring it to customers in a focused and dedicated manner. And I'll tell you why, because the stuff that we spoke about earlier, right? Whether, let's say, the cost leverage, right? When can you pass on the entire cost benefit to the customer? When it's your own product. When you have manufactured the product, you are actually conducting the rails of doing the transaction on both ends, is when you can genuinely pass on that benefit to the customer and not have your business model break. The other way, if you want to pass on a benefit to the customer, is to take out money from deep pockets and give it. But in that case, as we all know, the business model itself breaks and you bleed on the unit economics if you intend to pass on the benefit to the customer when you yourself are not a manufacturer of the product and you're sourcing it, let's say, from a bank or a payments company, etc., and layering it with your digital access. So that's kind of the way we look at it. And that is the essential difference between the way Revolut operates in multiple countries and we intend to operate as well, to actually build the solution, get the licenses, and give the benefit to the customers ourselves. The second bit that comes on it is an area around customer ownership, and the customer ownership has two legs. In a banking as a service kind of a model, at the end of the day, who owns the customer? Is it the tech giant who has acquired the customer, or is it the bank or payments company who's offered the product to the customer? There are breakages that happen there. Because who communicates with the customer? Who solves a problem if a customer problem happens in that case? Who takes on the onus of ensuring that the right checks and verifications are done on the customer to take any liability of choosing, let's say, of an AML risk transaction? All right. When you are doing it yourself, even that gets consolidated. The customer is clear on who's giving them the product, who can solve any problems that are happening with the product. And also from a regulator's lens, the buck stops there. About that entity also doing the checks and knowing who the customer is that they're enabling the transaction for. So I think these are twofold benefits. One, customer facing in order to offer the real benefit to the customer by manufacturing your own product. And the second, from a regulatory and a banking lens as well, to be clearly accountable to ensure that the right experience is given to the customer and the right controls are put in place. That's how we look at it, Mushir.
Thank you. I'm quite conscious of time. I want to see if we have any questions that we have. Chance to explain. I think we've done okay. I wanted to come to one very interesting and very important element of what we are seeing in terms of central bank digital currencies. Right now, just this week, we had Bank of International Settlements release their report on multiple CBDCs, featuring more so Thailand, Hong Kong, UAE, and made in China. But we also know with MAS, Project Dunbar is in the works. So I wanted to get a sense of your views on the CBDC world. I'll start with Zenon to give us a little overview of what he sees as how CBDCs could factor in for cross-border payments, and then we'll come to Kaustubh in terms of giving an MAS view before we close.
Yeah, thanks, Bashir. I think obviously the Chinese eCNY experiment is one of the most advanced globally in terms of central bank digital currencies. And despite the reports that the PBOC has put out both in English and Chinese, one thing that remains very unclear is how the eCNY would be treated cross-border. That is a big question mark, not only for the general public, but I think for the PBOC as well, the People's Bank of China, the central bank, the sponsor of the CBDC project. And I think that's where the complications, especially for countries like India or China, where it's capital controlled. When I first got to China in 2004, there was a cafe I used to go to, and there would be a guy that would come in with two of these large envelopes, purses of money. And one was Hong Kong dollars and one was renminbi. And for the whole day, he would just move back and forth between the two currencies, charging a little bit of interest. And that was his way of avoiding the capital controls that individuals face. And so, conceivably, I could be here in Singapore, I could have a digital currency wallet, a friend could have a digital currency wallet, we could exchange and we'd be evading capital controls. So it's very sensitive in terms of how this is going to be handled. And I think, we spoke to the BIS in the past couple of days after the release of the report. It'd be really interesting to see how this mBridge infrastructure really starts to facilitate those cross-border transactions, because I think there's still a lot to be decided around that. I think what is really interesting, knowing that we're running close on time, is the stable coins. I mean, the ability, and we've used that for some of our corporate and personal payments, using a USDC to move money around the world. It's very cheap, it's very fast, it's very traceable and transparent. And I think, for cross-border payments, at least initially, that stablecoin initiative is really the thing that we find very interesting.
Kaustubh, your views?
Sorry, I'm having difficulties to remove the unmute button. So I know Gautam is there and then we need to wrap up quickly. So I won't take much time. Let me talk about, there are four basic problems we are trying to solve on DLT technologies and CBDC when it comes to cross-border payments. And some are in a different state of evolution. Some of them are ready and can be actually used in the Malaysia connectivity or the India connectivity as well. So the first one is the cost of operations, which we are working, which is the project Woobin, which is basically it's a kind of a reducing the number of intermediaries and kind of taking out the operating hour limitation. That's for cost of operation. The cost of compliance is where we are looking at Pateor, and this is already in a production state. We are leveraging DLT technology for enhancing safety and the risk. Cost of integration, which is where you touched upon, Mushir, was that Project Dunbar. We are looking at how we can have multilateral settlements, and this is where I think is most important when it comes to cross-border, because today what we are doing is a bilateral rail. Once we look at a multilateral rail, this will become a very important initiative, and we hope to solve this through kind of a CBDC solution. And lastly, the cost of FX, which is more efficient, having a more efficient liquidity management. We are working with Banque de France and making sure that this liquidity pools and automated market markings are kind of there. So this is how we are looking at on a comprehensive way tackling the CBDC and DLT and leveraging them in the cross-border space.
I know we are on standby, but I want to end very quickly with each of you just giving me, one sentence in terms, or two sentences if you want to take, but very quickly in terms of what would be your most the thing that you're looking forward to most for cross-border payments in 2025. Paroma?
Okay, you want me to start? I think we're at close of time, so very shortly. I think since we were on the topic of CBDC, and I noted a lot of questions from people here also saying, what if there is a global unified currency? What happens to cross-border payments then? I think even from India, including the RBI and the Deputy Governor, has been a part of saying that sustained efforts are underway even here to evaluate the application and viability of CBDC. And Zenon and Kaustav have also articulated the challenges and even from a viability lens, the cost lens of doing a CBDC. From my lens, there are basically three things that I would wish for. Yes, a cross-border digital currency, which is multilateral rather than bilateral. But the values that I will stress on is safety, to ensure that we create the rails which ensure that any such transaction is safe. Second, the efficiency, to ensure real-time or near real-time movement on those rails through the currency. And the third, and to me, quite honestly, probably the most important value, is that it holds constant value. Because unlike today, where there are private cryptocurrencies in various markets, the value keeps fluctuating. And therefore, it is very difficult to offer transparency in a cross-border payment scenario. So to be able to create a digital currency that holds constant value is something that I would put a lot of stress on. So if we can create, we are doing what we can from our end to create a cost-effective and efficient means of cross-border payments. If we can layer that on with a multilateral unified digital currency that also holds constant value, is I think where the next level of disruption in cross-border payments will happen, is my last 2 cents on this one.
I know we are really short of time, but Parama, whatever you just said, same for my side, but except only one thing which I would want to add here is interoperability. I think an interoperable system, it's something like what we use today for a phone call, right? So we really don't really need to worry about who is there and which network or which service providers. And despite that, we are able to make a telephone call across the globe. So that's the similar kind of interoperable system across the globe to transfer money, plus whatever you just said, Parama, all those things of safety, cost, and instantaneous process.
Zenon, last word to you before we hand over back to the organizers.
Yeah, and I sound like I might work for Paroma's employer Revolut, but I was speaking to one of their team a couple of days ago, and it resonated with me as everybody having a financial account. I think that's, beyond our viewpoint, but bringing people into the financial system, leveraging some of these technologies to make sure that everybody is included and economically empowered is where I hope we are 3 or 4 years from now.
Perfect. Once again, I want to thank three of you for very deep and wonderful insights. We could have gone on for a couple of hours more on this conversation, but we have limited time. I want to again thank the organizers of GFF for having us here today, and I'll give it back to our host to take us forward from here onwards. Or have we lost our host?
Yes.
Garima, over to you.
Thank you so much, Mr. Said, and thank you to all the panelists. As you mentioned, we could go on and on about this topic, and it was going on wonderfully, but we had a hard stop, unfortunately. And thank you again to the panelists. Thank you again to the delegates for being a part of this session. For everyone, here's a chance to become a proud owner of the RuPay on the go. Basically, if you visit our NPCI booth, which is on the platform, and apply for the complimentary RuPay on the go device, you will win some exciting prizes. So please do go and visit, and we will be back with yet another exciting session shortly. Thank you very much.
Thank you.
Helped us not just reach out to customers in the right tone and the right manner at the right time, but also reduce our risk in a very turbulent environment by offering customized, personalized offers on an automated basis to every single customer in our book, which was in the millions. So it was a really, really great time to demonstrate the power of a data-driven approach to customer service. We could never have called every single customer at that time and helped them through the moratorium. So we used AI and technology to do that in an automated way.
It's brilliant. Thanks, Lizzie. There's contrasting when you look at overall, earlier we used to call BFSI industry, where banking, financial services industry, where it's very traditional, century old industry, more of calling. And it's so glad to hear
that it's probably not scalable to call individually, and probably not convenient also to the customers to receive calls. Using technology to solve and provide scale is phenomenal. Thank you, Lizzie, for providing the great insight. I'll move to Abhishek. Abhishek, personal, from the way you guys are really emphasizing the space, Flexi Loans has a very impressive vision of not just being lending, but also you have a platform for lending, right? And I think that's what I've read in the recent interview. And how important CX in the space of being a differentiator, especially you have a platform, you compete with your peers, and also at the same time you have to provide your own value system.
Mhm.
How important CX plays in this entire ecosystem that you operate?
We focus on small businesses and SME lending, and if you look at the context of it, SMEs typically are far more difficult to underwrite, onboard, and collect from, purely because of the fact that they're not as digitally savvy, and also a lot of digital channels don't really work for them. Whether it is eKYC rails, whether it is about NSCHs, a lot of us don't know, for example, that the electronic NASH doesn't really work on a current account as effectively as it does on a savings account. So there is a lot of digital rails being built for MSMEs right now. But coming to your question about user experience, I think, and let me spend a minute on the platform itself. On this platform, we've got 40 ecosystems of the country who is effectively hosting sellers or merchants on their platform, and they want to do lending for them. And then there is this platform which effectively takes all of these customers in, processes them, onboards them, underwrites them. And on the other side, we've got about 12 lenders, one of which is our own NBFC. And to your point about competition between us and them. But if you keep the customer at the core and look at it from a user experience perspective, then it becomes very simple to understand. Customers want one of the four things. They want money fast, they want money cheap, and they want money with a good experience, trust. And there are different pockets in the country. Some people would fall into segment 1, 2, 3, or 4. But for a fintech like us, the reason to be is effectively experience and speed, because we can never have the cheapest cost of capital compared to a bank. We can never give the highest exposure that probably a bank can do, depending on because of our cost of capital constraints. And so time, speed, and experience actually become the most important thing for fintechs like us to exist in the first place. And then, of course, it builds from there. We've seen primarily if you give a good experience to a merchant, they would typically, that leads to trust. Trust leads to loyalty. Loyalty leads to repeat loans, and the cycle builds, because we are all doing short-term loans, right? You're on a treadmill. You're every day you have to do new loans to grow your book. And if you have a leaky bucket, then effectively it means that you have to grow faster, you have to do more loans, and it's never a sustainable business. So whether it is consumer lending or SME lending, and we've got multiple parties to please. We've got partners, we've got customers, and we've got lenders. But if you keep those same two principles, that we will do the loans in the fastest manner, and we will always give the best experience to our partner, customer, or lender, then I think as a network, it starts to play out. And we are seeing that if we've invested heavily. We are a zero branch, zero DSA, zero agent company, 250 people sitting in a nice office in Bombay, servicing about 15,000 pin codes in the country. These pin codes contribute to about 80% of the demand, SMA demand in the country. It's an incredibly difficult business to build, especially on the MSME side. But we've invested in user experience. Agility, of course, comes naturally to most fintechs because of the fact that we've started technology first. And the results are you can already see that as MSMEs actually, we think of them as digitally savvy. But today, if a customer knows how to use a WhatsApp and can upload or send a document on WhatsApp, that's all the digital savviness you need to actually onboard them and give them a nice experience. So the lines are blurring very quickly in what is a good user experience, because user experience is also being redefined. When we started our business, having a mobile app was the best thing. That was user experience. If you could build a mobile app. Today, nobody wants to download a mobile app to get a loan. They want to get a loan on WhatsApp. They want to get a loan through a chatbot. And the frontiers are moving so fast that I think we will see different dimensions of user experience being created in the next decade.
Absolutely, Abhishek. I was just looking at the entire panel when you said WhatsApp and how easy it is, digital savvy. I see Lizzie and everybody else like, yep, we hear that, we see that. And very much, in fact, when I was giving a bit of a quick stat, I think WhatsApp is one channel grew significantly in the last year and a half or so in India. I think it's always prominent, but businesses driving experience through WhatsApp and tapping into, and also a little bit of adding to there, actually, when there's a bit of issues around, the policies of WhatsApp. I think how quickly the Telegram and as well as things like Signal, there's so many messaging channels that I think customers today are like I said, expectations changing. So they would like you to be operating in their preferred channel than they should come to your app. I think the dynamics have changed very quickly. And I think being messaging first, either it's WhatsApp, any of the social messaging channel to drive customer engagement, I think it's probably the best, because that the tonality is the softest. It just is where those customers are talk to their friends and family. They're always on that channel. So great call out, Abhishek. Thank you for that. And you called out MSME. And if it comes to MSME, and I can't think of anybody else than India Mart. Amrinder, I want to pull you in here. Now, maybe I should hold on. Should you say India Mart could be probably what, big daddy of MSME, and so just going in there, I think it's a forefront of bringing SMAC, right? India, that's what India Mart does. My question is actually, basically, can you share some insights in the place that you operate as India Mart? Customer experience, and how do you deliver seamless experience when you have like a marketplace situation like India Mart? How do you play with different parties, and how do you provide a seamless CX?
It's a very good question, Katie. And I take off from where Abhishek left, that even using a basic messaging platform is being digital savvy for SMEs. So they are what we think of as digital savvy. I mean, there's so much of distance to be covered. But as India Mart, we've been bringing them online, and it's a platform that generates leads and business for them. So that's the first introduction to digital. I mean, if you're getting business online, then you start believing that more can be done on it. Especially from the topic that we have today, if you look at from fintech perspective, I think the first financial interaction that a seller has is they want to pay their subscription. And Abhishek touched on the e-natch. The changes that happened with the pandemic, one thing, Abhishek, we did overnight was that we moved all our subscriptions, and majority of our new sellers on board are on subscription purely on e-natch. And it's been smooth, and that's like first digital adoption, that my payment is going monthly and it's going all online and it's seamless. That's starting from there to building an integrated experience. I mean, when it comes to messaging, it's messaging with a context. You want to message to a customer and you want to interact with the customer. You want to call a customer. You want to have a place where you can figure out, put some reminders. You can put some notes around it. You can have your missed calls. You can have various team members added to that chat conversation, have a history of chat. So I'm proud to say that that's another platform that is very well integrated at India Mart, which our sellers use. I mean, 90% of our sellers are completely onboarded on using that communication come CRM platform, which is absolutely free and which connects them with the business. And the third part of it is payment. So there again, and lending. I think the beginning of that is that, can I get my customers to pay me online? I mean, it's not large payments. Large payments happen in different ways, but small products, small payments, 5,000-10,000 rupees, 20,000 rupees payment. How do we enable that in the journey itself? So that's where we provided our customers an integrated payment solution where they don't need to do anything. It's just a simple link that they pass on to the customer and customer pays. Now that itself, building that product, making it seamless, making it as part of their journey is what helped in adopting that product, where they started getting payments from their customers through this channel. The next part, which all of us are trying to do, is how do we get to lend to them? I think there's a big journey because all of them are not online. All transactions are not happening online. But a lot of business is being done online. I mean, when I say India Mart sellers, then India Mart sellers are consuming leads, they are talking to customers, they are sending, collecting payments. So a lot of data is getting generated. So we are doing work around personalization, similar to what Lizzie said, that AI ML is important because that helps you to personalize, not just what you want to see, which customers you want to meet, both from buyer and supplier side, but also what is your history, what kind of a business you've been doing, how long you've been with IndiaMart, what kind of categories were you dealing with, what is the size of transaction that you're doing. Basis that, we need to start looking at how we can lend to this segment rather than purely looking at a transaction flow, because that won't happen. It's not Amazon that you have pure transaction and you want transaction stream start lending. So how do we build lending on top of a business where some of the things that business has taken online are there? That's what we are really building. I mean, on the platform, that's our vision, that can we make IndiaMart the central platform from where any seller can actually access credit very easily. And it has to be frictionless. I mean, you can't have one separate KYC going and then another bank account coming and another credit check coming and then saying that, oh, after all this, out of 10 guys, only 2 will get, and it's only going to be 50,000 rupees. So that's the problem that we are solving. I think that's where IndiaMart is going to play a central role, and we've started building our platform to enable that. Thank you.
Wonderful, Amrinder. I think you touched upon some very important aspect, and it's very clear with just about three panelists talking about the importance of convenience, customer experience, and also personalization using technology. I think a lot more to learn, but before we delve into the data-led conversations and stuff like that, let me just bring in Subrata. I think, Subrata, you must be thinking, Amrinder and everybody talking about the big sector, even Abhishek talked about, how do you go have accessibility to tier 3, tier 4 inclusivity, I would call a financial inclusivity, because banks and all survive, maybe go to tier 1, 2, 3, not 4 and 5 and beyond. But I see that, Agro Capital basically focusing on primarily MSMEs and tier 3, tier 4 cities. And especially, I want you to just give you a different take on, because your targeted segment is very different, does it really differentiate? You have to have a different strategy for customer experience because the technology channels and communications used differently. Do you need to adopt a different techniques there?
Great question, Katie, and thanks for that. I mean, some great insights we have heard already from Lizzie, Abhishek, and Amrinder. I try to add our perspective here. And at Agro Capital, we say that our mission is to solve the unsolved needs of SME sector, and SME is a large sector which is not formally served. The credit penetration is little lesser. So our perspective, by the way, we are present across 9 top cities of India. And at the same time, we are present across 40 branches in tier 2, tier 3, expanding to 75. That's our footprint. We also serve through our partnerships and alliances, as well as our supply chain vendors, supply chain ecosystem network, 130 plus cities across the country. So that's our footprint. And in terms of product offering and customer segment, we cater to the prime target segment with the 5 crore secure ticket size, down to a small retailer in a small sized MSME in a tier 3 location. So from that perspective, and coming to a question on CX, I'll give a sense on how we approach it, Katie, and I'll talk specifically about the tier 3, tier 4 at the end. So the way we look at it, the customer satisfaction and in turn the experience, that is driven by 2 things. Number one is how are we able to serve the need of the customer? Are we able to give him what he needs? And this is lending. So what is the practicality and what is the ease of the due diligence process? This is a very important point for us, MSME. The second point is the convenience of the transaction. In other words, what is his experience on the platform, where much of digitization comes into play. Our whole approach to creating a great customer experience stems from point 1. And to articulate this, I will highlight a few things across the customer spectrum. So at the top of the spectrum, we have the prime customer segment, who are the target segments even for the large banks, who need very quick approval. They know they're chased by everyone. They need low rate. They need the money that they need. Usually, this is the intermediated transaction. For them, our solution is very quick approval, a 60-minute decision. All input data is coming digitally. If they have a request that the default sanction is 4 crore rupees, but they need 20 lakh rupees extra, we have a well-defined policy framework where looking at a certain set, we can accommodate such requests for this set of customers. The next segment is a near prime or emerging corporate segment where COVID has impacted their business. And by conventional means, they're finding it difficult to raise funds immediately, but they need funds. We come in with a product where we are able to see the banking and the GST data digitally, and underwrite not their current position but their future potential and say that, hey, we are able to service your need. Coming down to the supply chain ecosystem, where we have a small supplier to a very large corporate. The small supplier to the large corporate has a very strong business flow, which is very consistent over a period of time. He wants working capital to fund his invoices. However, he is small so that he is not yet under the coverage of the credit scheme arranged by the large anchor. We are in a position to come here, use data analytics, machine learning, and say that we understand the continuity of your trade flow. We are willing to give you a funding, even if you're not covered by the anchor directly. Anchor-led funding is the conventional way of supply chain finance. The other thing is a small MSME in any corner of the country backing a purchase order on the GEM portal, government e-marketplace. And through the GEM Sahay program, we are one of the wave one lenders and live on disbursements. A small business has got a purchase order. For him, if he gets the financing, he can service the order and his revenue grows afterwards. We cannot see a trail of revenue, but the financing is a means to increasing revenue. We have a product where we can service the PO, the purchase order. And of course, lastly, coming to the tier 4, tier 3 retailer, where we go to him and we can have a GST banking product, but it seems that he doesn't have a bank account where there is a lot of transaction. There is a sparse bank account where much of his transactions in cash. But here we say we have sub-sector level customized assessment templates where we can go to him and we can still assess his business, give him a 15 lakh rupees loan against his house or 5 lakh rupees unsecured loan. This entire gamut. So this is at the heart of our customer strategy. MSMEs have various needs. MSMEs' nature of business and cash flows is very different. It is an absolutely massively heterogeneous segment. We want to go to the customer with the right template, and not apply a generic template. The same question is, how do we render it digitally? So we are a deeply data analytics and technology focused company. And when we started pre-COVID, also we had a technology stack which could give a 60-minute decision for all kinds of loans. We have augmented that. We have one customer-facing application for each of these business lines and the target segments I told you. We have pivoted greatly in many ways. First of all, which started as a rules automation, it has now become a full-fledged digital stack post-COVID, which can do a video PD with the customer, video conversation. It can do documentation. It can do NAT registration to whatever extent that works. That has been done. We have invested heavily in the power of data analytics. We cannot say enough on that subject, but we have a patent file first generation set of scorecards. We have now moved to our own homegrown second generation scorecard, which takes bureau and banking into account. Very soon we will see bureau, banking, and GST come into the fold. Even in our minds, that's going to be the next phase of evaluation. All of this comes through a digital stack. There are numerous permutation combinations, even on the technology front. We often, and of course, a lot is said about building the stacks, but even within an umbrella framework for a technology stack, there are many variations, depending on which channel the lead is acquired from. Am I acquiring it directly through the branch, or it is coming from the GEM Sahay through an integration, or I am integrating with somebody like Abhishek and doing business, and that's another route. The overarching umbrella theme remains the same, but the technology differs. So I think we had been agile. I think these are the two areas of focus, and so starting from the product proposition to being nimble and agile in terms of data and technology. I think this shapes up our customer experience strategy across all segments, and more importantly, as we go to the smaller MSME segment, but the need of credit is the most.
Thank you, Subrata. I think you touched upon being agile and agility. I'll come to that shortly, but thank you for the great insight. Sandeep, let me bring you to the conversation. At the beginning, I said, probably you guys also will agree, it's a digital first virtual everyday world. For fintech, it's a beautiful sweet spot, right? So because you tech first, customer first company rather than branch first or physical touch first, especially for the business that you're operating. And how did this impact, especially digital first, for the fintech industry? I know you worked across multiple businesses, managed very large portfolios before you started on the journey today, what you're currently on. And because you moved to fintech industry, do you think customer behaviors have changed from a traditional banking industry to fintech industry? Second question there, actually in the same way, do you think being in the fintech and in the digital era, has it really helping you to propel the growth revenues?
Well, Katie, thanks, and good afternoon, everyone. Okay, just to give you some brief background about us, So I started on this journey in 2014-15 when we actually acquired a small housing finance company and built
Sandeep,
this.
sorry to disturb you. I think your camera is not on.
So there's some issue, unfortunately, with
Okay.
my tech in terms of
Okay.
security
All right.
restrictions for this particular app.
Okay.
So
Ah,
so I didn't have the bandwidth to get that open. Okay, so just to give you some background, yeah, essentially, when we started out on this journey, we had a few choices to make. We were a late entrant in a very heavily dominated market in the prime segment and a significantly underpenetrated market in the financial inclusion bit. And if you look at the bane of consumer lending in India or mortgage lending in India, it has been, if you look at the prime segment and the near prime segments and the emerging segments, small ticket sizes, very intrusive lending, very painful, very high on OPEX, and very high on not just credit risk, but market risk, operational risk, and scalability. And that's generally the challenge with all emerging markets. So when we started on this journey, we actually figured out that we'll build all our tech and all our data science. And ease of doing the business and simplicity and the customer experience is something that we'll do. So we said we'll not have a paper application form, which had never happened in housing finance. And we said that there are customers who can understand a bit of tech and key in some data on the phone and all that stuff. But we at the same time realized that to lend in India, it's like 30 different countries. We today have presence across 100 markets in 13 states, which is close to 75% of the consumer lending profit pool. And the way we actually looked at it was three things. One, to make sure that we build all the capability and the know-how to execute locally and domestically with a set of people. And people, it's a very simple business and people will be integral for quite some time, even now. But along with people, make sure that the process, the scalability and the simplicity and the customer experience is backed by technology, analytics and data science, so that you don't get into a situation where you push people to a problem and you build traditional structures where you have a supervisor on a supervisor and you will have large organizations, and it's really very ungainly and very non-scalable as such. But to build nimble, flexible organizations. So we chose to back a lot of young people. And I didn't hire a lot of people who work with me in the banks. And people who are 50, 60% ready and groom them. And today we have a 35-member tech and data science and analytics team. All our tech is owned by us, right from our lead generation to origination to customer service to treasury to operations. Every single thing is on one single platform. And what that's actually helped us is to make sure that the customer gets a delivery model and a service experience that's very different. And having done that, what allows us to seamlessly scale and continue to do well during good and bad times, because all the data that we have and all the analytics that we have, and what we don't realize in India is that the credit bureaus are actually 15, 20 years old. And while, because it's a very unforgiving market, all the historical data is there still on the bureau. But the ability to nuance this and to look at stuff in terms of, you can today impute income, figure out leverage, figure out velocity of borrowing. You can do so many things that the score really doesn't matter, although the score is very psychologically important thing for a lot of traditional people. So we do look at the score and say, yeah, the score is very important. But more than that, understanding the customer, which school the child goes to, which business the family is in, is it a first generation, a second generation? What are the things that you do to make the customer's journey easy, and to understand cash flows and to believe that these are customers who have aspirations to grow. So while they would be underserved and underpenetrated at one level, if you go beyond the top 10 markets into the next 40 and the next 300 markets, and you bridge the gap between semi-urban and rural, I guess the opportunity for us, if you look at mortgage penetration, 10, 11%, we're all just scratching the surface. And as I think Suprita said and Abhishek said, I think the opportunity for you to build a financial services businesses with a tech and digital first. But having said that, in our view, for some more time, having enough people around to make sure that you have controls in some form is important, because our ticket size are significantly larger. We do around 10, 12 lakhs in the housing finance, which is relatively small by the metro businesses or the prime businesses, but it still is important for us. But that pivot is happening. So what people do traditionally with 5,000 people in our kind of business, we are able to do with 800 people or 900 people. And then you can reward those people, grow those people, give a customer a different experience. And the unit economics and the differentials can actually be passed on to the customer for affordability. And also you can cross-sell, give them other products and do a lot of other stuff to make life really simple and comprehensive. So that's been our approach, and I think it's been a very refreshing journey for us. But great to learn from you.
Absolutely, Sandeep. It's so good to hear we call financial inclusivity, and the financial inclusivity. If you look at in India, the 80% of people and citizens are in tier 3, 4, and 5 and below. And I'm so good to hear being a part of the panel. Everybody has got to focus on going after that bigger chunk and bringing financial inclusivity to every citizen. That's phenomenal to hear. Thank you, Sandeep. I would want to change gears and wanted to go to the next topic of conversation. We have one customer experience is also and also have agility. And Lizzie, I would start with you. Maybe you would let me put in the last 18-20 months. I'm sure there's been a testing times for all of us, and I'm sure you had a moment or two or many where you got to be working with extreme agility. Could you share one that you probably where you acted with agility in the last 18 months? At the same time, if you have to put money on the table and money on some tech, people, processes, whatever, where would you put as co-founder and CEO in the next 12 months?
Brilliant. Great question. I guess the best example to talk about agility would be back to the moratorium. Sorry to bring that up. It's a very depressing time for anyone in digital lending, but maybe in the context of the wider sort of lockdown and wave one of the pandemic and how we navigated that. I'll just give you a quick example of what happened just a couple of weeks after the lockdown had been announced, and everybody was very fearful and struggling, not just from a personal perspective, but from a business and risk fear perspective in the industry. On a Friday at 12 o'clock, the RBI announced that this consumer moratorium would be rolled out. A lot of questions, a lot of unknowns, a lot of confusion in the industry. And I remember we got on a call at 1 p.m. as a management team, and we made some very quick decisions. And one decision we made was the quicker we go out and give customers peace of mind that we will honor a moratorium for them across the board, the more goodwill we will build up in our business. And that is a hypothesis that will lead to greater repayment behavior, and therefore we will reduce risk. And it's simple analogy, a way to put it is, the person that sort of goes out and bats the hardest can come back and play again the quickest, right? You kind of stay in the game longer. So we said, let's make that decision. We worked through the night, and by, I think, 9 a.m. the next morning, we could release across all our platforms, website, app, communications, clear, consistent communication, and importantly, product features that allowed all customers to opt for the moratorium should they need it. I believe we were the first consumer lender in the country to be able to roll that out, and it really, really paid off. The reaction from customers was astounding. We got, emotional phone calls where they were saying other financial institutions have given me no clarity. They're not answering the phone. There's nothing, there's no information. And just by kind of cutting through the noise and creating the clarity, but doing it so quickly and making those bold decisions very, very fast, I think we earned a huge amount of goodwill. Now, I'm going to link that into your second question, which is particularly interesting, which is, what are we betting big on as a result of learnings like that? One of the biggest learnings from that weekend was the importance of our leadership team and how many important decisions they had to make on the fly. There were so many nuances to how we would incorporate this new kind of legal framework into our business. And rather than have to keep scheduling conference calls with lawyers and things like that, they took it upon themselves to create small squads with independent decision making. And they ran really quickly, made literally hundreds of decisions, followed the ask for forgiveness, not approval model. And by the end of the weekend, that's why we could be the fastest. So my learning is empower your team, empower your senior leadership team to make decisions about the business that they understand. Obviously, anything completely seismic we bring to a wider forum, but really empower your head of customer service, your head of communications, let them, run with it. And you can actually create more, impact and more powerful customer wow versus every decision coming top down. So that would be my feedback.
Wow, Lizzie, that's fantastic to hear. But I won't let you go until unless you say agility means, if you could just say what does agility means for you in one word? Probably, how do you define? Is it empowerment? I'm reading empowerment as a key word,
Yeah, and
but
that's a good word. Empowerment, not just of your people, but also of your customers. And our entire product
customers.
ethos is around enabling our customers to live their best life, empowering them to afford the products they need. And so by being agile, which is actually one of our key values at Zest, we give that empowerment and enablement to our customers. Yeah.
Fantastic. Thank you, Lizzie. Thank you for the wonderful insights. I think I need to get a similar insights. Maybe Abhishek, if I can pull you into the conversation, very similar. I'm just thinking through. We are end of September. 3 months from now, this calendar year is over. I just can't believe that the time flies so fast. So again, a moment probably that you could share where you have to act with agility, and you brought being agile really helped you to thrive looking back in last 18-20 months, and probably where would you put your money in the year 2022? Is it people, process, data, technology, where your mind is?
So, Kerry, I'll give you two examples on agility. One is very kind of near-time operational agility, and one is more around the strategic agility that organizations need to have. And I kind of keep them in two different boxes because you have to be both in today's world. But when ILFS crisis happened, there was a complete shift in terms of the fact that NBFCs are untouchable and nobody was lending to us. So raising debt became incredibly difficult, and people would remember that time. And if there was a book that we would write, then there will be a chapter on that. But at that time, we realized that you cannot be, and money is a raw material, so it is incredibly difficult to scale if you don't have access to money easily. And so we started moving towards a platform and a co-lending approach. And that is what we are today as a platform. So pre-ILFS, we were an on-book lender. And post-ILFS, we are a platform. So that kind of was the strategic agility that the organization showed to quickly realize the signals, move towards it. We could have waited 1 year to get more debt, or we could have just used that to build new technology and bring co-lenders onto the platform. And I mean, I love this. I mean, this is a lending example, but in today, what is happening is out there, there's a talent war, right? Everybody, I mean, it is difficult to hire someone today, especially one with a 90-day notice period. And what we are realizing is you have to show agility today in even smaller things, like how do you tide over this talent war and not lose people and be able to kind of be relevant to today's talent pool. And when we saw the news about people getting BMW bikes and crores of salary and international trips, we realized that they've forgotten completely about the women techies because they don't want BMW city bikes. And just kind of being agile and changing your policies on the go and trying to hire more of the talent pool which is available and disregarded at this point of time. That's also equally important as organizations who are building in today's time, because one new article, one new tweet, one new LinkedIn post will completely change your next 3 months or 6 months at least. That's those are the few examples. I would definitely put my money when it comes to agility on the fact that we are moving into an embedded finance world, embedded banking, embedded lending, embedded insurance. There is a bunch of embedded happening, and I'd put my money on that wave because India is aggregating a lot. And if we can build experiences that are native to the transaction flow, which is what embedded effectively means, then you would see a far better uptake of financial services than what we've seen in the past. It has to unbundle, it has to go Lego boxes approach, it has to go closer to the customer rather than away from the customer. And to your last question, to me, agility really means that as an individual, as an employee, I should be able to see the impact or the outcome of my action. If I can build an organization that allows to do that, then I would always take micro decisions, right decisions, decisions that actually make an impact. The moment it is siloed, it is no longer agile.
Wow. That's fantastic. Very good perspective. I probably was thinking maybe I'll bring in even, Amrinder into the conversation. Amrinder, it is so relevant for all of us, right? We are at a crux of the point where we went through, I would say, a journey in the last 18 months. So I would call journey because some of the journeys been incredible growth journeys. I think Abhishek talked about BMW bikes and whatnot. It's brilliant. And we also seen some travel transportation, hospitality industries have been hit little harder. Keen to understand some things that you could share from, on around the agility, being agile in the last 18 months. One moment probably you could share, and also where would you put money on?
Yeah, I remember the last week of March last year, and this was Feb when we started seeing some trends around users searching for masks, and we thought, what's going on? And by that time it was March, we all figured out it's pandemic, and it was last couple of days in office. So one agility immediately was okay. From tomorrow onwards, there's no office, and the company has still got to run. So that was the first point. And second, more importantly, India Mart really played a very important role uh, in bringing, in that difficult time, suppliers and buyers together for critical items like starting from masks to oxygen supplies to ventilators to all the hospital supplies. So we quickly reorganized ourselves and said, business will happen, but what can we do together as a team where we orient towards structuring content, structuring suppliers, their information in such a way that the pockets of demand can access those suppliers. So that's what we really did for those 7-8 months, and that really shifted the trajectory for India Mart. And at the same time, we took quick decision on our customers. SMEs were totally clueless. They were customers, paying customers for us. So what do you do with them? Exactly what Lizzie said, that we were very clear at that time that we will stand by our customers. And that's the communication we made to them. Similarly, employees, there was uncertainty what will happen, whether they'll be retrenched as a large workforce. So the first thing that we did was we spoke to our employees and said, we are in this together. We got to make this work. Currently, our mission is to make this nation go through this, get the supplies to the right places. Let's go through this, and then we will see how things pan out. And it worked for us.
Brilliant. And where would you put money in the next year, considering everything that we went through?
So I would say, having been in the product and technology space, I mean, we don't have any factories to invest in, and the whole world is moving towards open source. So a lot of what we do is open source. So really, there is very little money you have to spend, except for some on Google and Amazon cloud spends. But largely, technologies are today open source. It's about how smartly you can use APIs, you can integrate different solutions that are available to come up with something that works for your customer. So I would put all my bets on the team, because team and the leadership and the people who are actually going to do work on the ground, they are only going to make that technology happen. By technology by itself, a process by itself probably will only go as much or as far. And today processes are getting disintermediated because of technology. I mean, there are so many physical processes where once you have tech in place, you don't even need them. It's seamless.
Absolutely, Amarendra. Thank you. Beautifully said. I think being open technology, adopting open standards is the best way to do, because it provides you the endless, I would say, limitless possibilities of bringing things very quickly, integrating it on the fly, get going, and it basically helps you to being agile. Thank you for providing the perspective. Let me just go to Subrata again. Subrata, this is a relevant question for everybody. I would probably change it slightly differently for you. I would start by asking, any specific technology investments that really helped you from the last journey, which you would actually carry forward in the days to come, like something that you've done it. You said, great, that's not a break fix. It's actually a long-term strategy. Is there anything that rings a bell?
No, sure. There are quite a few things that we have done, but there's a philosophy part. So ideally, we realized at the onset of business that data and technology will be central. So the biggest investment was to set up a team from day one, even before starting 1 rupees of disbursal, because we realized that it is one thing to build this at one time. We realized that this will undergo so much of change that it is difficult to foresee even the next 2 years, and the ability to always be ready to make the most of the situation. When we started business 3 years back, we did not know that today we will have James Sahai or we will have account aggregator or Open will become this big. But because of the investments we made, we were in a state of readiness to start disbursing James Sahai. So I think that was the big thing. We have done all the other things. We have 100% cloud infrastructure. Since our focus is on data, we have a zero data loss architecture where we don't lose one bit of data that we get. we invested in top quadrant statistical software, and we invested in a highly skilled workforce who are also hard to get. We did all that, and I think, but the key matter is having invested from day one, such that 3 years down the line we are in this state, and also we are agile. You keep on saying that, and agility is being able to respond to any emerging situation quickly.
Speed and flexibility. Wonderful. Thank you, Subrata. Sandeep, I got to ask you this. It's so much hot in my head that we're coming to the end of the year. I'm sure the future coming is going to be bright. Hopefully, it'll be more prospects for all of us. But anything that you could share being an agile in the last 18 months that you would carry forward in the next 12 to 18 months again?
Well, I guess two things. If you look at this, for us over the last 5 years, when we started, we were hit by demonetization. We had 30 crores of capital. And from that point to where we've got here today, the way I'd look at it is strategic agility and the ability to adapt and change and to continuously innovate. So if you look at agility for me, agility is to understand customer experience and put the customer at the center of everything you do. And to do that, you got to understand that their expectations change much faster than what we would want to believe. So I have been used to situations historically when customers would wait for 20 days to get a car loan or a house, maybe 60 days or 90 days. So today you need to give it to them by evening, and over time you got to make it as simple as buying something on Amazon. And that's quite possible, and it's very real. And I think, as all of them articulated, and what is happening now in the consumer financing business or many other businesses, what Klarna is doing in Sweden, what Lizzie is trying to do here, and many others, I think there's enormous opportunity. And it is about being flexible. And on technology, it is important not to build on top of it again and again. What happens traditionally for companies, even new age companies, is that once you built a platform, you're constrained to build on top of it, because that's how India or most markets, you have to have the ability to give up something that's going really well and say technology has changed, the models have changed, and you have to build from scratch again. And what you build, you have to believe will be better than what you had for the last 4 years or 5 years. And if you are able to do that and innovate continuously, and the ability to say that we'll remain fit for growth and future ready, I guess sky is the limit.
Absolutely, sky is the limit. I love that. We're also coincidentally at the top of the hour. I see Pooja pinging me already. In summary, I think being agile means, I think I hear that speed, agility means flexibility. More importantly, embracing the change. And when businesses does that, actually, there is as per recent I think McKinsey report that I've studied, it's about 50% operational efficiency that you can bring into your organization, and you can also improve your bottom line by 50%. It can also have a ton of impact on customer satisfaction and employee engagement. I think we touched upon employee engagement today, which is a great factor. But net, it's been an incredible conversation. Having this fantastic panel. Thanks for sharing all these fantastic and phenomenal insights. And I want to thank you all for all the viewers for the patient listening. Pooja, over to you.
So I think Mr. Prasad took all my words that I was supposed to say in the end. So thank you for that, and thank you for this wonderful panel discussion. I think the word agile or agility is something that was truly justified in this session. And very rightly, each one of you pointed out on the fact that it's so important to embrace change, to become flexible, to sort of reach out as faster as possible. So, like someone said, technology is a boon or a bane. I think here it's absolutely a boon. So, thank you so much for your ideas and suggestions and thoughts. And thank you for supporting and joining us. Please take care.
Thank you.
Vidya, I think you can take that.
Sorry, I couldn't hear anything.
Am I audible?
Now you're audible.
Now I'm audible. So the cue I had asked was that since you and especially SDFC as a service model in this recurring space industry has been one of the pioneers, and also with the kind of innovation leading, and bank as a service model empowering this entire space, and you have been one of the pioneers in this for almost more than 2 decades. How do you see this moving forward in light of specific industry strategy, specific what should I say, category strategy in this regard?
So I don't think Vidya is able to hear you. Would you like to direct the question?
Amit, could you
Yeah,
hear me
yeah,
when I
I can
asked?
hear you now, and I can
So
take that.
maybe you can take this up to take it forward. I think she's
Yeah,
facing some. Yeah.
yeah, Rahul, I'll take that up. For seeing this industry for the last 8-10 years, especially on the recurring side, I think this particular segment has seen an immense growth on technology as well as innovation. If I step back a few years, say 2014, 2015, where we were primarily relying on a technology ECS, which was say 30 days, 20 days, where you were used to realize all the recurring payments. And the customer experience was also not to that extent which we would expect. But the industry has changed over a period of time. If you see from an ECS, we moved to NACH, typically B2B and B2C play, with a large amount of transactions being done, limit of around 1 crore. It was actually quite apt for all lending companies with a limit of 1 crore. And over a period of time, the entire thing also quite enhanced its experience in terms of technology and all. But then again, you came with the ENACH, which presented a very different landscape for all the market participants. While ENACH initially was launched with Aadhaar, and it took a lot of good amount of innovation to do that, and you saw a lot of market participants coming in. And then it was coupled with, say, direct debit or net banking. So it gave a host of options for any merchant and the end consumer to go ahead and validate it. Today, you see if that particular space, it's all real-time mandate registration, and it caters to a segment where a lot of innovations, and it led rise to a lot of fintech players also coming in and building solutions along with banks to cater to large-scale industries. Then you have UPI AutoPay coming in, and as I see the numbers, there are some 2.5 million transactions in 1 month in the last month,
Yes.
which again the adoption is increasing. I also see you working on the BBPS play in terms of doing some recurring things. So this particular space across ECS, NACH, ENACH, UPI AutoPay, BBPS is seeing a lot of phenomenal innovations across the regulator and large market participants. Will all these solutions cater to all industries? Maybe no. NACH may cater to, say, large scale B2B, B2C play with larger limits. UPI may cater to smaller limits, smaller companies in terms of 5,000, 4,000 average ticket value. ENACH may be appealing to large digital lending companies, and similarly BBPS. How will it shape up, and which industries will it get adopted? What would be the customer experience across all these products? Will eventually lead how does it stabilizes? I think, but largely this segment has seen a lot of phenomenal innovations, and the market has actually adopted it. So the point what you brought in, that is recurring payments here to stay, and is it leading to growth? Yes. And just from a cue from my side, in the last 1 year, at an industry level, I've seen ENSH growing at 4x, while at a bank level, I've seen it growing at 5x. And a lot of movement has happened from, say, a daily transaction to a recurring transaction. So there is a good adoption across the market participants. So this segment is here to grow. How does it shape up across, say, financial institutions and fintech is something time will tell. But all these instruments are here to stay. That's my
Yeah.
preliminary view, Rahul. Yeah.
Yeah, thanks. So you brought that point out very eloquently that various payment methods or various platforms have various options and uses. So Vidya, can you hear us now? I think you had some
Yes,
connectivity
yes, I
issues.
can,
Right.
Rahul. Yeah, I had a technical.
So taking off from where Amit led, and I don't know if you were able to get the cue to the discussion which I'd initiated, is with so many options there, and recurring is the blueprint way forward, because ultimately customer acquisition, customer data, customer segmentation, evangelization of that data, and recurring as here to stay over various options. Like from NPCI stable itself, we have so many options, and now BPPS also is going to come with a public goods, a unified presentation management. How do you see this as a very segmented strategy? A corporate strategy, maybe a category strategy. How do you think would be the best way forward in this?
I think recurring transaction is extremely critical across the board, because as a bank, we use it extensively, right? Be it bill payment as a category, we have almost 7 million customers who use this very frequently between bills, gas, all of the respective segments in bill pays alone. When you take into account investments, loans, a lot of areas where customers have put on specific segment-based, recurring transactions, it is like Amit also spoke about. We are seeing 180 to 200% growth rates in all sorts of recurring, and it cuts across. The guys who drove this even more to a hilt where it is. It's unavoidable now. It's become a way of life. Is also all our subscriptions, OTT, our home entertainment, everything. So I think it is something, especially for a person who's driving consumer behavior, which is something that I do. We see everybody who's got more and more recurring transactions, be it on their account, be it on their credit card or their debit card or UPI. You see minimum 30 to 40% higher engagement of those customers on an account, irrespective of the category. And the category is just increasing. There was an era where only insurance used to be the segment, and now we've come to a date where even groceries can be on recurring. So I think it's an ever expanding space, and we for anybody who's in the business of driving engagement, which is all of us in the market, I think we want to have a standardized way of driving it. And as we talk, we are driving a lot of changes, which is going to kick in from tomorrow, and I'm a part of driving those change for my own bank portfolio, etc. I think with a lot of things that are getting tightened up, it may look like initially we might have some issues, disruptions, but I think it's just going to now leapfrog into much larger growth patterns and numbers in the future. So for us, it's, I think the way I see it, many subcategories, corporate categories, even in the retail side, a lot of categories. So it's going to just leapfrog into a new zone, is what I believe.
Yes, yes. And you brought out one point there called behavior, the consumer behavior or the category behavior. So taking off from that, Deep, as the digital guys who have literally leapfrogged such transactions, how do you see shaping of this behavior affecting, because transactions are leapfrogging, but everybody's worried about some law of diminishing returns hitting us any point of time. And despite
I think he'll be
leapfrogging,
back.
since you are one of the leaders in this space, how do you see chiseling of this behavior? How it's going to affect this going forward?
Sure. Thanks, Rahul. And I think Vidya and Amit set it up really well. They gave a fair bit of context of how this is kind of, moved over the last decade or so. I think I see it in two ways. One side is where we have various use cases, consumer use cases, merchant use cases. And the other side is about the options for consumers to use recurring or make recurring payments, right? The most popular one today is consumers coming back to the platform and authorizing transaction month over month, and this typically happens for bill payments, right? Because these are utility mandatory sort of payments. So we see extremely high level of engagement there. We see 60% plus sort of returning customers month on month. So that basically provides us a very, very good insight into the kind of consumer behavior of these kind of consumers, right? This also gives us a good sense of the kind of consumers they might be for various other financial products in the longer run, right? Although it's really, really early stage for us as an organization, but the industry is already moving towards this. A lot of other fintech players, banks are already moving towards that. In terms of the ways to make these payments, like I mentioned, obviously there is UPI, there are cards, there are wallet, which is available to consumers today to make the payment every month. But I think with RBI now formalizing the recurring payments guidelines, right, and bringing in a very, very strong framework, especially from a consumer ease protection standpoint, the kind of confidence which consumers have in a recurring payment or to give a mandate to a merchant like us, for example, is significantly going to grow, right? Like Vidya mentioned, there might be an initial challenge in adoption, in movement from the existing mechanism. But I think it's going to give significant confidence to consumers. We launched UPI Autopay, for example, just about 2 months back, and we've already seen 1.5 million mandates being set up. And these are across use cases like SIP, mutual fund SIP, which is the evergreen, really well-known use case, right? And wallet auto top up, which basically says that you don't have to every time come back to the app to do the top up of the wallet, so that you can use it seamlessly for various use cases. And the third one is the one which Vidya also mentioned, is around OTT subscriptions. We've partnered with Hotstar to drive that through. But I think where this will really lead to is creating that confidence in consumers to adopt this for significant number of use cases. Today, commerce transactions don't really qualify as recurring, right? They will, in my view, over a period of time, translate to something like um, what we used to do at least a decade or so back with your grocery store at the corner, khate mein likhne la, and pay it at the end of the month, right? I think that is the stance which probably a lot of e-commerce players are going to take. They're going to probably start giving some kind of lines to consumers to drive transactions, and then take mandates from consumers to recover the credit which they would have lent for, right? So I think this is going to go really far, and I think it's really exciting. We are at a really interesting stage.
Yes, point well taken. Most of the discussion when we started has been more, consumer empowerment, the choice to the customer, whatever platforms they come to be. Our experience has also been, there are certain categories which are compulsive, let us say electricity or municipal taxes, which affect us on a daily basis. And these are supply side categories. If you ask me, these are the kind of categories where efficiencies have come up and economies of scales have cut down on the cost. But tomorrow, if digital payments are not there, they'll be least bothered. For a very simple reason, you have to go and pick up your electricity bill. Now, with so much of options available, and the fintechs, along with banks, and the digital players like yourself, along with banks, are taking this forward. How do these supply side and the compulsive supply side models get affected? So I'll take this to be there because I think SDFC was there and is one of the largest on the SI auto payment side, and I myself do so many transactions with you every day. So how do you think this part is going to get affected? The supply side part, demand side is quite tacit and it's quite evident. How do you think the business models are going to get affected here?
So I think in our own product, right, we used to and we still drive a lot of our recurring transactions through, say, a product called SmartPay. And when we take it to our customers, the very popular demand, and you spoke of the demand side. The demand side for SmartPay has been some of these that you actually mentioned. So what happens is there are customers who tend to they get used to recurring transactions. They like it. You put a basic offer, it's very convenient, you don't need to really bother about it. So they want their landline, their mobile bills, their insurance, everything to be on auto pay. So the demand, I would say, is fairly high. And we saw it when you did a POC for a particular new product or a particular supply side. You can just see that the numbers just pick up and the customer's uptake is very high. On the supply side, however, I think it has always got to do with how many people actually wanted to fold into recurring transactions and give that facility, right? So insurance companies definitely did not want the premiums to stop, and it had a huge outage. So they did give that. It was very automatic. When you make your payment, you always set for an SI. It was a way that some of the industries actually set it up. But on the supply side, there are certain players or certain categories, especially where it's not yet enabled. Like in most of the electricity segment, like you take a Goa electricity or a Calcutta electricity, it in fact, in most places, it's not there or it's come in too recently. So I think what will happen is the standardization, which all of us are talking about, where Deep spoke about it. I think once we have that common ground, and it's very easy. Today it is, too many plugins, too much of integrations, and data where it goes, the fear of where the data sits, whether it's presented right, whether it's paid right, whether it is the grace days are given right. So there has been a lot of doubt on exactly how things will get managed, and in segments that we spoke about, the supply side merchants, they are also very careful about how they want to manage their customers. So I think that level of standardized solutioning probably is going to be the answer. And I think I'm hoping that with all the changes that are happening, I'm seeing great solutions which will get worked upon by the entire industry. I think in a coming year, more categories will fold in. And that's what the demand is also. That's what the consumer side of the demand also is.
Yes, I completely agree with you there because this is a change sitting at the central level we are also witnessing because we were interacting with industry players and you ask them to connect standard plugins, give a standardized experience. So Amit, taking to you, you've been there with us on the acquiring side and we have seen we've been able to standardize a lot of categories like education along, etc. with you. But despite all the agility, despite setting a recurrence, there are certain categories which are still not responding to the digital space. And if you remember, there was a lot of acquisition on the education etc. side we did together. And
Correct.
despite standardizing tons of ERPs, we are still not seeing that kind of interaction. Though banks have a pretty linear engagement there because they provide so many other services there. It's not merely the fee and the fee management. So, where do you think how standardization would help leapfrog categories such as these?
So I'll split all this into two parts. One is at the end of the day, the customer experience is very essential. On the recurring side, whatever innovation we have seen in the last 2 3 years, especially say on ENSH as an example, it no one could have ever imagined that host of companies can do lending say in 2 minutes, 3 minutes. The whole verbatim of that entire proposition was that I can fund your account in 2 minutes. If you just step back and see that a lot of these companies were actually banking on the entire digitized recurring flow from a ENSS perspective, that customer experience was quite good and that's why it took off, the end customer as well as merchant. So both of them have to be having a certain level of convenience in which the product thrives. um, Whether so something like, take an example of Aadhaar. When it was introduced, it picked up so well. Whether we can go ahead and do something more on that in terms of validation, yes. Whether the price point today at an industry level helps us to do it, not so, but it can improvise. Now coming back, now all these, whether you take SI on cards, whether as an end customer, my experience of clicking on a PSP app and just entering a 6-digit pin to validate my repeated recurring transaction is a good customer experience. Or through an SI on cards where I get a link, I wait for the OTP, then I enter the OTP and then I actually validate the transaction is a good customer experience. So at the end of the day, the customer will choose for himself which mode, and that's why I say there are so many modes coming up. At the end of the day, merchant and the customer experience will actually help you to see which will thrive upon. Now let's take an example of what you mentioned on education side. It's also a customer experience, right? Because there are a host of educational institutions in India who actually wanted to be on the platform, but at the end of the day, whether it was a merchant level or a technology level, the entire customer experience was not there. So at the end of the day, if the student wanted to choose the school and make a payment, maybe his school was not reflecting on the app. And why so? Because maybe the cost dynamics was not helping the end merchant to display it. So how do we solve that technologically in terms of the end customer to have a good experience is something as an industry we'll have to work upon. Maybe a central mapper at a regulatory level or something at the end of the day, because what you build for the customer at the end of the day will only thrive. So there are so many things which are coming up, whether it's UPI auto pay, SI on cards, ENSCH with Aadhaar will be very differentiated with ENSCH with say debit card, because there is a two-step additional what you do in terms of validation. So in my view, all these will be there, but your volumes will be generally governed by instruments which have a better customer experience and merchant experience.
Yeah, very much so. Deep, since we are repeatedly talking about customer experience, uh, just beyond payments, so just beyond recurring payments, what are those differentials we can bring from a standardization perspective? Because let's say PhonePe brings its own kind of experience, the other digital players bring their own set of experience. But what could be the common thread which can bind all this together? What are those differentials we can create in this regard?
I think Rahul, I'll actually go back to the basics here, right? We at PhonePe specifically take success rates and resiliency from a consumer standpoint extremely critically. And even a 0.1% drop in success rate for a bank or for any of our areas, right? We actually, send out all alarm bells ringing, right? So the initial kind of experience over the last couple of years, since the time we've adopted couple of auto pay mechanisms, eNACH, UPI cards as well, right? What we've realized is that once the customer is given a mandate, uh, post that, the customer assumes and expects that it will execute on the particular date, or if there is, a mandate for a balance based mechanism or something else, right? What we've seen, although, is most of the infrastructure of mandates also is processed, the execution itself is processed through the existing transactional infrastructure. So let's assume that there is a bank which is supporting debit card based transactions, which are regular transactions, which are auth transactions. For mandate executions as well, it is probably the same switch or same infrastructure which is supporting it, right? And the problem is, while we are able to build experience to probably warn the customers that, hey, you know what, right now this bank's infrastructure is fluctuating, so you can try after some time, or our infrastructure is fluctuating, try after some time, something like that, right? But for mandates, we can't tell that to the customer. Customer is assuming that it will get executed, and when it doesn't, then it's an absolute cleanup job which all of us have to get to, right? So that's, I think, the core aspect which all of us as infrastructure players will have to get together and try and solve for. And if we solve that, honestly, I don't see there being anything else which can be solved jointly. Obviously, there'll be differentiations at a player level, at a bank level, which can come in. But other than this, I really don't see anything else which can be solved at a central consolidated level.
Yes, so what I'm getting from you, Deep, is that coming together, kind of a co-creation of that experience, co-creation of nuances, category nuances we have to take care of. We experience at the central level, we have seen, banks or digital players like you executing mandates, and at a electricity company level, even the meter reading has not been taken. So that kind of cleanup. So with that coming together, we have been envisioning for quite some time. Why not create at a central hub level where every bank can plug in, every player can plug in, and from an experiential level, we can let the central part start doing that heavy lifting, so that nuances, particular category nuances, how does this appeal, like, especially with recurring becoming so ubiquitous, and with the credit explosion coming, and tomorrow credit is going to become tradable, and so many things happening. Does the joining of hands together and, literally, maybe the demand in the option side can literally force the supply side to accede to stuff like this? How does it sound like?
No, so I think even when we looked out, I think when we wanted to standardize, and there has been requirements to actually not surprise the customer, and drawing some kind of controls on customer getting a notification, or at least knowing that his card is getting debited, or even in the case of UPI. So be it a UPI auto pay or cards or all the instruments that we've been talking about, I think hub is something that some of us in the industry keep talking about. I think we've not come together, and I'm sure you're aware of it also in the last couple of years from 2019. Because of, I think, COVID, it probably didn't fructify. But I think for solving for this, like Deep also mentioned, it would require a lot of, I wouldn't say heavy lifting, but it is a lot of standardization, and everybody also, even the merchants would want to, not do multiple integrations, varies kind of things. Each issuer do something else, for something else, each payment instrument do something else. So that is not something that even from a merchant point of view, they want to do. Same from a consumer point of view, they don't want to also want to deal with too many players, and they're also worried about how they can control things or how do they get to know things. So I think there is a need definitely, and we are watching this very closely, and we'll know exactly what happens tomorrow. But we know for a fact that standardization and a hub solution, or all everybody coming together to come up with one solution which is extremely robust will be required for scale also, because whatever we build, it could be something that we can deal with for now. But I think recurring being so crucial for almost every player, because all of us are dealing with one kind of payment instrument or other, I think it will be definitely required. And I think for sure industry would be open for it, is my view.
Yeah. So, but one cue I'm getting from all this feedback is that taking it forward, apart from standardization, I think standardization and experience is going to become a mix of standardization experience. If it has to be a mix of standardized and experience, Amit, then of course there is an overlay of service kind of requirement also to be met from the customer. The customer doesn't today want to come in and say, oh, I have to make a specific payment. He may have 10 other desires he needs to answer. So it almost looks like if something at a standardized level has to we need to create a renaissance on this. We are already seeing a renaissance on this, but then probably what we need is overlay of a service engine with a recurring payment engine to increase the experience. Where the industry comes together and is able to give a layered kind of an experience to the customer. How does that sound?
Rahul, I have a very different view on this, especially on standardization. I think the basic platform or the basic architecture is something which, from a regulator perspective, is available. But all financial intermediaries or institutions will have to think about these journeys very differently, and all of them may come with a different customer experience or a very different platform. So when I go to and the merchant itself is today very confused. I'll relate a recent incident when I was pitching on a recurring payment. I gave him all options. You can use ENACH, you can use UPI, you can even use BVPS in next 6 months, and you already have NACH. And he was confused that what he should use. That's one customer who doesn't know how to use it, and that's the merchant education which you will have to do. And I think every player who is offering this in the market will evolve very differently. Maybe as a bank, I'll try to build a recurring platform and do something very differently for my end customer, because every segment is different. I may have a stack where lending companies are much higher in nature, so my platform would be completely different, more focused, say, on ENACH. But compared to another institution which is more focused on OTT or some very low ticket size transactions. So, and the customer is also smart, because there is always a section 138 which comes in all these recurring patterns. So the customer always asks. One customer told me that I am not bothered on section 138 because my cost of legality for a 5,000 rupee transaction which was returned is much higher than I have to worry on the loss. So customer are also smart, they are adopting it. But in my view, a central layer, a single layer would not fit everyone. Every business model is different, and that's the best example. If you scout the industry today, you have one of the largest top 3-4 fintechs just operating on a recurring platform, and they have built their business cases very differently for each of these companies. Someone wants to know at which stage my recurring transaction failed. Someone wants to know how much is digital, how much is physical. So use cases may be different, Rahul. I don't think so. One common layer standardization would help. Every financial institution will have to create its own value added layer for its customer experience. And whoever works on it aptly and at the right time, I think will have a larger market share.
No, absolutely right. When I said standardization, I meant the basic nuances to be taken care of. Refunds to be taken care of, settlements to be taken care of, real-time settlements to be taken care of. Beyond that, you build your nuances, right? And like you said, that merchants would also build their nuances here. They will go for the platform which suits them best. So but again, coming back is, yes, you build your own USPs. But just the offer of a payment and settlement will not work here. This is the feeling I'm getting, because there have to be so many others. So let's say somebody is coming for a mutual fund payment today, asset management company. Now he wants to see the plans. He wants to make a decision. So something central helping those companies on the supply and demand side to do this and you build your USPs there. So the overlay of services and a match of your USPs, I think, will go a long way. This is my feeling. So, Deep, how do you feel about it?
No, I think, Rahul, that completely makes sense. So when we say standardization, I think completely agree that it should be standardization of processes or consistency in the kind of behavior the consumer or the merchant gets, right? And that should be completely done. I agree with Amit that finally it is about each business or organization building its own layer on top of this, right? See, for example, UPI or BBPS are core standard layers, but every entity has been able to build different use cases, experiences on top of it. And that is what it should be, right? Otherwise, there isn't real scope left for innovation after a point in time, right? So we need to kind of focus on ensuring that we build the right rails, allowing for innovation and building those experiences for various stakeholders.
Absolutely right. So when we're talking common rails should not come in the way of dynamism or flexibility of somebody building their USPs. So what we have been discovering, or what Amit so eloquently said, is what we are discovering as we are going along the way is, there are very, very specific business and category nuances going forward. So for example, Deep is here and you yourself have taken an AA license and insurance broking license. Now I imagine people can reach out to a common layer and then present it across. Then maybe the players across don't even need a broking license and they can still present and do it. So this is where I meant. Vidya, how does it sound like if a central hub can help in this regard? And it's a public goods platform, right? So it creates that scale, creates those economies, and everybody can build their USPs around that.
So I think both works, right? So hearing Deep and Amit closely, I think as what we need to do, and I feel that they both will happen. There will be some solutions which are very CUG. For example, there'll be platforms which are specific to say my own, customers, where it's like a smart pay or a pays app kind of solutions that we have today, where you would like to build an innovation, you want to do your own solution, and you want to innovate, and you want to build your own pipe. Then I have this, that's one leg where I think there should be flexibility, like they're saying, where you are able to offer your own solution to be the customer or the merchant, so that you get the maximum share of the pie, right? Because recurring is extremely critical for all of us. The other leg, however, is interoperability. When my card goes through an ICICI acquiring or Axis acquiring, I don't want the transaction to fail, right? So it is both. To me, I think, like you're saying, a rail more than a hub, I would say common rails which make sure that wherever the card goes, whether it is on PhonePe or anywhere it goes, it works when the card is being put onto a recurring transaction is very important, an experience for us to provide it any merchant or any partner in the ecosystem. So if the worry from say few days from now is without a common rail, whether that interoperability will not happen. So I think from that point of view, some kind of common rail will help in transactions not falling through here and there. At the same time, wherever it's our own platform, like we also have our own solutions, etc., etc. Banks would like to, fintechs would want to, wallets will want to create their own solutions. It should also give that flexibility so that everybody can either create or co-create.
So what is emerging now is it's more like a hybrid model which is going to emerge. So it's definitely a co-creation ecosystem which is definitely going to come. Gets more savvy as it gets more savvy and as it goes forward. So coming back to Dilip, Deep, you guys are more on the customer acquisition side, and you've been virtually sweeping across the sectors. How do you see this going forward? What's the corporate strategy like? Let's say 5 years from now.
See, I think, Rahul, there will be various kinds of customers. There will be customers who will want to see their bill every time and make a payment every time, right? There are all kinds of people. And there will be customers who will be comfortable giving a mandate that, hey, I know that the bill will be in this range and I will just make the payment, right? So we'll have to solve for all of them. And honestly, 5 years is a very, very long time in payments and the whole fintech space, especially where we are at right now. So difficult to comment, but I think we will need to solve for all kinds of consumers. Uh, the more we are going deeper into the rural area, so we do 80% plus of our transactions in tier two and beyond, right? Which also talks about, and we have stopped incentivizing customers for quite some time, which basically means that we are seeing very very sticky consumer behavior, and that is primarily being fueled by consumers who are joining the digital revolution now, right? Consumers in tier one metros, they are used to options. They are the kind of ones who are actually bargain hunters, look for best options, right? But these are the consumers who have taken that leap and are willing to actually give you that comfort and trust you to adopt new use cases and functionalities. So I think building for that set of consumers will be the way forward as all of us move deeper into the country.
Thank you. In fact, I was about to move towards that. We seem to be, most of us are cannibalizing the same space, right? So, one Amit would be at 10 platforms. People sell their souls for 25 bips worth of cashbacks. So, today, whether it is a recurring space or whatever expansion we are going to see, the uniqueness of the customer probably now, especially in this space, would be how do we, go further to those tier 2, 3, 4 and the rural areas, because COVID has adequately shown that even a basic FMCG transaction stop brings contracts the GDP down, and recurring all the more becomes especially very very important here. So I mean, it literally comes back to you, like how do you now intend to expand with the help of maybe fintechs, maybe yourself as a service platform more and more into this space, and how do you especially let's say the MFI sector sits out there, the SHPI sector sits out there, which is millions and millions of alliances can be done in this regard. So how do you intend to move into this and co-create?
So, Rahul, I completely agree with Deep. And being a transaction banker, always our essence has been to get into transaction which creates stickiness. And one-time transaction vis-a-vis having a customer who gets into an engagement with you on a recurring way is something which is going to explode in my view, because you have so many platforms today to engage with a customer on a recurring pattern. If he comes to your platform or engages with you on a recurring nature, you can cross-sell a lot of things, as well as he has an experience of your platform going forward. So there's no doubt that as a financial institution, we are always invested into this in the past, and there's no second thoughts on in my mind that it has to be co-created. The agility and all which new fintech players bring in terms of understanding and the way they can go ahead and build it overnight is something as a bank, as an institution, may take some time for me, but co-creation is the way forward. Even today, my offering, whatever is there on this side, is something which we have co-created. So co-creation, segment specific strategy, it has to be very different. You may go for a normal B2B offering with your normal NACS strategy, but for a say an OTTP customer or something for a digital lending customer, your value proposition completely changes. So if you ask me, a huge focus on this segment specific strategy, co-creating with the market participants and understanding the customer experience will be the four things which we'll focus upon, not for 5 years as Deep rightly mentioned, but for at least next 12 months, because NPCI anyways gives us so many products on recurring year on year, Rahul, that our strategy may change, but at least for the next 12 months it seems the strategy which we
Yeah, I'm soon also coming with yet
and
another.
soon
So
coming on with some another recurring platform which I
yeah,
believe is very very robust. So yeah.
yeah. We've been working hard on that. Especially with the credit space exploding now, especially with the AAs coming in. In fact, yesterday I was reading somewhere that already in the market there are more than 1,200 digital guys who are into redistribution of transfer, especially banking products. More than 1,200 and counting. So, do we especially see recurring space? This may be the next UPI moment. Because with thin margins and reaching out to customers who are normally unbanked or not happening as much on the credit space right now. This could be probably the cataclysmic moment for recurring going forward.
Yeah, I think like the two words that will post UPI. I think like the BNPL, which started has started doing a lot of innovation on the fintech side, and there's a lot of products, a lot of innovators. I think now that things are more clear and formalized, I think there'll be that much innovation and a lot of players wanting to do very different things. Could be with the AA license, without it. You'll see a lot of new fintechs trying to come up with brand new solutions. We've been meeting with a lot of interesting concepts also. So I think recurring transaction definitely is the next big moment after a UPI. Parallelly, there's a BNPL. So, but recurring is also not necessarily like, not like a revenue stream, but an extremely sticky product like Deep and Amit were talking. So I think more and more customers need to build that. They need to be more aware of how to go about it, and offerings are going to be very important. I think it probably has been handled slightly differently in the past. A lot of business segments, like we do a lot of work with the SME carding space also. There we noticed that there has never been great solutions. So the minute you give them solutions for high value bill payments or high value electricity or rental payments for their shops, there are people who are on the ground who are lapping it up. So there's a lot of innovation which will definitely follow. And I think more than working ourselves, we are also equally working with on co-creation concepts. So 2 3 that we are working on, and more so which will come. But I do believe it is a very big moment. And from number point of view, as you see, I don't know, for almost every bank it would be that way. And some data that we have is it's anyway 200% to 300% growth rates as we talk. So now it will only grow even further.
Yeah. It was wonderful talking to all of you. So I'm almost just 1 or 2 minutes away from summing up this segment, and maybe we can just look at the board here. As far as I have received here, there is only one. Somebody is written saying that, "Hi Rahul, UPI mandate expansion to higher ticket side could make e-NACH redundant." I think Amit would have very strong feelings about this.
Sorry, I don't think so, because every segment will have a different proposition to it. ENACH, I think my personal view is that if Aadhaar, especially Aadhaar validation, is brought down from 25 to 5 rupees, it will be one of the most widely used products, because the customer journey is like 10 seconds to get the mandate registered. In mind, and it has a section 138 backing also. So technically, it's one of the most strongest reckoning instrument. Every instrument will operate in different spaces, as all the panelists discussed. So I don't think so it will become redundant. Others may see. It's also creating newer segments. Matlab, a landlord passing a reckoning mandate to a tenant, or vice versa. Like, there are some specific segments emerging which were not there. So your market share is going to increase. The market itself is going to enlarge. So redundancy, though, I don't think so happening on ENS.
Yeah, I agree. So everything has to create its own niche. There is yet another thing on the board here, says there should be some combined campaign in rural areas to get the customers onto the digital. Once the customer used to the digital, they stick either or one. And Deep, I'll put it to you here, because you're perceived more as digital, more in the urban space. But you said you are seeing lot of stickiness coming from tier 2 plus towns, right? So what kind of campaigns, who a gentleman has posted here? So let us say from a phone pay perspective, what kind of campaigns and awareness you would be looking at for a reach out?
So typically we focus on national campaigns, right? And that is how it works. But we actually go very deep into various language and local language campaigns, right? Because you can do an IPL campaign, yes, that will get you a different kind of a top of the funnel and an awareness. But the kind of awareness which comes in with a very, very local presence and local media usage is very different. That is more ATL. And one thing which has helped us really, really strongly is the fact that we have, while we are not known for it, we have 21 million merchants across the country. right? And we have about 6,000-7,000 people on ground, going deep in rural areas to try and acquire merchants all over the country. And the presence of PhonePe QR at those outlets has really helped in adoption, right? So this actually, while it's not supposed to be a marketing activity or an acquisition strategy from a consumer standpoint, but yes, it has helped us.
Okay, so I have I don't know, unrelated question here, but if somebody would want to take it, will we see the concept of smart money accepted in India? So, though it is not really related to this, if somebody has some thoughts, maybe you can go ahead. The programmable currency probably is talking about.
Yeah, I also think he's referring to, also in the account aggregator world, when all lot of fintechs and a lot of new age apps have visibility to, some of the surpluses that he's talking about, salary surplus,
Yeah,
whether you can, there will be an SIP directly from the salary account to managing the money. So money
yeah,
management, I think, definitely is a future. I think many people, I would say that that's a huge potential. I think wealth management has always been kept as the upper part of the pyramid, but it has huge potential in the lower part of the pyramid. So I
yes.
think more and more fintechs will definitely pick it up, and money management, of course, with more SIPs, like Deep said, most of the UPI auto pays are on mutual funds. So I think definitely this will be an area that gets picked up. We should just wait and watch.
Yeah, so I think we have reached to end of, at least my clock winds down. So I'll thank you so much for such beautiful insights. Thank you. I had my epiphany today, so thank you so much. And I'll hand it back to Garima now to conclude the session. And thank you for all who have been listening in.
Thank you, Rahul.
Thank you so much, Nandan sir. Thank you so much, Mr. Kumar. Thank you so much, Mr. Agarwal. And thank you so much, Ms. Pradeep. This was indeed a very enlightening session, like sir mentioned. And thank you to the delegates as well for posting in so many questions and making this session interactive. For everyone on this platform, here's your chance to become a proud owner of RuPay on the go. So basically, if you go to the NPCI booth, you can apply for your complimentary RuPay on the go device. So please do drop in to know more details about it. So thank you again to the panelists, and we will be back with yet another exciting session shortly. Thank you and be safe.
Thank you so much.
Council and Payments Council of India, which are a part of Internet and Mobile Association of India. The fest is presented by the National Payments Corporation of India, Ministry of Electronics and Information Technology, Government of India, Reserve Bank of India, and supported by Niti Aayog, Startup India, and Invest India. We would like to welcome you all for a panel discussion on developing fintech solutions across boundaries. We have a distinguished set of panelists joining us today. Please join me in welcoming the moderator, Mr. Vishal Narula, Managing Director, Alvarez and Marcel, followed by our panelists, Mr. Ritesh Shukla, Chief Executive Officer at National Payments at NPCI, Mr. Kagiso Motibi, Head Fintech and Innovation Hub, Financial Sector Conduct Authority, and Ms. Susan Hannestad, Chief Executive Officer at Fintech Mandi. A very warm welcome to Mr. Narula.
Hi, good evening, everyone, and welcome to this session. I am privileged to be moderating this session in the midst of such stalwarts from the industry, from different walks, and you just heard their introductions. I think we have a lot to learn and we have a lot to ponder upon during this session. What we wish to do is to be able to help everyone understand the scope and the opportunities that exist with cross-border fintech solutions and how they will not just disrupt the world and the economies. They will actually help us create a level of inclusion and uniformity that we may have never thought about before. But just to set some kind of a context with, for you, and especially for those of us who are in India at this point of time, I think the first instance of us really brushing ourselves with fintech came in November 2016 when we went through a demonetization process. Yeah, and it was way before COVID hit us. And by the time COVID hit us, things were rather easy for us to be able to transact because we had already adopted fintech in our individual lives. And not just that, I think businesses had also adopted fintech in a way that they never thought would be existing before. And coming from an advisory background, I can tell you, when we speak to clients and when we talk to them about transformation, especially in finance, it is technology in finance, in carrying out transactions, in being able to recording transactions, in being able to meet regulatory requirements, becomes absolutely easy when we use a variety of different solutions that get integrated with the businesses. Now extrapolate this beyond borders and assume that you have large conglomerates who are able to use similar technology platforms across borders seamlessly. And just to take it at a level of a totally different disruption, think about it at a user level. If users are able to just transfer money, which has recently become a reality between India and Singapore, freely just using your mobile apps, what would happen? And as many research reports as I read over this, I think there is a very clear and direct correlation between the adoption of fintech at a user level and the GDP of a country, and they both support each other. So countries with larger GDPs have a much higher adoption of fintech, but countries who are developing and have recently started adopting finance technology in their day-to-day lives are showing massive amounts of growth. And India is the second highest in terms of revenues when one looks at fintech today. I think 5 years back in 2016, we weren't there. And the kind of growth that we have seen is thanks to technology, and especially thanks to the kind of payments infrastructure that has been created in India thanks to NPCI, right? Over the next few minutes, we will dive into the landscape of payments across the world, dive into some specific case studies about how India has transformed and taking it globally, what the regulators across the world can do and are facing as challenges, and finally end with what each one of us thinks is going to be the key difference of using fintech in our lives. So here I'd like to start by asking Suzanne, with respect to if you can share with us, where are we moving globally in terms of fintech and adoption of fintech? How is it helping us? Are we there? Is there a long way to go? And who's doing what? So over to you, Suzanne.
Thank you, Vishal, and thank you for being part of this fantastic event. We in Fintech Mundi, we are based here in the Nordic in Europe. We work very closely with Findexable, and the last report they have on the ranking of the countries, the ranking of cities throughout the world, and just give you a flavor what's going on there. US is at the top. They have been number one, and UK is number two. Those two has been there up for a long time. What we see though is that Asia Pacific is coming in. Singapore is doing great. Australia is doing great. And then we have the Nordic countries. They are among the top, with Sweden, Lithuania, Estonia, Finland, and Denmark among top 20. India is 23 and climbing. So what you said, Vishal, that a lot is happening, and we know it's a lot of development in India. Looking at cities, and here we will have a few of the Indian cities coming up. San Francisco, London are top 1 and 2. Sao Paulo, Latin America, is number 4. And then number 10 is Singapore. And then we have on the number 13, we have New Delhi. And on the 20th, we have Bangalore. And then on 23, we have Mumbai. So India is very well represented there. And again, the Nordics, they are among the top 25 cities as well, with Stockholm on the 14th. So that gives a flavor of a good mix between the various continents. Just looking at the European, Stockholm is on 14. We have Vilnius on 11, and so forth. We go down. So the Nordics, of course, is coming and have been leading for quite some time. Another index I would like you to get yourself familiar with is the Global Innovation Index. That's an annual thing. And on top is Switzerland. Number 2 is Sweden. We have Korea, the Republic of Korea, on number 5. Finland on 7, and Denmark 9. So that also gives you a flavor. And I assume India is climbing that ladder quite dramatically with everything that is happening when it comes to real-time payment and so forth. We are into financial inclusion, and we work with MasterCard with that summit, and we made a report there. And again, Findexable was a part of that report. And what we see that is the promotional collaboration is a key thing to across governments, development agency, and the private sector and innovators ending the exclusion for good. And then my main insight we saw that is, of course, the new mobile money proposition have the potential to reduce the world's unbanked population by more than a third. Just giving you one company coming out of Sweden is Crunchfish. They offer offline solutions, payment solutions, and I know they are in various places in India as we speak. Then we have another radar that I want you to look into, and that is the diversity radar, the FinTech diversity radar. That is being worked on as we speak, and a lot of insight and surveys has been done over the last year, and it will be launched in the beginning of November. And here, if you see at the percentage of women that is being a founder or a CEO or both, Africa and Asia Pacific is in fact leading in the world. They have 7.5%, which I think is a good one, and Europe is number 3 with 6.9. Something to bear in mind going forward, that we always think that the Western society is doing what I think to. So that was my start, Vishal, and of course a lot of other discussions we can continue with.
So that's very insightful, and it's very good to see that we have at least 3 of the main Indian cities quite high up there in the index, as you mentioned. Not too far behind Singapore as such. But so are we then summarizing that the world is moving towards adoption of fintech very rapidly, and how are different countries doing on the outbound side? Do you see all of these developed countries who are high up in the index going beyond their borders, or do you see more developing countries going beyond the borders? And of course, I'd really love to know how India is doing in that.
What we see, though, is in Europe with the harmonization of regulation, and regulation is a big stakeholder when we're talking financial service and fintech. So Europe is doing quite a lot, and mentioning this Crunchfish and open banking companies that is here in Europe, like Neonomics. They are looking first Europe and then going towards Asia, and Singapore is a good hub to that. Another aspect is that from the Nordics, there's close to 100 companies that are present in emerging market, meaning Africa, Southeast Asia, and Latin America. And we see that, of course, we see the American companies coming out of California. They, of course, are once they have done it in California, they go global. So they will be present all over the world as soon as they see opportunities. And in this sense, with the large population in India, the Indian market is very tempting for all these continents to be part of. So here we are.
So I think with that, I'd like to bring in Ritesh. Ritesh is the CEO of NPCI International Payments Limited, and he's the person who has taken India's indigenous payments infrastructure beyond India's boundaries. And here, Ritesh, I'd like to ask you if you could tell us how much has changed with respect to financial inclusion with the introduction of UPI in India, and what are the learnings that you are using that allows you to take it outside the boundaries of India so easily and so rapidly?
Thank you, Vishal, for the opportunity. Pleasure to be here. When you talk of financial inclusion in India, I think the first thing that comes to your mind is UPI. And UPI has truly transformed the payment landscape in India. it actually reflects in the volumes that are being processed or have been processed on the platform. In 2020, we processed volumes worth 457 billion US dollars on the UPI platform, and this is estimated to be roughly around 15% of India's GDP. Now, if you compare it with 2017 when the platform was launched, the volumes that were processed were about $8 billion. And with $457 billion in 2020, this is a compounded annual growth rate of 285% plus. And this actually shows what has happened. I mean, this is truly transformational, and volumes continue to build. Like for the month of August, we processed about 3.55 billion financial transactions, amounting to about $86 billion. Now, this is what UPI has achieved here in India on the financial inclusion front. If you look at current landscape now, merchants of different sizes across rural as well as urban landscape have now digital payments as an option, so they can offer this to their consumers as against cash dominant society we had few years back. So this is phenomenal here. We have gone to the deep corners of the country and given merchants, consumers, an options to pay digitally. Now, this feat is a outcome of ecosystem level collaboration. Like it's all actually anchored, orchestrated by NPCI, but everybody has played their role, and the credit goes to the entire ecosystem. In terms of your question around our learnings and what actually differentiates UPI from others, I think we have about 7 or 8 things that actually differentiate UPI from others. One is ours is an API-driven platform, so it's easy to integrate. It is interoperable, unlike in some other markets in the world wherein the payment works within the rails of a particular operator. No, it's truly interoperable here. You can exchange money within different players in the ecosystem. It is real time, so money moves, at least for the consumer, money moves quickly, and there is confidence when you see the money in your bank account instantly. It's simplistic. It runs on aliases, unlike some of the other players who have a complicated way of identifying customers and pushing money through. It truly operates on the open banking ethos. Like you can download any app from a Google or Apple store and connect it post authentication to any bank account in the country and start transacting. So it's truly interoperable. While others are now drawing rules for open banking, we already have done it here, and we've been doing it since 2017. And it can be integrated with multiple service channels, mobile, internet. We also have USSD because when we launched the solution, smartphone penetration in India was about 16%. Now we are touching 50% mark, but we have a USSD channel that works to drive last mile inclusion, and even in the corners where there is no data connectivity. So that's there. Then we have a very, very tight governance and collaborative engagement model that actually allows participants to drive innovation, create superior user experiences, drive good UX to gain traction, and be closer to the consumer. And above all, finally, we are a very diverse country, and we have a multilingual capability that actually allows consumers from across the country to access the platform in their own preferred language and imbibe on the benefit that it delivers. So I think this is what has happened here, and we are very proud of achieving this in collaboration with the overall ecosystem.
So Ritesh, you have taken UPI beyond India's borders. Can you share with us when you like you put it, a truly interoperable mechanism, when that's taken across the borders, is it easily and seamlessly integrated and adopted in different borders, different countries? What kind of opportunities and challenges do you see there?
So Vishal, we are trying to do 2 things here. One is the consumers that we have here in India who are using UPI powered apps across the ecosystem for P2P and P2M transactions. So we are trying to expand that landscape. So for instance, for P2M, we are trying to create acceptance across the borders of India to ensure that the consumers who are using these apps here with full confidence also get the same user experience when they go overseas. So that's on the P2M side. For P2P, we are looking at forging network to network partnerships so that the cross-border remittances happen the same way the domestic P2P payments happen. So we want to bring in value there for our consumers on the speed, transparency, as well as the financial aspect of it. So that's for expanding the current network. But we're also equally interested in collaborating with the central banks, with the governments, in internationally, to create something like UPI and deliver same level of benefits and drive inclusion there, and help commerce at a grassroots level, rural, urban, different landscapes. So these are things that we are doing on the UPI landscape.
I was about to ask you about commerce at a grassroots level. Good, you touched upon it. So, are we saying it will be possible for businessmen in India to pay for whatever goods and services they import or export to other countries through a UPI network? So, is it going to be possible to use UPI for business transactions as well?
So in the first phase, we are looking at more consumer transactions. But once you establish connectivity, once you put in the rails with the necessary regulatory approvals, sky is the limit. UPI is a robust and scalable platform, and we are demonstrating it with the performance here. So that's what I would like to say here.
So on that note, I would like to ask Kagiso, from a regulator's perspective, Ritesh just mentioned it depends all upon the regulatory approvals. You have seen a real burst of fintech cross borders, and being you are in South Africa, being based in the African region, I would have been the beneficiary of a lot of technology as well. What kind of challenges have you seen when you get cross-border fintech solutions in Africa, and is it really easy or is it really difficult to be able to monitor them from a regulatory perspective? So and I would just like to probably not ask too many questions, but also as a regulator, what would give you sleepless nights because of this?
Sure. Thanks for that question, Vishal. So absolutely, I think in the African context, we have seen the rise of digital platforms that are looking to operate cross-border, and their entire premise is really to solve for financial inclusion. So across many countries in Africa, banking penetration is not that high. And so in order to fill this gap, we have started to see fintechs and, interestingly, also telcos actually look to address that gap in the market. And so as a result of that, we've seen a rise of digital platforms, fintech-based digital platforms. And in South Africa specifically, banking penetration, interestingly enough, is actually high. So customers have a current account that they can store funds in and transfer funds to. But the issue is more around financial deepening. So beyond just having an account to be able to transact on, consumers are underinsured, consumers are not saving enough, and certainly consumers are also not able to access funds, particularly consumers that are non-traditional in nature. And so as a result of that, platforms have come in and looked to fill the gap, which has been very exciting because the fact that they're leveraging non-traditional data to understand customers in ways that traditional financial services providers don't typically engage in, that's meant more have been included. So we've actually been excited by this development. And so we tend to look at this from a two-sided perspective. So on one hand, we obviously look at the benefits and we want to amplify the benefits. So as mentioned before, the financial inclusion through the use of non-traditional data to better understand customers. That's something that's compelling for us, and we certainly want to promote. The extent to which these fintechs are driving personalization through the use of data, so meaning products are better matching customers' needs. That's also something we find quite compelling in many of the propositions we're seeing. And so that's also something we want to drive. And the improvement in convenience. So obviously, because of the digital nature of these distribution channels means you can reach more customers. And then ultimately, the use of data driving affordability. So you can price better, you can price specifically, you can be more targeted. So that's the approach we take on one hand, to look at those benefits and see to what extent can those be amplified. But unfortunately, there's also some concerns, and a lot of them are contextual. So what we've often found is that in some cases, the digital literacy levels are not sufficient to really roll out these products and obtain informed consent from customers. And typically we find that some of the innovators, they're not really undertaking in fit for purpose consumer education that educates their consumers to a level where they can actually meaningfully participate in their platforms. And given the fact that the relationship is often underpinned by the use of data, which evolves as algorithms learn more about you, that is quite a sophisticated and evolving relationship. So if the customer is unsure about how that plays out, that can also lead to problems. So we are concerned about that. Another issue is just around data ethics. So data really being used that could potentially be used to discriminate customers or could lead to decision biases that exclude. So that's another area that we're looking at, particularly black box algorithms, where the fintechs themselves do not understand the algorithms they're running, let alone be able to control them. And the other part is just really around anti-competitive behavior. So once the customer has been acquired, the inability for them to switch or opt out. So various propositions designed to lock in a customer and essentially prevent them from being able to enjoy alternatives. So those are just some of the concerns that we're certainly engaging platforms on in order for those risks to be addressed. And I think one other risk maybe also to touch on is the cross-border nature of these platforms oftentimes means from a regulatory perspective, it's very difficult to hold them accountable if they're not licensed in your jurisdiction. So oftentimes, if we want to enforce or investigate something that's happened, it becomes very difficult to access the data, do a digital audit trail in order to ultimately identify what the issue is. So those are some of the concerns that we're certainly looking to address so that, as mentioned, the benefits that platforms bring to the table can actually be amplified. And then I think Ritesh also touched on another point, which is really around the enablers to some of these platforms scaling. So certainly in the African context, what we're seeing is that smartphone penetration and data penetration are indeed key enablers. And they're not yet, often in some markets, they're not yet at the levels where we really see some of these platforms scaling in the ways that they need to. So oftentimes, where we do see scaling of mobile money, for instance, it's often on a feature phone type environment. And so until device penetration and data penetration, which is driven by affordability around data, is increased, we think there's still ways to go before we can actually see true cross-border scaling in the African context. So those are just some of the themes, Vishal, that I would like to share with the forum.
No, thank you so much for sharing those, Kagi. So if you have to give 2 or 3 pointers about how is it going to be possible to make it safer and in the right context or fit for purpose, as you put it, for fintech solutions to be applied in geographies with the kind of financial literacy or digital literacy that may not be at par with other developed countries in the West, what would be the 2 or 3 things you would ask for, especially from, say, the community which helps in creating more fintech through investments or through creators and like organizations. So for example, if you had to ask something from Suzanne and Ritesh specifically as to what would your asks be from the point of view of creating more financial inclusion but safe finance.
Sure, Vishal. So what we've done is we've created, and I think this is prevalent in many jurisdictions as well, we've created a sandbox facility that allows us to essentially take a closer look at a lot of the innovations that are being proposed. And in that way, then you can get quite granular in interrogating the specific use case in order to surface what some of the risks are and then give specific advice. Because it's quite easy to be generic, but I think what we tend to find with fintechs is the use cases tend to differ and the propositions are very sophisticated. So you actually have to be quite granular in looking at unpacking what the proposition is, how it interfaces with customers, what the customer journey looks like. from that perspective, you're then able to pinpoint. If you're going to educate your customer, given the nature of your customer journey, these are probably the key touch points where you want to inform them of the service you're offering. This is how you sustain that information flow or keep that information loop going. So it's really about, obviously, number one, we want to promote customer education, but it has to be fit for purpose for the customer journey that's there. I think the other thing we tend to engage on is certainly if you are using data, if you are using non-traditional data, what is the data ethical framework that governs how you make decisions off that data? So that's often also very much use case based. So we often look to have conversations around that in order to see ultimately how that data ethical framework shapes customer engagement. So those are the big things that we tend to look at. And then other things, definitely, and Ritesh touched on it as obviously advantages of his platform, but I think issues such as interoperability, issues such as business continuity, if your platform relies on external services providers, to what extent do you have business continuity practices in place should those service providers fail to provide services to you? And then also lastly, just the extent to which customers can opt out. That's also another area we tend to look at when we're engaging with platforms in order to mitigate the risks of anti-competitive practices. And then lastly, just the cross-border, the extent to which should something occur, can one retrieve data on a cross-border basis. So those are typically the themes that we look to unpack. But rather than approaching it generically, we typically like to do it through a sandbox mechanism that then allows us to actually look at the specific data and then based on that, advise the fintech on how they can mitigate those risks so that the benefits, so customers enjoy the benefits of their platform.
So, Susan, in this context, I would like to ask you, do you think it is going to be possible to have across the globe, will it be possible to have a unified platform of sending and receiving payments altogether? And will it ever be possible to solve these issues about digital literacy, about securing payments from a technology perspective, or making sure that these platforms are not used for, say, financing terrorist activities, not used for money laundering, and so on and so forth? And if yes, can you share some insights about how you see this happening at smaller levels, and you believe there is a larger play at possible in the next few years? You seem to be on mute.
Thank you for that question, Vishal. A lot of meat in that question. Or questions. I will start with the regulation here, because everything is based on the rails, and then you need the regulations from the territory or the holding. And here I think the whole world should cooperate together, so we have the same type of standards that we're building on, having cross-border payments or whatever we are working on to it. So from the European side, the harmonization across all the countries that is in Europe has been a tremendous work for payments, for investments, for insurance, for AML, and so forth to it. And if you don't have that regulation in place, it's going to be hard for the AFS and so forth to look into, is this good or isn't it? So that needs to be in place first. And then you can work on that, having all those regulation in place, harmonized across them. And we know India is doing quite a lot in text coming from Europe. Is a hub that the other neighbor countries is looking to have this. So that's a good, and the same is happening eventually in Africa too. We have been working with the African Development Bank, and they also admit that there needs to be some harmonization of regulation in that continent as well, along with the rest of it. And on that sense, US is lagging behind. So in that sense, I think Asia can take a lead together with Europe to make this along with Africa to it. There's a lot that can be done to have financial inclusion and opening up and so forth. And what we see is that the Western society, they have taken it step by step in Southeast Asia in particular, skipping generation. Africa is doing the same, skipping generation. You don't have to go and do all the steps because that's history, and then go to the next one. And we see so much creativity using the smartphone. And I so agree with Kagiso that data is the critical. Make sure it's not hampered, and make sure that you can utilize this in a commercial way, because the data is like gold, and you want to use that in a good way. And then the rural area is probably the biggest challenge, I think. Cities all over the world, they tend to have a fairly good network when it comes to the internet. So in that sense, but the rural area is the challenge, and that goes for the Western society as well, including emerging markets. So there are some infrastructure things that needs to be in place, and then the creativity from the fintech can utilize that, and then go much more faster, and then make sure that we can get real financial inclusion, not only at the account like Kagiso is saying, but the product and services that is beneficial for the account holder to it, and it's fair and square and so forth. And then once you have competition in these spaces, then you take down the cost to the benefit of the consumer or the businesses.
So, Ritesh, if you come back to you and understand how having an API-driven interoperable payment system can be applied across the world, do you think it is also possible to use the same kind of system to be able to improve supply chain financing specifically? And if yes, how? Because everything is related, everything is data-driven. When it is across borders, it is also possible to understand the nature of the payments, the payers, the payees, the frequency and the volume and nature of transactions in that sense. Do you also see supply chain financing becoming easier with the development of such solutions?
Certainly, and that's what some of the fintechs are doing. I mean, if we look at the advent of digital payments, I mean, uh, we have more and more information on the receivable position of merchants. We have more and more information, on their business turnover and things around it. So, and this all can be used to kind of explore lending propositions, and that would actually enable supply kind of chain. And this is what I mean, we're doing this in India, and we are very hopeful that when we go overseas, when we create or collaborate to create UPI like solutions in international markets, I think this is something that will also help in those help those economies drive commerce at grassroots level, because in the developing world there is a lot of entrepreneurial talent at a grassroots level. What they are looking for is market access and an easy way to receive money, right? And if you get something on the ground, then you are opening the doors to development. You're opening the doors to driving parity in income, and you are creating employment opportunities. So a solution like UPI, API driven, driving inclusion can really change the game. And that's what we are looking at when we reach out to partners or prospective partners globally. That's our proposition, that this is not only to drive inclusion, this is also to generate the employment, support fintech incubation, and things around it.
And do you think when we talk about inclusion, is it only about more number of people coming onto a technology network for making payments, or does it also help in improving other parameters of inclusion such as poverty, gender inclusion, and so on and so forth? Can you share some examples? You've actually been at the heart of taking the UPI across Indian borders, and especially in countries where major impact can be done. If there is some story that you could share with us on how you see this really making an impact at a big.
So, I think a platform like UPI can deliver 360-degree, uh, government's agenda, and what a government is interested is in, like, one is financial inclusion we all talk about, and there is also direct citizen welfare that they are looking at. They're also looking at cash displacement. They're also looking at employment generation. A program like UPI can deliver all this, even gender, inclusion and things around it. And I'll give you an example. In my previous assignment in Middle East, I used to see that a lot of women who are, not full-time, business owners, but part-time business owners, they would go to platform like Facebook and Instagram and sell, but they will struggle to collect money. I mean, because there's nothing like UPI there. But here, I mean, if you see, people can, women from their homes can, solicit their products or solutions, whatever they cook, like handicraft or, things like pickle or something. They can retail it on their site, and, through UPI IDs, they can collect money. So that's the power of UPI. And, if you walk in any city or village in India, you see QR code hanging outside. That's, truly, transformational. And that's what, it keeps us, motivated. And that's, I think, the magic that UPI as an ecosystem has created here in India.
I completely agree. I think the hanging QR codes are a testament to be able to use your phone to be able to transact anywhere and not have the risk of any theft. If you're in a remote place or anything of that sort. And I feel this is particularly more relevant in the places where there is a lower level of literacy or lower GDPs in India. So, Kagi, so can you help us understand over the last few years, since the time fintech has its boom, and African region is always a beneficiary of investments and technology, because everyone wants to capture that market because it is so fresh, right? Can you help us understand, apart from just having users use mobile phone for making payments, what is the real impact that a beneficiary region can make from more financial solutions, and not just products, more financial solutions coming from across the border? You're on mute.
Yeah, sorry, just unmuting. So I think, yeah, that's a really great question. So I think the low-hanging fruit has definitely been around payments, but what we're starting to see is use cases that are looking beyond payments. And really, this is to address financial inclusion in a deeper way, because besides just the ability to transact, transfer funds, and store your value, certainly there's other needs that are unaddressed. So what we're starting to see is mobile money apps or super apps starting to come to fruition, where they're really looking to address how you insure the insurance need. Essentially, they're looking to lend on an alternative basis using data, and also they're looking to drive or democratize access to investment, which has typically been really accessed only by sophisticated investors. So that's the solutions that we're starting to see, and they're all really integrated into a platform, either a super app or a mobile money solution. And the telcos actually are at the forefront of this. So typically, for consumers as a hook, what they typically provide is some means to drive e-commerce. And what this then is meant to achieve is that consumers are then meant to keep their funds within the app or the mobile money environment. And then through those transactions, they're then looking to help them insure some of those goods. And then on the merchant side, on the other side of the platform, that's where you start to see supply chain or working capital finance coming to fruition. So they get the data around how what volumes they're doing, what their working capital is looking like, and then based on that data, they're then able to extend solutions, lending solutions to those particular merchants or small and medium enterprises. And this tends to be a gap in the market at the moment. So banks typically don't have the appetite to actually lend to small and medium enterprises and merchants, often because they do not have the financial information to actually lend them. However, because the platforms can actually see the volumes in real time that some of these merchants are actually doing, they're able to then base their lending off of this data. So we're starting to see a lot more use cases coming to be, which is great because ultimately I think it allows us to get a lot more deeper in our efforts to not only address the non-banked but also to address the underbanked. So I think that's what we're starting to see, and I think. From that perspective, we're only going to see more of that innovation coming to be.
Thank you so much for that. I think excellent perspectives being shared. What I take away, is that we've just about begun in using technology when it comes to creating a unified payments kind of a world in that sense, right? And it can only be possible through technology. So while a lot depends on regulators to be able to develop frameworks that allow different countries to interact and make transactions seamless using technology and make faster payments. Faster payments would mean more assurance on trade. It would mean lower costs of transactions, and it would have a very high level of assured level of trade to be carried out. I think the same will also be true from a consumer's perspective. We still see so many consumers, and being in India, who, while appreciating the fact that it is very easy to be able to make payments using your mobile phone for everything that you want to do, right from buying groceries to be able to settle hospital bills, or even make payments to a counterparty for large financial transactions, because it is fast at any point of time, is increasing. But there is always a fear, and that fear is because of the security. So I believe that security regulations go hand in hand with the development of the solutions to be able to create a very secured and faster adaptability. At the same time, I think it is also important for incumbents, the people who are developing these payment solutions and using technology to be able to build financial products, to ensure that there is enough amount of digital and financial literacy amongst people, so that they feel secure themselves. That, I believe, is an investment that the business community needs to make to be able to upskill and bring up the level of literacy with respect to technology and finance, with the people, as common people have to use, especially consumers in that sense. With that, I would just like to summarize, and then with each one, I think as personally, I believe that it is an extremely important turn in our history, because this is where we are at the brink of truly addressing poverty, inclusion, and economic growth. Three very important factors, three very important SDGs in that sense. So from the point of view of helping different companies develop these solutions, I'm taking away some very, very important points, with the commitment to the business world and to regulators that we will ensure that there is a safer and faster, more seamless adoption of financial technology to be used from an inclusion perspective. Ritesh, if you want to share some last words, and then we could go to the rest as well.
Thanks, Vishal. No, I mean, I would like to, close by saying that, with at NPCI International, we are all, set, and we are ready for collaboration internationally to, deliver what we have delivered in India, operating at great scale with the complete interoperability using open source technology, and we are. Very excited about this, and we look forward to repeating this feat in other markets. Thank you.
And Suzanne, from any last few words from you?
Yeah, I think open banking will be a trigger for digitalization going forward. So you can take down cost and, of course, have the rails. And I believe that SME side, which is very underserved, will benefit. And like Ritesh was talking about earlier, once you have the digitalization with the fintechs, you grow the GDP and the economy and so forth to it. Sustainability and financial inclusion goes hand in hand. So I will end with that. Thank you.
Thank you. And Kagiso, any last final words?
Yeah, so from our side, I think as regulators, we certainly welcome many of these financial innovations, so much so that we've realized that the pace at which these innovations are hitting the market has required us to move from being reactive to much more proactive and collaborative. And that's how we then rapidly promote some of the benefits while rapidly also mitigating some of the risks. And this can happen quickly so that we don't end up stifling innovation. So certainly from our perspective, that's the main thesis of how we engage. And we recognize also that it's an ecosystem approach that's required. So there's several players involved. And I think ultimately for us also is making sure that we direct especially from a policy perspective, we direct the financial innovators towards solving and addressing real concerns that consumers and enterprises are facing. Because I think if that is their true north, I think that's where you start to see jurisdictions benefiting, and you see a lot of the leapfrogging that Suzanne was talking about.
I completely agree. And I think this has been a very, very insightful session. Thank you for sharing so many great points, Ritesh, and also personally very proud of UPI in that sense. Thank you, Suzanne, and thank you, Kagiso, for joining this. And I really enjoyed talking to you all. Over to Jivisha.
Thank you so much. Those are some great insights in developing fintech solutions across boundaries. Thank you, Mr. Vishal Nirula from Alvarez and Marcel, for moderating this discussion so well. I would also like to thank our panelists, Mr. Ritesh Shukla, NPCI International Payments Limited, Mr. Kagiso Motibi from Financial Conduct Authority, and Ms. Susan Hannestad from Fintech Mandi for taking time out to join us today. We hope you all enjoyed being a part of the session. We would also like to thank our supported by partners Central Bank of Kenya, institutional partners Reserve Bank Innovation Hub, the World Bank, UNCDF. Ladies and gentlemen, thanks for joining us at Global FinTech Fest. Please stay tuned for the next session. Thank you.
Provide all the infrastructure, all the things Anita mentioned, which is regulation, the operations, the customer service, transaction monitoring, etc., which we have embedded into everything. So we can do this on scale. Very few people can. And so we also view it as it's not a balance sheet business at all. Balance sheets should stay where they are best placed, which is in proper banks, because the banks are generally very good places of safety for balance sheet, same with deposits. We are a deposit taker ourselves, but we don't do it on our own balance. We do it at Bank of England, but we actually use proper balance sheets if we're putting sort of credit type products out there. The reason for that is Barclays and others, and ANZ, for example, my great-great-grandfathers were the founders of ANZ Bank. They've been around for 150, 180 years and have gone through a war, famine, credit crunch, all sorts of things have happened in the world, and they're still here. So banks are, and this is one I think Anita was saying, is Yes Bank. Everybody celebrates Yes Bank. It's a phenomenal bank. And I think we need to work together between, rather than fintechs, I just call them non-bank financial institutions. There's some that there's pure tech companies, that's a different matter. But banks and NBFIs working together to create the ecosystem of safety of deposits, etc. And then massive origination machines, which is what we bring to the table, and compliance on scale, transaction monitoring on scale, and the ability to give a complete turnkey to the brand like Nike or Spotify or others. where they don't have to worry about financial services. They don't have to worry about all these pieces because they're done in the background. And that's our view of what's called embedded finance. We don't, again, we like the word, using it internally either, because fintech, embedded finance, issuer processing, making it sort of like UK faster payments, UPI. I'm a big fan of UPI, and everything. They're all industry words. Consumers don't wake up in the morning and saying, "I'm going to go and buy some banking as a service." Even our customers don't go, "I'm going to go and buy some banking as a service." Our customers wake up and say, "I want to change the lives of people to get them out of the problem of the death spiral of compound interest. And therefore, I'm going to see if I can give a wage advancing in a way that's a fixed price of 75 pence to help the certain people on a certain breadline where they haven't got enough money to the end of the month and they need to have an advancing on that, and not go to the payday lenders." That's what our customers wake. They don't wake up and say, "I need some bank as a service." So if you look at all the way through as a customer, a consumer, where you're delivering the experience to, and then partnering with a customer so they can solve the problem they're looking to do, and don't use the word fintech and don't use the word banking as a service and everything. You focus on outcomes that are achievable and make a difference to people in the world.
Great. I think you brought a very interesting point in terms of how you focus on building the product and the experience for your consumers. And when we talk about customer experience or consumer experience, I think we all probably would agree that it's quite underrated in the ecosystem today. It's so important that you focus on your customer experience. It builds your trust. It builds longevity. It builds stickiness. And when we talk about customer experience, I think there are multiple parts to what drives a good customer experience. There is the infrastructure that a lot of embedded finance companies provide, like APIs and the backend infrastructure for somebody to just plug and play and go live with any kind of a financial product. And then there is the front end or the customer facing side of the whole experience, which you can call as the product or you can call as the interface. So my question is for Shamir, that is embedded finance, since you've been running a company which provides APIs around banking, wallet, and payments, is embedded finance about the backend APIs and infrastructure, or is it more than that? Is it also about fixing the customer experience, the front end, the user interface? How do you see that, and how do you see that evolving?
I think it's about enabling the fixing of the user experience. So we at Scylla, for us, our customers are innovators, developers, fintech, tech startups of every type, really, who are trying to make a better experience for their customers. We call them end users, right? And so our goal is to build the best possible developer experience, serve those developers and innovators, help them build and program with money and ship their apps in a matter of weeks, if not days. And we believe that by enabling the largest amount of innovation and, within reason, the craziest types of innovation, that's how we create the potential for better customer experiences, or I should say better end user experiences. And better end user experiences, I think, are sorely needed, right? I mean, if you 30 years ago, email didn't really exist, the internet really didn't exist. But today, if you're a developer, you can wake up anywhere in the world and you want to embed some email functionality into an app. I mean, it's quick, easy. There's APIs, SDKs, and it's quicker to do it than to talk about it. And really, the hard thing is to compete with Gmail. But most people who are programming with email are not building superhuman or hey, they're just embedding some email flow into an app. Just do it. The moment you come to the world of money, it is completely different, right? Now, suddenly, whether you're in San Francisco or Bangalore matters a lot. There's no APIs or SDKs. You typically end up having to work with banks, and the vast majority of banks just suck at serving developers. And you're talking about an 18-month time frame to build even the simplest functionality, if you can, right? It's still impossible in many parts of the world. So programming with money is completely different than programming with email. And I would argue that it is much easier to compete with Bank of America or State Bank than it is to compete with like Google. But the big problem is it's just super hard to do. Our goal is to make that vastly easier to do, hopefully as trivial as programming with email. And that way, every app out there embeds email functionality, and there's no reason why every every business process couldn't just embed and automate money movement or money storage functionality.
Great, got it. I think that's important that, what you talked about, that technology comes at play where you enable the developers who will then go on and create those customer experiences or end user experiences. And it's about that banks today, and I'll come to Anita on that later, but it's all about that banks are not able to serve developers today, and they don't do a very good job in that. So coming to that entire piece of how you enable developers and you build that entire infrastructure, I think, Revo, I have a question for you. You've been building modules as part of your company, and you've recently rebranded yourself to Toom from Modular Bank. And Toom, essentially, if I understand, also stands for something which is a core, because you are dealing with both retail as well as business banking core modules from a banking perspective. How do you go about, breaking that into smaller chunks? Since I read about that you do a lot of modular structure, you build Lego-like building blocks for making banking as easy as Shamir talked about. How do you do that, and what's been your experience on how that scales, building it like modules?
Absolutely. And hi, everyone. Good afternoon. So my name is Ribo, and I'm one of the co-founders at Toom, which got rebranded from Modular Bank just today, because we are not a bank and we are a next generation API-first core banking suite out there. And I think we need to go also back for a second and think that why the embedded finance or embedded banking even exists as a trend. So that because the reason relies also in the changing consumer needs and expectations. As Nigel correctly pointed out, nobody wakes in the morning with the idea that today I'm going to do some great banking. So that everybody out there, they expect frictionless services and they have aspirations to fulfill. And also the very same concepts applies to the modularity or for the institutions who want to launch those kind of embedded value props over there. So which means that to be able to offer those value propositions, these services need to be frictionless. And when you now, compare the, situation 5-7 years ago with the incumbent core banking and technology suites out there, they were large, monolithic, they weren't operating in real time and so forth, so that you really cannot build up any sort of a frictionless service that consumers would love to use. And that's why also when building out Modular Bank, we enable everybody to pick and choose the relevant capabilities. At first, maybe you want to include some sort of a deferred payment or a buy now, pay later schema into your workflow. Let it be like a telemedicine platform in Africa, so that where people don't have the money or means to pay for the consultations. A seamless generation of installment plan. Later on, you recollect the money via the mobile payment rails. Nobody even thinks that they do the payment over there. Then later on, maybe you even, need to provide the wallets or accounts for the doctors, where those kind of recollections are being dispersed and so forth. So which means that you pick and choose the capabilities that you need, and then you're also able to scale the way your business scales. So that's why it's all about frictionless, both from the consumer perspective and from the perspective of those companies trying to offer those services. And again, it's like impossible to, let's say, not to mention it again, that it's not about banking or anything. It's about helping people and companies out there to fulfill their aspirations.
Great. Thank you so much, Revo, for that. So I think what I'm hearing from everybody, I think it's about enabling the end user's experience. It's about providing them access to a product which they need at that real point of pain point that they have. It's about enabling that through technology. It's about creating the best customer satisfaction. I also understand that most of the embedded finance companies are trying to work in a B2B model with, let's say, a platform or a customer who provides that embedded finance service or a product to their own end consumers or users. So, Nigel, I have a question for you. You work with, I assume, a lot of enterprises and large customers. What stops them from building this or they on their own, or how do they decide on the build versus buy for embedded finance?
True, it's a good question. We are all about building a completely vertically integrated stack from the consumer to the central bank. And that is highly complex, highly regulated, has to be 5 nines up. Reliability has to be incredibly secure, has to be compliant, has to be serviced, and has to, you can't have downtime when you're doing upgrades or anything like that. So you have to be the same way that Google and Facebook, they're really, literally on the call here, we probably have 15 software fixes done by Facebook as we speak. And you've got to be in that sort of mode of operation. And doing that within the context of money, because people get very emotive when they lose money, quite rightly so. A brand, say like Nike, or a brand like McLaren Formula One, that's not their business. And if their business is consumers, their business is maintaining amazing relationships and engagement with their consumers, and ensuring their brand is relevant for the consumer at the point the consumer wants to use them. So I can see, so that's why we don't believe in where it's just a software layer of a bank as a service, people like Synapsify in the US and places, because you have to be a clearer of the currency in general, where they've opened up markets like in UK, Europe, Singapore's opened up, Australia's opened up. US, there's other ways around not having being an MBFI and clearing the currency. You have to go directly from the Visa, MasterCard and other schemes, whether it's Alibaba, WeChat Pay and others, all the way to consumer, and manage the technology piece, the financial operations piece, the risk management piece, the compliance piece, fin crime piece, and all of those. And that's what we believe in embedded finance is really all about. Some of the setup where people in there, so primarily in the US, where you have to have a bank behind you. But what you find is some of the community banks, the 6,000 community banks in the US, they're all fairly subscale banks. And the only reason some of them business is because the fintech boom came along. US regulation doesn't open up. Ergo, you have to work with the fintech vendors. But they don't give a full stack, and full stack is important. So if I was Nike, I'd quite happily build my own tech stack because I could sit on top of Goldman. I think you've seen this very clearly with Apple did it with Goldman to launch the Apple Card. And the Apple credit card is now prevalent in every part of the Apple ecosystem and Apple customer experiences. They have embedded the Apple payment experience into the Apple thing. So, but that thing with Apple and Goldman partnering was because there wasn't it was a totally bespoke. So if you think of suits, you go down Savile Row in London, you get a bespoke suit and it costs you a lot of money, an awful lot of money. Then you go to Marks and Spencer's and it's pret-a-porter off the shelf. And what we believe the next phase, which we're leading, is to be the off-the-shelf infrastructure that can deliver what the Apple credit cards delivered with Goldman and Marcus. But it does show that the importance of regulation, bringing that to the table, and technology and operations, and then letting a brand like Apple, an amazing consumer brand, deal with the consumers, because they know how to market it, how to bring it in. And the important, so it comes down to economics too. In G10 banks, originating a loan is around, the cost is around $250 to $350. And a loan originated, say, through us is a few bucks. And so your whole CAC and LTV numbers for a bank start changing radically.
Yeah.
And a lot of these subscale banks who aren't getting return on equity and the whole economics of how you support a bank, especially low interest rate environments, and your net interest spread squeezing down, are going to be struggling in the next 10 years or so. And so coming and bringing the ecosystem together, the way we can originate in a compliant and everything way, we can put deposits cheaply and originate assets cheaply for the banks and liability and assets, brings an ecosystem together. So vertical stack is important, and if you deliver that, you won't have a brand doing it themselves.
Yeah. No, quite interesting. And I think, Anita, the next question is for you. Nigel raised a very important point that, how companies like them are building the complete stack, and it's not so easy for a brand to build the complete stack because there are a lot of pieces around compliance, around risk management, financial operations. There is money moving around. So data security, everything all else is being taken care by one entity. But the balance sheet, as Nigel also mentioned, that it's best left, the balance sheet part is best left to banks like yours. How do you ensure that when you work with such embedded finance partners, you have the right agility and the flexibility to support them? Because while they would reduce costs and bring you new customers, they would also expect the same agility, the same flexibility that they bring to the customer. How does a bank really look at it, and what kind of changes does a bank have to do to be a front runner? I'm sure I've seen that Yes Bank has done quite a lot of initiatives. You have a developer portal, but how do you keep up to speed with this fast evolving environment as a bank, and especially keeping regulation in mind?
So yes, as a bank, I think it's a continuous journey, and I did hear what Shamir had to say, and I think that one of the things that banks struggle with, is that you would have had different legacy systems brought in at different times. Most banks will have a core banking which we are dependent on, and they may not be API ready. So, and unless you have those stacks modernized, you're really not going to be able to actually offer that service. So, one, we are continuously upgrading ourselves, our applications, our infra, etc., to be able to offer this service. The second is it's not just enough to offer, but to be able to work on it at scale. So if I was just to say, Yes Bank has a 46% market share in UPI. I mean, this is public information, which means that on a monthly basis, we do a 1.3 billion transactions, just UPI. Okay, and I'm not even talking IMPS, I'm not talking the other AEPS, etc. So if I have to be able to have infra to be able to support 1.3 billion, and for all of us in India, when the IPL is on, and when all the sites start advertising at 7:30, and when you see the transactions per second quadruple, I can tell you it is every day is a day. I think why do banks struggle? Because of all it, especially in India. If it takes off, then the volumes, the ability to cater to the volumes and perform consistently, so that the partner is able to then have his end user be happy with the experience, is something that we have to be sure of. There's no point giving an experience that is going to be very inconsistent. So that is sometimes does affect our agility. So we like to be very sure. There's no point just signing up for the sake of it, but performance is critical. I think that's one part. I think the other part is the regulation. You correctly said, Anubhav, data security, data privacy, and more of it is going to come once the personal data protection, law is passed. We also are finally, hold the customers' trust in the brand. As you know, finally, banks are all about trust, and public money. So we have to be much more careful in terms of what we sign up for. Which I do think does impact our agility. So sometimes we are ready with the systems, but we would like to look at the process better. The other piece is which part of embedded finance are you talking about? If you're talking about payments, I think it's today a no-brainer. We can, most of the APIs are ready and everything. But if you're talking about credit, and like correctly Nigel said, that it sits in my balance sheet, and if I have to be able to provide for it or answer the regulator, I would definitely, and especially in today's situation, take a second look and a third look before I would sign up for this. So yes, does it impact my agility? I think when we do the first deal of that type, it does. And that's something that we're continuously looking, and a new set of circulars and a new set of guidelines are constantly coming up on some of these topics from the regulator, and we have to keep up with understanding what is it implying and how does it impact embedded finance, especially on the credit side.
Got it. No, interesting. Quite makes sense. And I think what I understand is that infra development is still important for banks to keep up the tempo, working with embedded finance partners if they have to continue to support through their balance sheet. Especially, you talked about credit payments going at a very fast pace in India, but credit is the next big frontier when it comes to embedded finance, because India is a credit starved country right now, right? Globally, we've seen credit penetration to be very high, but in India, it's still low. And there's a large segment of population which could benefit from embedded finance, especially embedded credit. Moving on, I think since we talked about how a balance sheet player and an embedded finance player can work together, but also looking at the customer side of things, and this question is for both Revo and Shamir. You work with a lot of partners who have a customer facing product where you work with developers, enable developers to create those products. What are the things that an embedded finance company like yours has to build or keep in mind so that your customers can have go to market which is quick, which is easy, and do you need to build support around it on a regular basis? Is it an ongoing journey? Is it a custom solution? Is it a standard API? If you could, just throw some light on that.
Sure. So ultimately, you have to realize that, like for end users, right? The kind of the two most important things in life are health and wealth. If you look at New Year's resolutions every year, the top three resolutions are always about like either improve my health or improve my wealth. Depends on kind of where we are in the economic cycle and there's a pandemic happening. But the and the solution to each of those is very simple, right? Like if you want to get more fit, eat less and exercise more. If you want to get more financially fit, spend less and earn more. But actually doing it is very hard. And in the fitness industry, there's a whole host of tools, capabilities. There's probably, I don't know, 10,000 fitness apps out there on any of the Google or Apple Play stores, and to help you do that better. Financial services, I mean, if you look at it, it's like a 17 trillion annual revenue industry globally. And everybody from PayPal to Scylla, the entire fintech and crypto ecosystem, all of it combined of the last 25 years is maybe 1% market share right now. So 99% of it is still done the traditional way by 30,000 banks and insurers and all of those traditional players think of I think of them as like, they have an accountant mentality where it's like, hey, I have a product and I need to sell it to a customer. And if they don't understand the product, then I have to educate them on how they should use this product, right? If you go to any other sector in technology or anything else, you will find that everybody thinks the customer has a problem and how do I solve that problem, not I have a product and how do I sell it to the customer. And I think that's what we see our customers doing, is working from the end user backwards. And so, as Nigel said very well, right? Like nobody wants to buy a car loan; they want to buy a car.
Correct.
Nobody wants to buy a retirement product. They want the security of being able to retire, and then it's that they're looking for. And you're just a means to an end. Always focus on what that end is, right? Now, I'll be totally honest. Most of the totally cool and crazy innovation is not done by us. It's done by our customers on top of our platform. We're only there to enable it. And the when you think from the customer backwards, you can think very differently. What we focus on is trying to build the capabilities that are truly universal, right? Like this is a heavily regulated industry, right? Like we've decided as a society that money is going to be more regulated than email, which means that the regulators in different parts of the world have different ways in which they impose things like KYC. So we're like, what do we need to do for KYC in the US? So let's build the most standardized, straightforward KYC system that works in the US, just embed it in the API, put as much flexibility around it, and then customers can decide where and how they build it into the app flow, and at what point they collect the social security number and a date of birth, and make it seamless for their business, right? So that KYC capability we build, our customers figure out how to make it cool. Same thing on the payment side, same thing on wallets. And we think of it from a developer first mentality, where it's not like there's an account that we have to sell to a customer, but like there is an entity which could be an individual, could be a business. There are wallets. There could be 1 million wallets or one wallet per end user. You can combine them in any way you want. You can link an account number and build it the way that you think about it, right? So I think, again, going back to it, it's like the innovation needs to come from the end user backwards, and most of it is enabled by the capabilities that we build, but we try to build kind of the core capabilities that are usable across pretty much everything.
Sure.
And maybe to build on top of like the Shamir's set of ideas and so forth, what we see and what we think also is that a lot of this has, let's say, connections with the mindset. So that when you really ask that, what do you need to quickly integrate and roll out those things? So that, and by things I mean the value propositions and services. So that the first one being that you need to let it go, so that the everlasting dilemma buy versus build. If there is already the value proposition partner, that there is a bank who is nimble enough, like offering those APIs, or if there is a, let's say, platform like Rails Bank out there, just trust your partner. You do not need to build it on your own. Secondly, you need to have the business mindset. You need to have the mindset that how do I serve my customer? How do I help to achieve the aspirations of my customer? Because quite often you see that those initiatives are like so IT driven that now I want to have this account or this capability out there. No, this is the way how it shouldn't be. Then also one should let go of the kind of heavily fine-tuning towards the absolute perfection. Rather have the kind of iterative approach. Trust your partner, because it's anyways a highly regulated area, whatever concerns any aspect of the money. So please do trust the partner, launch like in small iterations, improve over time, like come up with the bundles, maybe even let's say that adding certain like insurance factors into the game and so forth over time. But of course, then at the end of the game, like, of course, your IT infrastructure need to be responsive enough so that one, let's say, should have heard something about the APIs, potentially also about the containers and so on. But this is already like the things that how to make it happen. But it all starts with the mindset. Be relevant, do not start to reinvent the bicycle and trust your partner.
Got it. No, makes sense. Absolutely. Great. This was great conversation, and I think just to summarize, I think all of you have focused on the fact that embedded finance is more user driven. What your user wants, what experience they are going after. They're not going after a car loan; they're going after a car, and that's the way to think about it. If you think about it that way, I think embedded finance enables the companies to offer the best products and the best experiences, where companies like Railsbank, companies like Scylla and Toom are creating the enabling layers, which could be part of the solution, which could be the complete end-to-end full stack, and then you have banks at the back end providing what they do best, which is balance sheet and the regulation, taking control of the regulation. I would, before my last question, which is common to everybody, I would take some questions from the audience. So there is a question for Shamir from the audience. This is from Digvijay. He's asking that, you mentioned about the biggest issue in embedding financial services being around not banks not being able to focus around developers. But what is the root cause? Is it the legacy systems of banks which are difficult to change, or is it more the traditional or territorial mindset of people or the bankers who've been part of that ecosystem?
So I think banks are, large in general. There's of course specific exemptions, and I think especially in India things are quite different. There's a lot of amazing innovation happening within banks, but across the world, the banks tend to be large organizations. It's not like there's very few startup banks, right? Most banks pride themselves on their 50, 200-year history. So they tend to be old organizations which are heavily regulated. And the internet is only 25 years old. And so most leaders at these organizations grew up in a pre-internet era, and they are not themselves developers. And even if you look at like modern development and how people build like tech startups these days, as an example, uh, th- that's really just an innovation of the last 10, 15 years, right? Like Scrum methodology, Agile, as like Revo was saying, build in small iterative chunks and ship quickly and get customer feedback, right? That's just not how banks think. And typically you'll find within banks that there is there is the bank, and then there is the technology department of the bank. Right? You look at tech startups or modern companies, and you'll find that everybody is a everybody's a techie, right? Like there is an engineering team, but the whole mentality is around how do you solve a problem with using technology, and that's how the entire company is built. So I think it's not just problem exclusive to banking, right? Like it's true even in insurance, it's true even in wealth management, it's true in pretty much every traditional industry, that the biggest problem is the kind of the shift in mindsets and the shift in ways of working. It's just hard for a large traditional company to do. But then there are also problems that are specific to banking, heavily regulated, which means that you can't just go and completely change everything. You have to take your regulators along with you. They also tend to be have the same mindset and problems. Technology, banks and insurers were among the earliest adopters of technology. Like if you go back and look at the first 10 sales of IBM's mainframes back in the 50s, I think 5 or 6 of it was to insurance companies. But if you adopt the technology of the 60s and you figure out how to scale it, and then it's very difficult in the 2020s to kind of like change all of that, right? And you go and look at a large bank and you're like, hey, I have my legacy mainframe based core, but this thing is processing 1 million transactions a day, very expensively but very reliably. How do I switch it, right? And people have this thing like, hey, you're trying to change change an engine on an aircraft while it's flying. I'm like, honestly, compared to a core banking transformation, I'll prefer the changing the engine on the aircraft. Right? It is probably easier and cheaper than trying to transform a large bank's legacy tech architecture. So
Correct.
even when the spirit is willing, the flesh is weak.
Yeah. I think Nigel has a view on this.
No, it's just saying it's the same as Shumail. I use the changing the wheels on a car while it's driving, and so because we've both known each other for many years and things. But it is on your observations is it's incredibly hard to change when you've got a ton of legacy, and having a ton of legacy is a high risk thing because you're dealing with people's money, and you look at where it's gone terribly wrong with. TSB in the UK when they were bought by from one of the Spanish banks and had to dislodge themselves from Lloyd's. It was a bit of a problem. Another observation is anybody who has a chief digital officer has lost the game already because Facebook doesn't have a chief digital officer, neither does Google, neither does, I don't think Ping An does, or and a lot of the big tech companies, because that means your DNA is not digital, and it's incredibly hard to compete if your DNA, for example, let's use the Indian cricket team, world-class cricket team, okay? if your DNA is, for example, American football, you're never going to compete with Indian cricket in any way or form at all. And so the Americans can't play cricket. So why compete if it's going to compete on a different basis? So there's a massive change in the structure of the financial services industry that's started and ongoing by the sort of Fintech movement, but it's another 20-year trend here. And part of that is in 20 years we think thing will be pure digital and finance and things, and some of the learnings on there will be transformation projects that actually transform to digital rather than transform to PDF files, which is what happened. And the credit crunch showed it up, and we've got a great digital process. Yeah, but you print out a PDF file and then go to the branch to sign it with Barclays. So, and that journey has really only scratched the surface. Really scratched the surface. I think what we've got to do is work together as new finance and traditional finance to all get an industry that works together. Because they did it in the music industry, where Apple launched the iTunes. I mean, the iTunes was technology that's years old, called an MP3 file. But what they did, they said it was 99 cents. And that means you could create your own albums and stuff, and instead of paying $30 for like 10, 20 horrible songs just for one song, you suddenly had the choice of, I want that one. I don't care all the other stuff they think. I can assemble it into what I want. And what had happened was the change of the role of the record label in the music industry to be more custodians of the catalogue rather than the custodians of the artist. And connecting the artists with the fan base. So we see the same thing in parallel in the financial services industry. Is banks are still playing a role, but it'll be a different role, and to be an equally as important role, because the music industry was pretty much on its knees. You look at banking, and you look at what the share prices should be and what the share prices actually are. It is on its knees. But if we can all work together, we can get the bank industry in the right place, we can get the consumer in the right place, and we get a new way of doing things. So we Spotify the financial services industry, essentially. And it's going to be a long project, and I think we should work on it together. I remember giving counsel to Tarvit and Krista. It's actually Krista at TransferWise, because I met them first when they were just a PowerPoint deck. And said, stop telling the banks they're rubbish and stuff, because what they'll do is they'll cut you off. If you cut off, you don't have a business. Okay, work with them. Okay, and so I think I think everybody now has realised there's a way forward. I think banks have started to understand what digital is, and that's a 10 to 20 year process. And in 20 years, they won't have chief digital officers, they'll have chief something else officers. And we'll have something else that's changing the world.
Yeah, no, makes sense. Absolutely. Thanks, Nigel. Thanks, everyone. In fact, we've just run out of time.
Apologies.
Just a quick summary. I think we've all been equivocal that financial services have been the broken ecosystem that now is coming to life in the form of embedded finance. It's very clear that a customer will go to an e-commerce website to buy something, not to get a loan. He'll walk into a car dealer to buy a car. He'll not go to a bank for a car loan first. And that's where the experience has to be created for this customer. I'm not going to apply for a travel insurance if I have to travel to the US. I'll first book a flight, and it's for the travel aggregator to provide me an insurance right there and solve my need and improve my experience. So I think financial services would be everywhere. This is the future, and embedded finance definitely is about bringing together the end customer experience, the product created keeping that customer in mind, and the regulated entities, whether it's a bank or an insurer or any other balance sheet provider, together. And I think that's coming together now. So thank you so much, everyone. It was great to learn from your experiences.
Thank
Over
you
to
for
you,
having
Shweta.
us.
Thank you.
Thank you, Mr. Jain. Thank you, everyone, for joining us today and sparing your valuable time with us. I would also like to thank our audience for joining us, and we please stay tuned for other exciting session. We are signing off. Thank you so much.
Which are a part of Internet and Mobile Association of India. The fest is presented by the National Payments Corporation of India, Ministry of Electronics and Information Technology, Government of India, Reserve Bank of India, and supported by Niti Aayog, Startup India, and Invest India. We would like to welcome you all for a fireside chat on driving inclusion through impact-driven fintech investments. Please join me in welcoming our distinguished panelists, Ms. Sweta Agarwal, Global Investment Advisor at Flourish Ventures, and Ms. Pia Roman Tayag, Director, Office of the UNSGSA. A very warm welcome to you both. Over to you, Ms. Agarwal.
Thank you so much. Good evening, good afternoon, and good morning to our audience from across the globe. I'm Smita Agarwal, and it's my absolute delight to be here today with Pia. Welcome, Pia, to Global Fintech Fest 2021. In your present role at the Office of the United Nations Secretary General's Special Advocate for Financial Inclusion, you are at the epicenter of influencing and pursuing the financial inclusion agenda across developing countries. Thank you so much for joining us today from New York.
Thank you so much for inviting. First of all, to all the organizers, I'm really pleased to be here and really excited for this conversation, Smita. Thank you for inviting.
So, Pia, as we all know, this has been a very challenging 18 months across the world. While we are all aware of the pandemic as a massive public health crisis and the debilitating effect it has had on human lives, I think an equally devastating impact has been on the economic one. The loss of jobs and income for many, such as the gig workers, for example, has been really, really drastic. Lack of savings to tide over the crisis has pushed many households over the edge. On the other hand, the crisis has actually pushed innovation and digitization to unprecedented levels. Fintech, as I would say, has been the biggest beneficiary of the pandemic. There has been a multiplier effect through global capital flowing into fintech startups. But if we kind of move out of all of this euphoria, what would you say has been the lasting impact of COVID, particularly for the vulnerable and the underserved? Would you say there is a silver lining amidst all this gloom for them?
Yeah, Smita, I think you said it in your remarks. I think the biggest impact would be really two things: the reversal of economic gains and really the further broadening of inequalities. The pandemic has pushed millions, as we know, into poverty, leaving them even more vulnerable for any future shocks. The UN Women, for example, estimated that 47 million more women and girls, have been pushed below poverty, reversing decades of progress. The World Bank estimates that the pandemic has erased at least 3 years of per capita income gains in about two-thirds of emerging markets and developing economies. So that reversal is really what we will need to recover from. We also saw more
Really staggering numbers, 47 million women
women and girls, exactly.
who
And
were
imagine,
already very, to a large extent excluded, more than the men. Uh,
exactly. And if you see we erased 3 years of progress in increased per capita income. It's really much that needs to be done. We also saw clearly the stark inequalities and the widening divides. As you said, MSMEs having to difficulty to stay afloat initially due to lockdowns, informal firms not having access to capital buffers or credit. Women who are more likely to lose their jobs estimates is that they're 19% more at risk than men. Inequalities are even evident in the recovery. The World Bank estimates that 90% of advanced economies are expected to go back to pre-pandemic levels by 2022, but only about one-third of emerging and developing economies are expected to do so. So this broadening of inequality. So these two things, Smita, I think is really what we need to focus our attention on. But as you said, some people have said the silver lining, as we hear, is the acceleration of digitization. We did witness the power and benefits of digital financial services, and especially having the rails to deliver them. The countries that invested in these digital public goods, of course, we look to India as one of the leaders here. Digital IDs, interoperable payment systems, connectivity, they have been better able to efficiently roll out social payments, for example, quickly target and add and expand beneficiary lists and roll the programs out. The returns on these investments will be lasting. A McKinsey study estimated that the potential economic gain from having digital financial infrastructure is actually 20% greater now than it was before the pandemic. And they also found how such infrastructure indeed provided support to SMEs and individuals. So these are gains that would surely have long-term benefits beyond the pandemic. Which I guess brings me to another silver lining. So apart from digitization, I would like to find, the silver linings here is that really there is now broader recognition of what needs to be done to build
right.
resilience. People no longer need to be convinced. We don't need to advocate for this too much. And we hope that this leads to more collaboration and more action.
That's so true what you're saying. And I think that, the numbers that you shared are really staggering, especially for developing countries. Like in India itself, which has been the front runner of the digital infrastructure that has been created. The uptake of digitization, digital payments, collection of road tolls, all of that has been, massively increased. And I think India benefited by doing a one-click transfer directly into the accounts, into the bank accounts of the poor. I think one of the biggest social benefit transfer programs was carried out by India during the
Mm-hmm.
pandemic. So
Indeed.
yes, this is a direct proof. But the main point that you talked about is the income generating capacity, and the how can all of this digital infrastructure lead to less inequality. And
Mm-hmm.
one of the whole notion about how do you define inequality or better inclusion is financial health. And that's a term that now many people use it very widely. However, I'm not sure if different people have the same understanding of what financial health means. Some people say financial health means being debt free. Others understand it to mean that you can pay all your bills on time. I know you have recently come out with a report where you have come up with a definition of financial health.
Mm-hmm.
We'd be, I'd be intrigued to know from you as to how would you define financial health and why is that important?
I'm so happy that you asked that question, Smita, after discussing, all of this digitization that is happening around us. Because we know that all of this, all of the innovation, all of these new products and services should exist, and to what end, right? For what? We're including people in the financial system, we're including people in the digital economy. To what end? We really want to make sure that these are products and services that result in a positive impact in their lives, that they become truly financially healthy. And so it is an outcome that we want, beyond just payments or digital transactions. We want them to be able to build buffers and be able to take advantage of economic opportunities when they are there, to be able to become resilient. And so it is in this exact motivation that Her Majesty, Queen Maxima of the Netherlands, as UNSGSA, as you know, our office supports her in this advocacy. She is the leading voice on financial inclusion advocacy at the global and country level. She convened a working group on financial health late last year because she has always said financial inclusion is not the end in itself. It is the access to finance that should lead to positive outcomes. And we see financial health as one of these key outcomes. And so to get to that objective and to get to the, seeing that vision, we first need to define it. And you said we have several, related different definitions for financial well-being. We heard financial fitness, financial citizenship. So the working group arrived at one definition that takes from what is existing and encompasses what we want to achieve. So simply put, its financial health or well-being is the extent to which a person or family can smoothly manage their current financial obligations and have confidence in their financial future. And this definition has four elements, if you will see. It's the ability to manage day to day, to be resilient against shocks or emergencies, to plan and meet for future goals, and finally, to feel confident and secure. So that's a more subjective part. You feel confident. And it's just so important because financial health is key to quality of life. It underlies many aspects of our daily life. If we're able to buy food, if we're able to pay our rent. And we know that the lack of financial health has actually detrimental effects to physical health. There's some evidence that employees with high financial stress are four times more likely to suffer from fatigue, headache, depression, and other ailments. It affects productivity. In the US, one in three employees report that financial issues distract them from their work. It increases their absences and decreases job morale. And of course, as policymakers, it's important because it is linked to other policy objectives, financial stability. I mean, I think more research needs to be done, but it's quite intuitive. A build up of financially unhealthy customers would have an impact on financial stability, consumer protection, and of course, financial inclusion. So it's so important that we understand how crucial pursuing financial health is and adopting that financial health perspective, and also to understand why it's important, have a definition on what it is, because that's really the only way for us to be able to rally action.
Right. This is really, really very comprehensive the way you've put it across. I know that the initial focus way back was really around access to financial services. The focus then moved on to usage. As you rightly said, financial services are just an ends to a means. Are a means to an end, and the end
Mm-hmm.
being the outcome for the customer, for the
Mm-hmm.
consumer, and the well-being of the consumer. And what you've now defined as the financial health is a really comprehensive way of looking at it, and not piecemeal that, hey, I have provided a bank account and that's
Exactly.
and there's a check mark against it. And so when you talk about, there's a core component of what you mentioned in financial health was resilience, ability to manage your current day-to-day life, as well as having the confidence to manage your future. In most developing countries, the credit has been used as a very commonly used tool for managing financial cash flows. Most countries have low credit GDP ratio, but there exists a very large informal credit
Informal.
ecosystem comprising money lenders, friends and family, I would think that one of the biggest innovations of fintech has been increasing the eligibility for credit through use of alternative data, especially for first-time borrowers with no credit bureau score. And now we are seeing a lot of variants of credit products, for example, buy now, pay later, P2P lending, and much more. In your report on financial health, you talk about responsible lending. And so, what would constitute responsible lending, and what's in it for the lenders to follow it?
Yeah, no, that's an excellent question, Asmita. As you pointed out, this is a very, real issue, especially in actually across the globe, no, but increasingly in the developing world, where we are seeing a lot more of this type of lending to previously unserved markets because of just the innovation and the availability of information that can now sort of, provide credit to this market. And responsible lending is key here because it really will see if you're developing that trust and you're really developing the products that these customers need. And so simply put, I would say it's delivering a suitable product to your customer in a fair and transparent manner. And when I say suitable, it should be designed and delivered to your needs and capacity. With, are you able to pay the loan with frequent repayments? Or is your economic activity actually more appropriate for more spaced out amortizations? Are fintech solutions able to adjust to that? Did the person have choices? And were the information clear enough for her to make him or her to make decisions? A lot of this are delivered through digital channels. Are you able to actually thresh out the important information to make good decisions? Does she or he really need credit at that point? Sometimes because it's available, the nudge is there that you can take out the loan. Of course, it's easy to say yes. We can always find a way to spend the money. But sometimes that's not the financial product that you need. And, what's in it for the lenders? I think it's quite simple. Your customer will be a good customer if you are a responsible lender. And there's evidence to this. Customers who think their financial institution supports their financial health are 3 times more likely to recommend your institution, 2 times more likely to continue your relationship, and 5 times, and this is important, 5 times more likely to express interest in buying other products from your institution. So opportunities of cross-selling, opportunities of availing of other products and services. There is a business case for sure, but then also the social and economic value that you are giving to your customers is primary.
Yeah, that's a really powerful business case that you've outlined.
Exactly. And I don't know, Smita, if you will let me ask you.
Sure,
Because,
sure. Yeah, this is meant to be a conversation. Yes.
yeah, no, I mean, it's just so important that fintechs and financial service providers see this as a business case. And, you have a good vantage point in looking at fintech startups in your investment role. Do you see already some examples of fintechs that, are adopting this financial health lens?
Yeah, thank you for asking that, Pia. In our experience, we have found that most of the low income households actually face the challenge of cash flow gaps. What I mean by that is they usually have irregular income from various sources, unlike a salaried white collar employee who will get an almost certain income flow coming in every month from their employer. So they usually have a lot of irregular income at in different times. And apart from that, they also face unexpected or bunched up expenses. So the biggest challenge the households face is how to bridge cash flow gaps and what to do with short-term cash flow surpluses. Like there are lots of fintechs who are focused on financial health related outcomes for their customers. KaleidoFin in India is an example of a fintech startup focused on improving financial health. Another example would be the insurtech companies such as Power in India again, from which is an example where resilience in rural households is being built by making insurance available and more effective for the households. So I'm glad you're absolutely right. The focus on financial health around all of these dimensions. If more fintech startups can actually build their trust with their consumers through promoting financial health, it will also actually add to their business case.
That's great to hear, and I love that you started with sort of the understanding of the need, right? It's smoothening of cash flow, and so now what is the appropriate product for that? And I think that's where we really have that lens of designing for what the customers really need. And I think what would be good is if these companies really measure progress and see, and so that they can develop other products and also see if they're really doing good for their customers. So great, thanks for sharing that, and really looking at this space very very excited to see what comes out of all of these innovations.
Absolutely. And I would say regulators and policymakers are a very, very important stakeholder in driving financial health for everyone. You yourself have spent 18 years at the central bank in Philippines and are deeply familiar with the approach and the working of central banks. What could central banks do to improve financial health of the consumers? And more importantly, what could they do to drive the message throughout the entire financial ecosystem?
Yeah, no, that's a great point. In fact, in the policy note that the Her Majesty's working group came out with, we have some very clear asks of policymakers and financial sector regulators. There are five. So one is really make financial health a core purpose of financial sector policy. Second is use financial health as a lens for financial sector oversight. So maybe through consumer protection, seeing how the behavior of your financial, the supervised institutions are. Third, foster a financial health ecosystem by engaging with the private sector and other players. I think these are three asks, and there are two that I would actually put on top. One is measure, and the second is develop a research agenda. And the reason why I put this on top is, as policymakers, we first have to understand, how does financial health affect our other existing policy objectives? Financial stability. What is the link? And really, what are the implications of having good or bad financial health of the population to the financial system? And this evidence will inform us how to do the other three actions and what we could do. And I think as central banks and as regulators, we could really enable and signal to the industry the importance of financial health that looks out, a financial system that looks out for the financial health of their markets. Central banks and regulators, particularly in countries with national financial inclusion strategies, for example, can collaborate with other policymakers. There's really a role for everyone, including investors, Smita.
Yes.
And I want to highlight that there's an important stakeholder, the ones who provide capital, the investors. In your role as VC investor, what is it that you look for before you make an investment? And I guess this will be beneficial for all the fintech startups that we're hoping for an opportunity.
Yeah, so really, as an early stage impact investor, our role is to back innovation that has the potential to create large scale impact. So I would really boil it down to three key things that we would look at. So the first thing I would look at is, who is your target customer and what is the problem or the pain point you're trying to solve? For example, there are large pockets of underserved customers who are economically vibrant but ignored by the formal economy. Small merchants, for example, they face a lot of barriers to growth that could be solved through the fintech innovation. Second thing would be to see how innovative is your solution to address that problem. Do you have a win-win solution that benefits all stakeholders? For example, let me see, Tani Hub in Indonesia, they have a commerce, logistics, and finance platform for fresh produce, which benefits the farmers that are producing it as well as the end consumers that are buying it. And that is what I mean by a win-win solution that benefits all the stakeholders. And then the third thing would really be to see how large is your target addressable market that you're trying to serve. Can this model scale and can it become sustainable? Because impact will only get created when it scales, when it reaches millions of people. And therefore you have to make it scalable and sustainable. I think those would be the three top things to see whether this is an innovative idea that can actually has the potential to become big. And that's really what investors are looking for. an idea that is innovative, that solves a real problem, and has the potential to become really big.
No, that's great. Thanks for sharing that. I think the win-win is key, right? Because, if
Yes.
you're supporting segments that are actually drivers of growth and development, farmers, merchants, MSMEs, then that's really not just for those clients, but really for the economy as a whole as well. So that's great. Thanks for sharing that, Smita.
And Pia, you mentioned about measuring, and I think you're absolutely right. Across, if you measure something, it gets tracked. If it gets tracked, it gets done. So, as you pursue this agenda of improving financial health for all, what does success look like? What would be your short term or medium term goals towards this mission? And more importantly, can we expect to see a global cross country benchmark to measure progress around financial health? We are all familiar with Findex and how what a tremendous impact Findex had in measuring financial inclusion. So, what would success look like for you?
That's a great question, Smita, because, again, Her Majesty, as UNSGSA, has been an avid supporter of having data and evidence to drive policy action and private sector action. And you rightly pointed out to the Findex. And what the vision is really to have this also, global set of indicators that we could have for financial health, that we could compare across countries, benchmark, and find ways to, if we are monitoring progress. I think measurement is the first step. So we could, really see what are the interventions that are needed. We have it for Findex, right? I mean, a lot of countries use it in their strategies to see how they are improving. So we want the same for financial health. Of course, there will be a lot of unique country contexts, but there may be some general, comparable indicators that we could develop. So that is success in the, I guess, short and medium term. The ultimate success we'll see, is really improvement in the levels of financial health. For the information we have now, if we look at just one aspect, which is resilience, Findex will show that nearly half of adults, could not come up with a moderate lump sum if faced with an emergency. Can you imagine? It's a global issue. And even the OECD survey, which includes OECD countries, half of the respondents agreed with the statement, I have no money left at the end of each month. And so this is a universal issue, and we really want to make sure that we move the needle on this. And the first step would really be measurement. And I think the second would be developing a core group of champions, both in the public and the private sector.
Absolutely. And I think you mentioned about private sector, and that's really where a large part of the innovation focus and the entrepreneurial spirit is getting demonstrated. When we talk about resilience, when we talk about fintech, we talk about financial services, a disproportionate amount of focus and capital flow is on payments and then credit. But in your conversation, we all realize that there are many other tools and products that need to be built out in order to provide that comprehensive financial health. So, what would your ask be of the fintech innovators and startups and the private sector? What would you like them to do more of, or
Yeah, no, thanks for that question. I think really, we're seeing so much innovation and, and a lot of exciting new developments. And I think what, I would love to see is really innovations that help people become more resilient, more able to invest in their economic opportunities, to really go beyond just transactions, the number of payments, to really other products such as savings, credit, insurance. Innovations that truly understand people's needs, life stages, preferences. Help give them tools to manage their businesses. Innovations that address barriers that were seemingly unsurmountable, cost, proximity, literacy. I guess just really find those innovations that close the divides, rural urban divides, gender gaps, digital divides, among others. So that would really be my hope. And I think the call would be, to seize this opportunity. I mean, the pandemic as you said, the silver lining, what are we learning from it? There is so much momentum to seize this opportunity to make a positive impact in the people's lives and to focus on segments that may be underserved but yet have the biggest potential to drive broad-based growth. You said it yourself, Smita. MSMEs, farmers, women. And these are key segments that if we support, we really build everyone up, and really towards broad-based growth. And so together, we could really work together, policymakers, innovators, investors, advocates like Her Majesty SU and SGSA. Let us work together toward a more resilient and inclusive future for everyone. That's the dream, Smita.
Yes,
And that,
actually, as you rightly said, one of the benefits of the pandemic has been that you don't need to convince anybody anymore. For example, the digitization of MSMEs, the biggest resistance was coming from them themselves,
exactly.
pre-pandemic. And that has completely changed. And you find the small merchants, the MSMEs, they are getting hooked on to different apps and tools that are actually making their lives better in sourcing their things, in getting better orders from their customers, in managing their cash flows, in managing, payments, moving from cash to digital. So there's a whole lot of things that they are trying out, which probably would have been very difficult to convince them of doing before the
Exactly.
pandemic.
Even
But
in
what is
government too,
important is
no?
to design more and more suitable products for them so that it actually helps them grow and helps them to improve that, financial crisis, if you will, that they constantly seeing. Especially working capital is a really, really big need and a big hurdle for them in their growth journey. So absolutely, you're right. I mean, there's just a lot of tools that could be possible to be given to them. It's just the right intention of winning their trust by giving them the right product.
Exactly, exactly. The momentum is there, Smita. I think we could look forward to seeing more of these really contribute to inclusive and resilient growth.
Before we end, I do want to ask you, in terms of, you talked about the divide between the developed countries and the developing countries. Even post pandemic, the developing countries are more at risk in terms of recovery.
Mm-hmm.
And so the task ahead continues to be still very challenging to kind of make up for the lost ground, many of the developing countries, including India, in terms of our GDP per capita, our income per capita, those numbers. Even on one hand, there's a huge amount of digitization that we have seen, but income levels at the end of the day have to rise. That is the
Exactly.
crux of the matter, and that's true for most other countries as well, in Asia in particular. So, how are you thinking about the, concerted efforts around developing countries to accelerate this process, to make it much more achievable, more tangible? Any thoughts on how, from the UNSGA's efforts and from all your partner efforts of the reference groups that you work with? Uh,
Mm-hmm.
any ideas and thoughts you would have on how to
Yeah.
accelerate this
I,
process?
I think it's really, looking at economic opportunities within the MSME sector, which is really the biggest employer in a lot of these developing economies, within the agriculture sector, the value chains and ecosystems that they participate in. There's so much opportunity in digitizing this ecosystem so that we could better support these really foundations of economic and broad-based growth. So I think that's where we should really be focusing our attention, because this is where it could have most impact. And I think I would also have to emphasize the need for them to be resilient. So these are also the entities that are very much climate vulnerable. And so what is the support that we need that could make sure that they grow and develop, but at the same time also become more climate resilient, and be able to support the economy and employment. So I think that would be where we would really want to have a focus.
Thank you so much, Pia. This has been a very, very interesting and an enlightening conversation, I'm sure. a lot of people
For
around
me too.
and
Thank
in the
you.
audience have picked up great ideas and, more importantly, feel driven and convinced about the business case of building and caring about the financial health for your consumers. It's been a
Thank
delight
you.
talking to you.
Likewise, Smita. Thank you so much again.
Thank you so much, Ms. Agarwal and Ms. Tayag, for such an engaging and insightful discussion on driving inclusion through impact-driven fintech investments. We are grateful to you both for joining us today. We would like to thank our powered by partner Razorpay, brought to you by partners Amazon Pay and WhatsApp, in association with partners Google Pay and Open Financial Technologies, and our digital payments partner Cashfree. Ladies and gentlemen, thanks for joining in at Global FinTech Fest.